Shades. Dude, you dropped off yesterday. I didn't know if you like rage quit or you all right, dude? Yeah, that's why I Yeah, okay. All right. I was looking for you all day, man. I was making sure you were okay. I know, man. I've done it 100 times, dude. That's why I watch the volume and I switched over to the ES about a week ago when I blew up. I blew up like Friday and like did like 3 resets and I decided to start yeah, I know. I've done it, man. You're not alone. But that's why I switch back and forth to the ES and NQ based off price action. And I've been on the NQ or the ES the last few days. If the NQ gets real slow, I'll give it a shot, but I've been staying on the ES. And that's what, when I lost that last XFA, the funded account, when I lost that one, um I lost it on the NQ getting chopped up because like I'd go in and it hit my stop before I could do anything because it was moving 10, 15 points at a time in a blink of an eye. And that's why I lost that account. Yeah. But it has to be really slow. There's times where it's really slow. You just got to pick your volume times. But I'm moving back to the ES and I'll watch the NQ. And if it gets I'll show you as I go throughout the day because I got the Dom. You see, I watch the Dom and I watch the Dom jump around. And if the Dom is jumping around too much, you can't do either one. But you see, that's why I put the volume range to where the trade box goes gray if it's over or under because it's too erratic. So there's a lot in it there. So that's But dude, I believe me, man. I know. I looked. I knew you must have. When your chart froze, that's the worst. I'm like, oh man. Yeah, it's like, yeah, I know that. But that's what happens in the open when everyone jumps in at one time. The system can't handle it. Yeah, I know, man. I've done it more times. You've watched me do it I know. But we just can't trade during the open. You got to like be in way before the open and then have stops set up. Take profit and stops if you're going to do that. I mean, it's fun to do. It's fun to talk about and do, but not, the worst thing that can happen is win once or twice and then you think you can do it all the time. All right. Are you better today? Maybe you ought to get a notebook and start writing these rules down. Like no trading but it's so tempting, man. You know what I'm saying? Okay, cool. It's so tempting to want to get into it because you feel like you're missing out on all that action. I know, man. I've spent thousands of dollars in resets doing exactly that. Minis on the ES. Yeah. That's what I like like I didn't even really work the NQ at all until you and I started hanging out when I set up the mic and stuff. And then I tried to really start figuring out the NQ. And what I figured out is it has to be a very calm, it has to be calm, steady volume, and can't, the price action on the NQ can't jump more than 1 or 2 points at a time, or else you're just going to get chopped to hell on a margin account. Now if we had huge cash accounts with like two, three, 400,000 in them, then you can play that way. You know what I'm saying? Because you can let it run and just get out when it comes back to green. But you just can't do it with what we're trying to do. I agree. Yeah, we'll work the ES today, brother. Let me get set up because we got news coming at 8:30. Let me get this on. Um, I think we got jobless claims at 8:30 or something. I was looking at it a minute ago. Let me get this up and I'll go check. Let's see. We're at 6 here. 6 here. So are you still in the positive on the one you're working now for the for your eval? Uh, all right, we'll work on it today, man. I've been pretty steady the last 3, 4 days. Since I blew up on Friday, I've been pretty. Okay, good. All right. All right, so there's the ES. I can move the new, I can move everything to the ES and make this our primary from now on. Let's do that. I'll bring the news rate up and everything. We'll make this our primary, and then we'll only watch the NQ when I think the volume is okay to consider a trade, because you'll get more movement on the NQ. But it has to be, oh, okay, I got to do this. And I'm up 4 grand on this practice account. There. How's that? Okay, so initial jobless claims at 8:30 US durable goods. Well, I'm almost halfway there. Yeah, let's just try and get it, man. Let's follow all the rules and let's just try and get one. I mean, it's fun to piss around, but then it creates, what happens is when you break one rule, then you start breaking them all, and it spirals. I spiral out of control, and I'm like, no rules matter. Fuck this. I'm getting it all today. And then I do 3 resets, and I'm like, this is stupid. What am I even doing? Friday was a bad day. It's like I don't want to have to go through that again. I don't want to do it like that again. So okay, so 8:30. So let me get our news on. Okay. All right, how's that look, brother? So I'm gonna do, depending on volume, I either do 2 or 3 contracts on the ES. Okay. All right, I gotta turn the prop firm account on. I'm copy trading 2 of them right now. So 2-1 is the main, 2-1, and then. See, I really just got to get some payouts going so I can, I want to use the payouts to pay the real programmer because it's going to be real expensive, dude. It's like a lot of money. And I don't want to take our regular money to pay for that. I want to use the prop firm money to pay to finish the program. So I gotta quit. I pretty much have it. It's like I don't really have to do any more experimenting or changing. I pretty much have it. So I just gotta focus on it, work around the bugs, and just make it happen from here on out. All right, just trade copier. I got to reset the trade copier. All right, work on the NQ. Did you take any trades this morning, or are you just getting on? I've been getting pretty better at calling out the trades and reading the chart during the day. Okay, so let's. Price markers. We'll just leave it like that. There. Accidentally hit short for 3 positions. Not a good start. Oh, yeah, I know, man. It seems like when one thing goes bad, it just like everything starts to fall out. I know. Okay, so we're ready. We're ready. All right, 8:30, 2 minutes to the news. 2 minutes to the news. So we got the VWAP right below and a lot of resistance up above. All right, I'm building up the. All right, I'm building the NQ chart now. So 1 minute, 1 minute till the news. Here's the countdown. Okay, so what do we got for news? Okay, jobless claims went down. Senior aides across Trump admin holding high-level meetings over China curbs on rare earth critical to huge use. Deep concern about impact, no easy answers. $2.2 thousand. I'm sorry, 222,000. Looks like it didn't really have a big effect. There's nothing really happening. Looks like a nothing burger. Not U.S. durable goods actual 9.2%, and the forecast was 2%. That's got to be good. That means we're ramping up production in the country, maybe. Starting to get a pop now. All right, let me build up this NQ chart here. It's not really a lot I got to do. Yeah. Interesting. We got that gap to fill overnight, though. We had that huge gap up. Okay. All right. This is good. This is about as good as no more lines I can draw on the NQ here. See, I don't have enough room to show the DOM on the screen because I watch the DOM and manage the trade from the super DOM. You know what I'm saying? I can show you if you want. Maybe it might help you to have the super DOM. Or it might get in your way. I don't know. I don't know. See, I started on the super DOM and I didn't really play with the chart trader until recently. Okay, so let's see here. So jobless claims came in above expected. U.S. ex defense register above expectations. The 4-week average of jobless claims declined. I think overall this is probably pretty good news. right. Hmm. You all set up, Shades? Nothing? Okay. Okay. Yeah. Yeah, be chill for a second. Maybe reset your router, take some time, and then hop back on because I see there's nothing really there's no trade. So, all right. Hold on for a second. Let me walk through. That's at 8. That's already over. All right. All right. The news is in. We got existing home sales at 10 o'clock we got to watch for. So we got news again at 10 o'clock. So we got to watch for that. So let me get off this. So in the morning, I'm only going to trade in the morning during the cross. You see the cross here, the EMA cross? If I see a nice juicy EMA cross I can front load and play into, I'll take that trade when the box is gray. For like one contract. And then see where we go and see I would have been stopped out. I probably would have got out up in here somewhere. But that was at like, 8 o'clock. I'm just not ready by then. So now there's pretty much no trades until like after the news drops at 10 o'clock. So we're probably looking at 10:30 or 11 o'clock before we can start hunting entries. You know what I'm saying? So it's going to be pretty boring. Because I'm looking at, are you there, dude? You're not breaking stuff, are you? Put the baseball bat down. All right, let me know when you're back, and I'll go over what we're going to try and do today. Oh, can you guys hear this? All right.
Metal products do come up. Interestingly, though, computers and computer equipment, they fall 2.9% orders there. So there were some areas in which people are already starting to cut back. This is maybe the first hard data we can say that starts to match up with what we have seen out there in the markets.
Interesting. Mike, keep us on top of things. Mike McKee there on the latest economic data. Let's turn back to the trade story. China and the latest there, demanding the US to revoke all unilateral tariffs and denying any talks on a trade deal. Joining us now to discuss is a veteran economist, financial regulator, Jose Vinaz, the chairman of Standard Chartered. Jose, it's good to see you, sir.
You too. Good morning.
You've quite literally seen it all in your time at Standard Chartered, the IMF, and the Bank of Spain once upon a time as well. Have you ever seen it like this before?
Well, I think that the uncertainty we're having is very high, but this may not be unique. I remember times, for example, during the global financial crisis, precisely at the beginning, at a month, September, October, here in Washington also, at the meetings at the time, the uncertainty was off the charts again. And we also saw a very difficult situation with COVID. So it is a complicated moment, but I think the world has gone through other complications and survived.
This is a policy shock, for sure.
Yes.
Do you see it morphing into a financial shock?
Well, I think that so far what we have is an impact coming from the tariffs, both in terms of the tariffs that are perhaps will be imposed, perhaps not. It will depend on the negotiations. But I think that what is unsettling is the fact that there is unpredictability regarding tariffs. And this is something which, as we know, is a deterrent to decision making. So far what we're seeing are the economic consequences in terms of the postponement of decisions by households and also by businesses. And this complicated environment may be resolved for the better or for the worse. But so far, I don't think we have seen significant financial consequences beyond the stock market volatility that we have seen over the past few weeks, and also some interesting gyrations in the U.S. Treasuries market.
Which we'll get to in a second in terms of just how much that does affect stability. I am wondering, we are seeing, though, a pretty seismic shift in rhetoric in terms of what the ultimate goal is for the trade partnerships between the world's biggest economies. And for Standard Chartered, where 90% of the profits come from Africa, Asia, and the Middle East.
Oh, look at that order block.
Are you seeing your clients
Holy
materially
shnikes.
shifting away from the U.S.
The hell is
at a
that?
time where there is heightened uncertainty and real questions about, say, that treasury volatility?
Well, our clients
Think we're going
are
long?
trying to, first of all, to figure out what's going on. And I think that one of the most important things that a bank like us can do at this time is to stay very close to the client and help the client make sense of what is happening to the extent that this is possible, and then help sort of advise them on what are the potential options that they have depending on how this ends up. What we see in our clients through our markets is that they want to continue doing business with the United States. The United States is the largest economy in the world. The United States accounts for nearly 15% of global trade. The United States will remain a major force in growth and trade. So our clients want to continue doing business with the United States, but they also, I think, are thinking about diversifying more. And all of these will end up depending, this diversification, on what is the ultimate outcome that countries are having in their bilateral negotiations with the United States. But I can tell you that if at the end of the day, what we have is that there is a lot more friction in the trade between the United States and the rest of the world is going to increase further the economic and financial relationships that they have. And we have already been seeing this for quite some time, that if you look at the dynamics of global trade over the past 5 to 10 years, you have seen that the dynamism of trade among emerging markets far outweighs the dynamism of trade, with advanced economies.
So this actually raises the question that we've been talking about all morning. How much do some of the U.S.'s trade policies push the likes of Europe closer to China, as well as the
Hey, Shades, you out there?
Well, I think that it's very
You back on, or you run away for the day already?
doing less business or potentially doing less business with a particular partner, which may be very important as the U.S. will continue to be.
Okay.
Okay.
You want to go through the trade plan? Do you want to follow the real trade plan today? Are you you want me to walk through it?
Areas in the world are thinking about furthering their integration. For example, I was in Malaysia a few weeks ago.
You got everything set back up? 'Cause we're not going to have anything for a while. Okay. All right, dude. This is really boring, man. This is going to be like watching oil. Okay. Okay. All right. So this is like what I'm trying to follow, because when I follow this, I do really good. When I get off it and I start doing crazy stuff and adding and everything, I blow it. So if I trade pre-market, it's only going to be to front run the EMA cross. So if you look right here, every EMA cross when the cloud changes. Well, I might not have taken this one because of the cloud. Look, it didn't change till up here. You were still, and you were on the VWAP. But so if we're pre-market, the only time I'm going to trade is if I can front run one of these, and then I'm going to go to break even right away. And that's my plan. Because if we would have got in at the 200, maybe front running it, and just sat at break even and let it run, we'd be at like 20 points on the ES right now, which is like 20 points on the ES is huge. So that's our morning plan. So after the news and everything comes out, I mean, honestly, man, we don't have anything to do until about 10:30, 11 o'clock because we have news right at 10 o'clock. We got existing home sales and it's marked red. So this always, you've got the open at 9:30, which, we know what that's about. And then we come right into news at 10. And it's going to take an hour for this volume to settle down and for us to start hunting for entries. So really, we're not going to start looking for entries until like 10:45, 11 o'clock, which is boring as shit, but that's kind of where we're at. And then from there, we start, analyzing the chart, looking for entries, and just trying to follow the rules. And once it calms down and it's nice and smooth, maybe we can get in something we can add to a little bit and just follow it up, and just make sure we break even or at least take profit when it's there. And that's our plan for right now. So there's nothing really much to do until about 10:30. I mean, the open is 45 minutes. And I mean, what do you do if you're trying to get in before the open? What do you do? Do you take a short off this trend line thinking we're going to fill that gap down? Because we got that huge gap to fill from overnight. What do you think, brother? It's almost like watching oil. But that's kind of, but if we want to try and make it.
The issue that we've got at the moment is that there might be forced
Well, it doesn't show the gap on the ES the way it does on the NQ. The NQ shows a huge gap.
and then maybe the United States will take a page out of their book and do the same thing to other companies looking to
Yeah, well then we just sit and wait, you know what I'm saying?
Jose, whether in
Because I've got no trade ideas right now. There's nothing I can do.
where they do have
The volume is too low.
whether that choice won't be
Yeah.
a choice between the United States
Overall long? Yeah, maybe.
that there is United States.
I won't really be able to decide until about 10:30.
There is the ASEAN region. There are the Gulf Cooperation countries.
But let me show you something cool on let me get this back up. I'll show you something cool on the NQ. Because the NQ and the ES are kind of their charts look identical. And sometimes you can predict what one is going to do by watching the other at the same time. I'm finding.
Even if some of those may get a
Okay.
little bit larger, I think that it
All
is
right, so let this
ultimately in
run.
the interest of all
So we
countries
got the VWAP right below, and the VWAP is right on this line of resistance, so that could be huge.
which of course takes care
This
of
could hold this up and we could go higher. But let me show you something cool on the NQ.
important business in China and China-related sort of countries, and for Chinese firms to continue doing business in places which are in
Where
the United
was
States
that?
sphere of influence. So I think that
Oh, it
this is
doesn't.
the target.
Oh, I must have
And
been looking
this is
further
what,
back.
For example, yesterday to the U.S. Secretary of the Treasury.
So it never really gapped.
About the
It just
potential
runs straight up
of a
overnight.
deal between the United States and China. That is in a scenario that I think would be very important for the world. And the fact that this is mentioned by the United States.
Yeah, we don't.
I think it's important. And I do
And
hope that we sort of bring the souffle down.
yeah, well, no juice. The opens are no longer juicy. Well, they kind of are, but. This is what I wanted to show you. If we get to 19,180, like right here, watch what's above us. Nothing for 1,000 points. So if we break that zone, the next time we have something is a fair value gap at 20,120.
President Trump pushed back against imposing a higher tax rate on millionaires.
So I'm looking to see if we challenge this gap again today because we did yesterday. You see, yesterday we challenged it and we couldn't make it through in the morning. That's the NQ. Yeah, I know. So I'm waiting to see if we challenge this gap. If we do, then if like this turns into support, we could go on a 1,000-point run up. There's nothing stopping it, you know. Let me see what that looks like on the ES. I don't think it's as clear on the ES as it was on this.
And Japan's major car makers, including including Toyota, Honda, and Nissan, saw a surge
I'm
in
just gonna
U.S.
center
sales
this
last
for
month,
now.
with Americans rushing to buy cars before Trump's tariffs on imported
Nah, leave
vehicles
it. I'll just do
kicked in.
this.
Toyota sales rose
Fucker.
8%
That's why I
from a year
wanted to
earlier.
center it.
Nissan sales rose 10%, and Honda recorded a 13% jump. That's your Bloomberg Brief. John?
Yohara,
Hold on.
thank you. Appreciate it. Thanks for this morning. Up next on the program, we'll set you up for the day ahead as we look forward to a busy close to the week in Washington. From Washington, this is Bloomberg.
So this is where we got to try and find something to fill our time to entertain us, so we don't end up just sticking trades in. Yeah, I know. The opens are always juicy, man. It's just, I'm over it though. I've just been burned and disappointed so many times. I can't do it anymore. All right, so let's go back to the NQ, or I'm sorry, to the ES. All right, so let's go up. So this here represents the one I shaded, I believe. So let's shade this. Oop. Oh, I want to do that. That was the wrong one. All right, let's see how high we got to go before we 470.
Today's CFOs are
Really, look, we don't start getting into like the heavy resistance until 55.42. There's a little bit at 54,
Vast responsibilities.
5500
To be engaged
ish.
in different topics.
It's remembering which audience
And
I'm
we're
talking
at
to and what I can say in that context.
54.28. So is that where we tapped yesterday? Let me see.
The finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
so being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But
So right
we
here.
strive for the great ones. Sometimes those really, really good ones have to be left.
So it was right here.
New episodes
This was the
this
high
fall,
yesterday.
Only on Bloomberg.
Africa,
Hmm.
a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
Where do we mark? Do we mark it here? Do we mark it here?
Middle East and
What do you
Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region.
I don't know.
Now weekdays, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Trying to see if there's a common resistance line we can find, but I'm not really seeing where we should mark it based off this action here.
That's your price action right there.
Oh, it's right here.
0.1% now on the Nasdaq 100. Let's get you a preview, a sneak peek of what to look forward to through the rest of the week. Here's your trading diary. Today, President Trump meeting with the Prime Minister of Norway.
Right here, maybe.
We'll get earnings from Alphabet after the closing bell. Look out for that. Going into the weekend, UMich consumer sentiment, and looking ahead to next week. On Tuesday, JOLTS data and consumer confidence. On Wednesday, more earnings from big tech, including Meta and Microsoft. And slowly, getting closer to a very important payrolls report not too far away.
Yeah, maybe the first where we start to see some of the ramifications from the lack of certainty that we keep hearing about. The earnings have been notable in terms of people withdrawing guidance and getting a sense that that uncertainty is starting to put on hold a lot of their plans.
Where do you think we marked this at? I don't know, like right here?
Kevin Hassett said yesterday there's more than countries bringing in more than 18 blueprints to try to strike a deal. He said Ambassador Greer's in a 14 some odd meetings.
Kind of like it right here.
On the sidelines of the IMF. And they say they want to get these blueprints out before the 90 days. So maybe we will have some certainty of who's getting deals and what concessions the U.S. wants to get to those agreements.
As finance ministers from around the world gather in Washington, D.C. for the IMF spring meetings for the World Bank, the situation looks like this. The temperature has been turned down over the last few days. And did it come off the back of a meeting with the biggest retailers in this country, Home Depot, Walmart, and Target, telling the president, reportedly, the prices are about to go up.
All right, I like that.
Are about to empty. Your coverage continues tomorrow live from Washington, D.C. We'll catch up with Nathan Sheets of Citi. We'll speak
I don't know where to mark it in here, to be honest with you. This one's been here a long time. The one I shaded's been here a long time.
Adina Friedman. Looking forward to being with you tomorrow in the nation's capital. Equity futures right now on the S&P.
This one at the top was from the 23rd. This was the top on the 23rd. So I shouldn't have marked. I should get rid of that. Wrong one. Shit. You know, I don't even like that.
Welcome back to another special Mutua Madrid Open update for Bloomberg TV and radio from Tennis Channel.
Okay, so if we
Former
break
US
this
Open
one,
champion
we're
Emma
going for a ride.
Raducanu clinched her first outdoor clay court win since 2022 with a hard-fought victory over the in-form Suzanne Lamont.
That one designates the dead space up above. We're going for a ride. So,
6-4 in just
trying
under
to
2 hours. And don't forget, you can watch all the action live daily on Tennis
do you like this level?
Is this
I
a
don't know, man.
negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case.
We can adjust these with time, but I like these as markers of when we might want to take profit or entry, you know, possibilities.
In the second quarter of 2024, for the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase?
Lottie off.
I think it increases.
How you doing, my friend?
Once you start making profits, people expect
It's going to be a boring morning. Our news came out, and we're just waiting for the open, and we got news again at 10 o'clock. So we're just playing with the chart right now. Good. Good to hear.
You're very focused on working on that and delivering against that.
I'm just trying to find common resistance areas right now.
What you can work on is a little bit open, and there's a lot of
Just to kind of, we're going to play on the ES. Shades.
on the most important things that are going to deliver the most.
Shades is going to play on the ES with me today. Unless it really slows down on the NQ, and then we'll. I'm always watching the NQ, and if the price action is acceptable, then we can hunt. We can hunt entries on the NQ, but we're gonna work the ES today.
Majority of the incremental EBITDA is not coming from any cost reduction.
I'm just trying to find some common lines, historic lines of resistance to add to look for possible take profits or entries. All right, I'm going to draw one right here and see how that works out. And we'll get set back up, and then we're just waiting until...
Technology is a trillion-dollar game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter. So do lasers.
All right, so up here is the big, like if we cross past this zone, it's more heavily marked here. On the NQ, I got 1,000 points. All right. So I guess I got to watch the NQ, because if we break that line over the NQ, then I think we're going for a ride up.
China rebuffs Trump 30 minutes until the start of trading I'm Matt Miller.
And I'm Katie Greifeld.
It's 9 o'clock.
Nasdaq is off today, and Bloomberg Open Interest starts right now.
All right, so we're fine tuned in about as good as we can be.
Tariff talks with the U.S., but some relief for autos. U.S. officials consider easing tariffs targeting car makers, and earnings season is in full swing with a spotlight on the consumer.
And speaking of earnings, the word uncertainty is dominating calls this quarter, with Chipotle and PepsiCo cutting their outlooks, while you have American Air pulling their 2025 guidance entirely. You can see stocks all moving a little bit lower pre-market, Matt Miller.
IBM also says uncertainty could force clients.
All right, so we got the view app below us. We got 30 minutes till the open. And then we got news at 10 o'clock. So we're kind of waiting until 10:30, 10:30-ish, or, 10:30 to 11 before we start hunting for our entries.
Saying, quote, the U.S. should respond to rational voices in the international community and within its own borders. And
Yeah, here you go. 10 o'clock U.S. existing home sales.
Wants to solve the problem. Bloomberg's Tyler Kendall has the latest from the White House. And Tyler,
Weaker growth expected as tariffs uncertainty.
Obviously, there's been a ton of mixed messages when it comes from the administration, and now
Fed's
China's saying they're not even talking.
As Trump thinks he's smarter than the central bankers amid ongoing Fed feud. Okay, so they're churning up the fight with Powell.
Something that the Treasury Secretary told reporters yesterday. It's just really not on the table at this point. And then China's Commerce Ministry.
I don't know if you guys know, but the Federal Reserve is a private entity. It's not part of the government. So it's never been audited. So they're in there manipulating our currency, and we have no idea what to do, or what they're doing. We have no idea what they're doing or what's going on with it. They just create money with no oversight from Congress. It's been like that since 1923. People are just starting to figure out how everything works now and understanding. I think that's finally coming to the head. Ron Paul, if you know Ron Paul, he's a libertarian. I was a big Ron Paul guy when I was younger, when he was running for president. Before the Trump years. His big thing was audit the Fed and see where all that money is really going and what they're doing with it.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there, reporting live from the White House. The Trump administration.
Their job is to just keep everybody happy enough so no one starts looking around. And then they can do whatever they want. All right, let's see.
The White House may eliminate the so-called stacking of levies on cars and certain parts. Executives have warned.
I don't know why they just don't reduce the rates so we can get the money moving again.
Bloomberg's David Welch joins us now. David, can you explain these?
Okay, so that's pretty boring. That's just what we're doing. I got some real work stuff to do. I'll be back in about 20 minutes to call the open or so. I'm watching the chat all the time, so if anyone out there has questions or anything or whatever, just throw it right in the chat. Shades, sit on your hands. We're not doing nothing till about 10:30. I'll talk to you in a little bit.
So what they'd already talked about putting in place is you have a tariff on the vehicles coming in from Mexico, for example. If they are USMCA compliant, that is, they have enough parts content, they can still get off the border with a much lower.
Greed is good. Greed is right. Greed works.
That's right, my friend.
Because General Motors and Stellantis specifically make a lot of vehicles in Mexico, and they also have a lot of Mexican parts content on those coming up. And that would, even if they just lowered that from 25 to say 10% or something like that, that would relieve a lot of the burden on, say, Chevy and Ram pickup trucks coming over the border. It's all fluid right now. We don't know, but it does look like the administration is at least considering some proposals that would reduce the tariff burden on vehicles coming in from Mexico and Canada.
Fluid is a good way to describe this situation. We appreciate you staying on top of it. That is Bloomberg's David Welch joining us from Detroit. Meanwhile, on the earnings front, Procter & Gamble cut its annual sales and profit outlook. You also have Pepsi cutting its full-year guidance, but Keurig Dr Pepper reaffirmed its 2025 guidance for steady growth. Let's discuss all of it now with Barclays analyst Lauren Lieberman. And I want to start with the big guys. Pepsi and Procter & Gamble lowering their guidance. Does that imply that there could be higher prices in the offing as they try to protect their margins?
So I would say both companies are not going to rely on pricing as the way to solve this. In fact, if anything, what's been challenging is that the consumer's under pressure. And so what you're seeing is consumption slow down and raising prices. We know elasticity happens, and that could only put things under further pressure. I think where we may see pricing later in the year would be in response to tariffs. One thing that P&G just talked about on their conference call is they expect to see an annualized impact of $1 to $1.5 billion on their cost structure from tariffs, and pricing will have to be part of the mitigation plans to deal with that.
Lauren, what are the biggest inputs that are manufactured overseas that these companies have to import? And is it likely, yesterday we talked with somebody who runs a frozen yogurt company, he said paper packaging is what he needs the most. Is it likely that those things end up being produced in America?
So all of our companies have been, frankly, fairly vague about what it is that they're importing. Kimberly-Clark reported yesterday they also had a bigger than expected impact from tariffs because of imports of finished goods from China. So we don't know a lot, frankly. Raw and commodities and packaging is certainly part of it, but there's also a piece of finished goods imports that happen from China. As for whether or not we get a shift to the U.S., frankly, I think companies are going to be more likely to look at alternative sources of supply outside the U.S. than committing significant amounts of capital to U.S. production when there isn't visibility in terms of longevity of policy change.
That's the thing. And also, it was interesting to hear the Whirlpool CEO say on their earnings call this morning that 20% tariffs will not move factories from China. I know that's not exactly in your wheelhouse, Lauren, but I want to go back to pricing and what you were saying, that we could see some of these companies take pricing actions maybe in the second half of the year in response to tariffs. Some interesting moves from Unilever and Nestle over in Europe, basically posting better than expected sales because they raised prices. I hear what you're saying, that the consumer is stretched here, though. And if we were to see some pricing actions from these companies, how sticky are those increases?
So pricing's been incredibly sticky. I mean, we had massive pricing, as you well know, right, across the last couple of years in some of these categories. I mean, Frito-Lay at Pepsi, they took pricing up, mid-20s to 30% over a several-year period, and volumes held in flat for a long time and then have been declining for the last 12 plus months. So the room that there is to take more pricing, frankly, it feels very limited. KDP, I know we're trying to stick with the big guys in the conversation, but KDP, I mean, at-home coffee is a cost savings versus away-from-home coffee. However, when you have to buy in a multi-serve format, so you buy a box of multiple pods of coffee, it's a higher dollar outlay at the store, right? So they're talking about so-called price pack architecture. How do we bring down that dollar outlay at the store in order to increase frequency of purchase? So the companies, it's challenging. I mean, P&G talked about the massive amounts of innovation coming to market, and they will price with that innovation. That's the best case scenario, when you can price with news, not just price on what exists on the shelf.
It is a shock when you're at Costco buying a box of those pods and they're like $40. Let me ask about any benefits, not to harp on Whirlpool too much, but they have said that tariffs will benefit them in that these low-cost producers from Asia won't be competing in the market at a price point that beats them. Is that the case for any of the companies you covered? Does P&G or Keurig Dr Pepper benefit at all from tariffs, protectionist tariffs, holding competition out or holding prices up?
I mean, I think the only category I can quickly jump to is diapers, and this is getting very specific. But there has been a significant uptick in imports from China into the U.S. diaper market under kind of cute new branding, some exclusive brands at Walmart and at Target, and those other brands have been taking share. So that's one spot I could point to. At the same time, both Procter and Kimberly have significant quality upgrade that they've already been planning to make and been working on for some time in the Pampers and Huggies brands. But that's one category I could highlight pretty specifically.
All right. Great to have you on the show. Hope we can get you in the studio soon. Barclays analyst Lauren Lieberman there talking to us about some of the effects of tariffs on these companies and earnings from Procter & Gamble and Keurig Dr. Pepper. Some more movers on our radar today. Texas Instruments gives a robust forecast on demand rebound. You can see those shares are up 10% in the pre-market. Merck expects to lose $200 million to already announced tariffs in 2025, but says it also has a better outlook now, or at least is holding the outlook stable. You can see the shares up 1% in the pre-market, and Bristol Myers boosts its outlook as older drugs drive sales, a sales beat, but those shares are down 1.2%.
Yeah, there you have it. A lot of interesting moves. You take it into the broader market, though. I will say the S&P 500 pretty much unchanged in the pre-market right now, Matt Miller, which is interesting because we were down somewhat significantly just a couple hours ago.
Yeah, absolutely. I mean, it's a changing market, right? But I was looking at futures today and saying, I don't know if it's a futures down day as much as it's a halt the rally day, right? We're not rising as much as we were. You can see S&P futures right now up, but only 0.4%. NASDAQ futures up 0.2%.
All right, later this hour, I'm pleased to say we're going to be speaking to one of those companies. We're going to speak to ServiceNow CEO Bill McDermott. Stay tuned for that.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg. From the world of politics to the world of business, Joe Miller and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, one of the stocks we're watching today is IBM out of Armonk, New York. The stock is down 7% in the pre-market after missing expectations for sales. First quarter sales rose, but only 1%, suggesting economic uncertainty, which they called out, and U.S. government cost cuts may dent the company's business. Joining us now is Mandeep Singh of Bloomberg Intelligence. So before we get to the big one, let's talk about, Google coming, and I know Katie's anxious to get to that. But let's talk quickly about IBM. They were one of the many companies that called out uncertainty this morning. Texas Instruments, another one. How's it going for IBM?
Well, when you look at all the companies that have reported so far, including IBM, like consulting feels like discretionary, and this is the type of environment where things may not get better on the margin. If you look through the rest of the year, everyone is so uncertain that, estimates are probably gonna come down or be sideways. And from that perspective, low growth is never exciting. They have acquired a company, HashiCorp, and then there's another acquisition they have done, DataStax. So all that growth is inorganic, but on the margin, numbers are coming down and no one seems to be excited right now.
What I heard there was consultants are discretionary, which seems like a pretty big call, but let's move on. Let's talk about the big one.
Don't need them.
Don't need them, not in a recession. Alphabet. Reporting after the bell today, the narrative here is that it's really going to set the tone for the rest of the tech earnings. I know that we've gotten Tesla and Netflix so far. They feel a little bit idiosyncratic. There's a really interesting quote in our write-up, this coming from an advisor over at Clearstead Advisors, saying that basically the devastation in big tech stocks such as Alphabet has been so severe, there's actually some room for error here.
I don't know, because when I look at their core business, digital ads, it feels like they're exposed to discretionary spending as well. Autos, retail, consumer discretionary. All these companies have nowhere else to go but to, still advertise on Google Ads. But there are Chinese advertisers, Temu, Shein. If they're barred from doing business here, why would they be spending on ads? And that's where, if you're an online company, there's no other place to go but on like Google and Meta. So you're not gonna just take away all your spending, but on the margin, still things will decelerate. And that's where, because ads is such a high margin business, even if cloud does phenomenally well, YouTube does great, it's not gonna make up for their profitability. And look, they have announced an acquisition of Wiz, $33 billion. So when you look at the overall free cash flow for the year, they're spending $75 billion in CapEx for AI data centers. They're buying this company. How can they grow free cash flow when, the top line isn't really accelerating?
Okay, so Matt, things can get worse.
Things can get worse, but I'm wondering if there's any benefit to these companies from Trump's trade war or tough talk. I noticed yesterday the EU took Google for $500 million and $200 million from Meta, and everyone's like, whew, thank goodness it was only that much.
Maybe regulatory stuff takes a backseat, although we don't know what will happen to the Chrome decision, the divestiture that in the monopoly case, so that's an overhang. But look, these companies have got almost 55 to 60% international revenue. Tariffs will be a negative for any U.S. company that has got international revenue. So from that perspective, all of your Mag 7 are negatively exposed to tariff, I would argue, because internationally, I don't think tariffs are going to help you much. And I think in the case of Alphabet, clearly, international revenue is there both from the advertisers as well as the revenue they generate outside the U.S.
All right, Mandeep, great preview of what to expect a little bit after the bell today. That is Mandeep Singh of Bloomberg Intelligence. Alphabet shares, for those keeping track, down 18% year to date. Now, we have some other earnings movers on our radars. Let's talk about American Airlines withdrawing its full-year earnings outlook. Shares a little bit resilient here, though. You can see only down about 0.4%. Chipotle also cut its 2025 outlook after quarterly sales declined, and ServiceNow results guidance showing economic resilience. You can see shares up 9.5%. The market overall, though, the S&P 500 pretty much unchanged. A little bit of quietness after a rip-roaring couple of 2 days. We'll discuss all of that action next and start the trading day with Emily Rowland. This is Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Well, we saw more concerning commentary from Wall Street strategists this morning. Deutsche Bank's Binky Chadha, one of the biggest bulls on U.S. stocks, he cut his year-end target on the S&P 500 to 6150 from 7,000, still significantly higher than current levels, but it's the direction of travel that is concerning here. Meanwhile, you also had Christopher Wood over at Jefferies believing that the U.S. stock market has reached its peak. Let's discuss all of that with Manulife John Hancock, co-chief investment strategist Emily Rowland joining us now. So Emily, let's talk about U.S. exceptionalism. There's a lot of passionate views on both ends here. Some saying that, yes, we've peaked, basically. We're in the rearview mirror when it comes to the U.S. dominating these financial markets. Others saying that those fears are way overblown. Where do you fall on that debate?
Yeah, certainly markets and sentiment surveys are telling you that. You look, for example, at the Bank of America Fund Manager Survey, which says that sentiment on U.S. assets is the lowest in about 30 years. Meanwhile, you look at the fundamental and the economic data, and the U.S. is still doing better on a relative basis. Just looking at 2025 earnings growth estimates, we're still around 11% in the U.S., and every day, EFA and Europe indices continue to move lower, where the analysts are now looking for about 4% earnings growth in Europe. Meanwhile, economic data are still coming in modestly better in the U.S. We look at things like PMIs as really timely reads on the health of an underlying economy, and the composite PMI in the U.S. is outpacing Europe and, in fact, beat expectations over the course of the past week. So the economic and earnings trends are favoring the U.S., while the sentiment trends, the capital flows are massively favoring Europe right now. We would probably fade that and focus more on earnings and economic trends.
Are you expecting, when I hear people say we're waiting still for retailers to post earnings, I think immediately of the pull forward in demand. Are you expecting us to see a lot of that this earnings season?
Yes, we are. And it is feeling backward looking, and we think, you look at things like durable goods orders this morning, just absolutely accelerating. And really that was likely based on a pull forward in demand. Same thing when we looked at retail sales data last week. So I think everybody's sort of throwing out the backward looking data and looking for guidance from many of these companies. And there's just been such a wide band. Even some companies just not offering forward guidance given the political uncertainty surrounding tariffs. So we'll be watching for whatever type of forward guidance we can get from those retailers. But for now, things look pretty solid.
I'm glad you brought up durable goods because that was a doozy coming in. Preliminary numbers for March at 9.2% increase there. The survey had been for 2%, so clearly a pull forward, like you say. I want to wrap politics into all of this because we talked about that Binky Chadha call, that lowering of expectations. He did say that basically to get to these levels, a credible relent likely needs a significant decline in approval ratings. After the initial honeymoon period, approval ratings tend to align with what is happening in the economy. And Emily, I'm curious to get your thoughts there because we've seen so much back and forth when it comes to the trade policies of this administration. When do we start to see some stability? Does it come from approval ratings?
Yeah, it does feel like we sort of maybe got to peak political uncertainty, and there's a little bit of relief on that front, given the fact that it appears that negotiations may start to play out here. We try to minimize using politics and making investment decisions. I know that seems almost ridiculous right now, given how much of an influence politics are having. But we were, looking back at the decisions that we made in 17 and 18, and we did look at overweighting international equities at the time. There was a lot of excitement and positive sentiment about the pro-cyclical, pro-business policies that the Trump administration had planned to implement, and that outperformance did occur, but it only lasted for a couple of quarters. We look longer term from that, and again, going back to earnings, going back to fundamental trends, we still have a preference for U.S. stocks.
All right, Emily, we're just getting started here. That is Emily Rowland. She is staying with us through the open, and it looks pretty quiet right now, Matt.
It looks pretty quiet right now, but we know how volatile these markets are, and we know that anything can change on one tweet or one truth, right? President Trump out this morning tweeting about how he's brought down the price of eggs, brought down the price of fuel, a couple of debatable issues there. In terms of futures, we do see green arrows. More with Emily Rowland on the other side of this break.
We play a game.
All right. Got 3 minutes, 2 minutes till the open, 2 minutes till the open. Got news at 10 o'clock.
Private equity, foreign direct lending. What we're looking for are opportunities.
Getting ready for the day here. This morning there was only one opportunity. We're going to work the ES today. I'm keeping an eye on the NQ. Me and Shades are going to work the ES today. How you doing, Lady Off? Hey, did you take any trades? Ready to lose? No, we're not doing it today. Not today. We're not going to play the game today. So we're going to wait. So the plan, this is the plan. Are you buying now, Lady Off? See, I had a buy signal down here at 53.86. But that was at 8:01 and I wasn't set up yet. Too many's and no. Let's stick with the plan today so you don't rage quit. Rage quitting at like 9:45 is like the worst ever. I've done it 100 times. Lady Off is in, but he's not. Lady Off is he's got a cash account. He's not doing the prop firm margin trading. 1 minute till the open. So the plan, unless we say fuck the plan, is we've got news coming out at 10 o'clock for existing home sales. It does look pretty strong at the open, but you never know when, all the selling, you could get a wave of selling and wick right down to the 50 EMA. So be careful if you're not already in. Here we go. Here's the open. We're about to touch the 20. All right, let me get us some more room here.
Moments away from the start of trading, this is Bloomberg Open.
We got a historic line. We got a fair value gap. a seller resistance fair value gap. We got a historic line of resistance up above and the VWAP below. We're about in between. The 20 EMA so far is showing support. Let's see if we break that support and visit the VWAP this morning. So if you're looking to go long now, you're kind of in a falling knife situation. You know, let's see if you can catch it. Did you go in, Shades, or tell me you haven't? Tell me you didn't do nothing. Do it on Sim.
The word that they may be thinking about, that they may be concerned about, is uncertainty. We've been hearing that across the board out of earnings.
It is the word of the season, truly. If I had a dime for how many times uncertainty had been said on earnings call, I would have at least 3, because you had Chipotle and PepsiCo pulling their outlooks.
All right, so this candle is pretty resilient here. You got to be careful for the 9:50 Eastern, 9:50 reversal, and then we got news at 10 o'clock. So think about that too, guys.
PepsiCo down a little bit, American Air a little bit higher. Just feels like everyone's tired, Matt.
Yeah, I will say Southwest called out uncertainty. Alaska Air called out uncertainty. America Air called out uncertainty. Pepsi uncertainty. CMG, Chipotle uncertainty. IBM.
Hey, Shades, did you get in and you're praying that you get out green so you can brag about it? I do that sometimes. 2 minutes and I go long. All right. Looks like the longs are, well, I don't know. Right now it's a battle. You got to be careful. You get snapped out. You know, if you were sitting on this trend line at the 20, you're looking pretty good. If you were sitting here to go long, you're okay right now. You're down. Dude, you're doing it? No. Are you on micros or minis? At least be on micros if you're going to play the open. Minis. My man Shades getting in the action. My man Shades, are you long, brother?
Language from companies, as you said, guys, across various industries, Alaska Air, Pepsi, Chipotle, IBM, volatility, uncertainty, just that's the name of the game right
Careful, stochastics are looking a little iffy.
For a while now, because it is pretty stunning.
Short? Okay, good. All right, I like the short right now. 15-minute order block. Okay, beautiful. Shades knows how to build those order blocks up. I have to have an indicator, but he can see them.
Downgrading their expectations for the year end just this morning. I mean,
so this is kind of the top of the range right now. We had a higher low or a lower high. We had a lower high on this candle. We got a minute 22 till the next candle. I got to turn my lead box on. See, I turn it on a few minutes late and let everybody get the ones that are in line, and then I don't have to do nothing right away.
Figure out what direction stocks are going, and you could look at the fundamentals, but anything can be changed.
All right, lead box is on. Got a call at 10. I got a call at 10, which is okay because we got news at 10. You got one mini on? Where'd you enter, Shades?
Especially for automakers, right? Their tariffs are changing on a daily basis for makers of electronics, chips, smartphones. What are the executives to do? How do you handle this if you can't put CapEx, if you can't make hiring decisions, if you can't know how much your goods are going to cost on ships?
Yeah, it's a massive challenge, Matt, right now, and that's the reason that we're seeing companies pulling guidance. They just don't know. We're seeing companies announce 2 different sets of guidance based on how punitive tariffs are going to be to their business. So again, a lot of uncertainty, but what we have to watch is what's actually happening. And even though the sentiment surveys are just incredibly bearish right now, we have to look at the real-time data. That's the best we can do right now. And things like initial claims this morning coming in at 222,000.
Strategy may be bad, but for the moment in April, 9.56. Okay, 54. All right, so Shades is short, 54.09. That's working out. He's got 5 points. Ladioff was long. Were you long before the open, or did you get in during the open, Ladioff? Did you break even? Hey, Shades, pull up to break even at least, dude, for me. Give yourself a few points. Because we're on that line of resistance right now. We got to break through that to go lower. So, hey, let me know your break even. You got like 7 points right now. Or no? Yeah.
This is where I want to be. I'm thinking about gold, for example, hitting 3,500. It feels like that is one of the only.
Got 8 points, dude.
Yeah, I mean, gold has
Be careful. That 50 could smack it back up. Tighten up. Tighten up a little. We touched the 50. Yep, that's what I was afraid of.
We want to look to where there's relative value. So I think what's really notable about this market is that the assets
10. Ladioff, man. You made 10% on his bankroll so far in April. Let's start MY. Or, shit, I got 2.
Better earnings growth prospects, a wider moat, and you've seen really the baby being thrown out of the bathwater to a large extent. And
Shades, did you get your break even, man? Are you out of that?
German industrial companies, those parts of the market are highly.
You got to learn the 50 rule.
Tend to trade on a rebound in global economic growth. We don't think we're there.
How much you get?
The global economy is slowing. If you
Couple hundred?
exceptionalism is at risk, global exceptionalism.
Afterwards, I know my strategy is not good.
To those higher quality assets that are on sale.
Well, you could make the case that a high quality asset on sale right now is
Oh, good one.
the treasury curve. You had PIMCO,
That's good.
Morgan Asset Management coming out and saying that there's actually opportunities there after the sell-off we've seen, but we know that bonds have been a really unreliable hedge, Emily. Where do they fit into
Yeah, you know, your strategy isn't going to be on every single time, but you know, if you pulled in to break even and took profit, then fuck it, lady off. I think that's great. The most important thing is moving up to that break even when you have profit and not letting it run back against you. I've blown so many accounts like that. So as long as you're green, you're good, man, in my book. But 10% on your total bankroll in April already, that is friggin' amazing, dude.
Finally came down last month, 0.2%. Real-time measures of housing are suggesting more disinflation.
Because I don't think you're over leveraging yourself, so you probably have a bigger bankroll.
You look at things like supply coming online. We're seeing some of the biggest jumps in housing supply that we've seen in quite some time. At the same time, the demand is stagnating due to unaffordability issues, higher insurance costs, etc. So if we can start to see housing continue to come down here, that brings inflation down and provides a counteracting force to the inflationary impact of tariffs here. So watch that dynamic playing out. That means bond yields move lower, and there's a lot of opportunity for total return potential within high-quality bonds.
I wanted to bring up the inflation subject again as well. As I mentioned in the last block, Donald Trump put out a truth this morning. He says gas and grocery prices are way down, just like I said they would be. Eggs are plentiful and down 87%. Nice. If you look at the data, and I realize that some of this data is...
So are you out of that trade, Ladioff?
The white line here is the CPI food index.
You're good. You got out with profit and you're good. Well, you may prove to be right.
The blue line is average national
You know,
those are updated.
the problem is it's hard to hold through the open if you're taking heat, man.
It hasn't really come down that much.
Because you don't know how far it's going to go before it goes your way.
Should the Fed be looking at a preemptive cut, or should they still be worried about inflation?
Yeah, the Fed's not going to act preemptively on the inflation front. They're going
Hey, Shades, don't get back in, okay?
in the real time.
Don't start the cycle.
Lead them to be behind the curve here, but I do want to comment on the commodity discussion there, because if you do expect a meaningful rise in inflation from here, that almost has to be accompanied by higher commodity prices. That is really a key.
Don't do that, Shades.
The opposite, based on particularly demand out of China slowing, on decelerating global growth there. So if commodity prices can come down,
Shades, you're being awful quiet, dude.
inflation come down, that is something that's going to be a positive here for the bond market. Yes, rates are
Oh, from your trades.
but I don't think
Fuck, that's even better, dude.
out the slower
If you're making 10% on your trades in a month, like on stocks and stuff, sometimes I got to hold stuff for 2 or 3 months to make anywhere, you know. Stop thinking, Shades. It's not good for you. Stop it. Let's wait for let's wait for a setup, man.
We'll hear from CEO Bill McDermott next. This is Open Interest.
Long's looking strong though, huh? You are? Did you go long? Did you reverse and go long? All right, stop then, dude.
Anybody use the troubleshooting guide I put together? Fix some of the issues.
All right, stop. All right, I got some work to do. I gotta look away for a little bit. I'll try and call the news when it comes out. Okay, but don't just be cool for a while. Take some lessons from Lady Off on how to buy stocks and collect dividends. Entertain him, Lady Off, so he stops. All right, I gotta run. I got a couple work things to do. There's no trades for me right now. We're just watching the chart, and we got news at 10. I'll be back a little bit, guys.
What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Welcome back to Open Interest. A check on stocks at session high with the S&P 500 higher by 0.4%. You can see that a lot of that strength is coming from big tech, with the Nasdaq 100 up about 0.8%. The little guys getting in on the action too, but we'll see how this picture changes as we get deeper into earnings season. Alphabet after the bell tonight, but it's time now for our top calls. Some of the analyst action in focus this morning, and first up, Oreo maker Mondelez getting a downgrade from D.A. Davidson on soft snacking demand and cocoa volatility. Next up, you have Deutsche Bank upgrading Huntington Bank shares and M&T Bank. The firm is confident that bank stocks have bottomed and also sees upside in the large regionals versus the big banks. And finally, ServiceNow getting raised to a buy over at Present Capital Management. The software company reported first quarter results that beat expectations and gave a strong outlook. And Matt, shares currently up almost 14%.
Yeah, absolutely taking off. And we are going to talk with Bill McDermott, the CEO of ServiceNow, formerly of SAP, in just a moment. Those shares going the opposite direction of what we see happening with IBM. IBM is down after it missed expectations for sales. They did grow, but only 1%. Bloomberg Technologies' Caroline Hyde joins us now in the studio to talk about the company out of Armonk. So IBM missing expectations. What's the problem with Big Blue?
They didn't actually miss expectations, Matt. They actually beat, if you look at sales. We were expecting flatline in sales of 0%, but they managed to eke out 1% growth. But I think where you're right is the fact that there were built-up expectations because the shares have risen so hard. These sorts of companies, software-exposed companies, have been outperformers in the tariff turbulence, ultimately, because they have little exposure more broadly. Yes, they get mainframes. Yes, of course, they build plenty of their own hardware when they're thinking about quantum, but they build it in the United States. Ultimately, you're seeing software still remaining resilient. Many questioned whether DOGE, whether the efficiency coming from the government would be something that impacted shares. But ultimately, it seems as though that's not coming out in this set of quarter for IBM nor for ServiceNow. But there is a sell-off in IBM because I think the shares rallied so hard before it.
Yeah, down, I think, 8% in the pre-market last time I checked. So big drop there. That looks nothing like what we see at ServiceNow, where Katie just showed us the shares up 14%. I think Bill McDermott is good. Let's check in with him.
Let's check in with him, Matt, because I'm pleased to welcome to the show the ServiceNow CEO, Bill McDermott, who joins us on the back of what is some stellar numbers. Your shares are rallying. We're seeing basically a beat on sales. We're up 19%. You're also, though, delivering strong guidance when many other companies are pulling their guidance, Bill. What gives you the confidence?
We have an amazing culture here, Caroline. Elite level execution defines ServiceNow, and our AI acceleration delivered another outstanding quarter. It actually quadrupled. So ServiceNow has really become the AI operating system for the enterprise. And we see the software industrial complex literally integrating onto ServiceNow as the standard from every corner of the office. Companies are looking to run efficiently, effectively, with a different margin profile for this economic time, and we were built for this moment.
You do talk about potential risks regarding geopolitical environment. What are those risks? How are you seeing them?
Well, I think if you look at it, why we're so well positioned for this moment is companies today, let's take the auto industry as an example. Tariffs are on the table, and that industry is affected. So these companies have to think about the marketplace very, very differently. They have to reorient their supply chains in real time, and only AI can do that. And you say, well, why did I have to do that? There's 30,000 parts that go into manufacturing a single vehicle. They may not be able to pass on the $10,000 increase to the consumer. So companies like ServiceNow can get them to tier 2 and 3 suppliers, sign up new suppliers in real time, and position these companies to win. And this is true in every industry. It could be insurance, it could be pharma, it could be retail, manufacturing. It's all in the focus of ServiceNow to help these companies innovate.
Let's go from private companies to the public sector. And I know that you've won a federal contract, but many had a lot of anxiety about what DOGE meant for you. You said DOGE loves you, but why would DOGE love you at this moment?
Well, we're laser focused on modernizing government and elevating how it serves the American people in the U.S. And what's really interesting about DOGE, it has formed a standard that other governments around the world are following. So our public sector business was up 30% year on year. We had 6 new public sector logos, including 1 large U.S. federal agency. We have 11 federal deals greater than $1 million, and 2 of them were greater than $5 million. And this is net new software sales. So this is kind of a big moment because we are the only software platform I'm personally aware of that can take out billions in cost in government around the world. And certainly the United States is looking at that very closely, and we're excited.
I mean, have you spoken to Elon about the work that he's doing? How did you make sure that you were protected in this moment to be able to bring the transformation, bring the efficiency?
Well, you have to remember the agencies are run by amazing public servants and great leaders. And DOGE is doing the right thing. They obviously want to make good for the American people so the taxpayers get their benefits. our platform is front and center in helping them do that. You know, there's systems like COBOL systems in there in government entities since 1959. And then the 20th century architectures where all of these legacy systems were departmentally organized. And then there was maverick buying over decades of different administrations. We can come in there and consolidate all of these spends onto the ServiceNow platform and replace hundreds of systems. And who wouldn't want to do that?
You do that with, you say, an elite team. You started the conversation with that. I'm interested in a change in the team. A top sales leader, Paul Smith, moving on. Is there anything to be worried about there?
Not at all. I mean, you know, the good news is Paul and I had an opportunity to build out the go-to-market together for nearly 5 years. So we have a great relationship. And we mentored Paul Smith, who, by the way, is a veteran of the United States Army, 82nd Airborne Division. So he's got the discipline of a great leader. And he's run big brands for other companies. And he's been with us for 4.5 years. And we actually had him in the global sales job last quarter. So I think we see in the numbers what he's capable of, and I have high hopes that that will continue to grow.
I want to ask you lastly about your culture and the people, because more of them are going to be moving to Florida, right? West Palm Beach. Is that going to become your headquarters, Bill?
What we're going to do is we're a California company. We started in San Diego. We have a big development center in San Diego. We have a big development center in Santa Clara. So California's home base, but we've expanded. We're growing. So we have a big commitment in New York City at the Hudson Yards. And soon we'll have a deal done, hopefully, in West Palm Beach, where we'll be able to have sort of the West, the Northeast, and the Southeast covered with big hubs. And our dream is to have a next generation AI university in West Palm Beach, where we team up with the Cleveland Clinic, Steve Ross and his outstanding company down there in West Palm Beach, and really build coalitions with the business community. But our dream is to be the AI operating system for the enterprise. We're on the move. Only ServiceNow can go east and west and north and south in these companies. So building out AI all over the United States and all over the world is something we're quite passionate about, Caroline, and we're on our way.
Well, many loving the AI, Gen AI momentum that continues. CEO Bill Dermott of ServiceNow, thanks so much for joining us. Back to you, Katie.
Thank you.
All right, our thanks to Caroline Hyde for bringing us that conversation. ServiceNow up 15%. That is your biggest percent gainer in the S&P 500 right now, which is nearing in on session highs. This would be a third straight day of gains if it holds. We'll bring you deeper into the market action next. This is Open Interest.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, Harrison Ford. We'll show you how.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. Looks like we're getting some momentum back here. S&P 500 now up another 0.5% after the big rally that we saw yesterday and the day before. So 3 days of gains. The NASDAQ up over 1%. You just saw Bill McDermott and ServiceNow rising 15%. You can see that investors are buying bonds, pushing the yield down on the 10-year and the 30. NVIDIA up 1.5%. That's better than a stick in the eye. IBM is down 6.5%, but it's not hugely represented on the S&P 500. Ford is up on news that we could see even fewer tariffs on auto parts. American Airlines down and Chipotle up, but both of them talking about uncertainty. And then Whirlpool off a little bit, but maybe it's not so bad for Whirlpool, Katie.
Yeah, it was interesting. We heard from their CEO yesterday on Bloomberg Television saying that maybe tariffs actually help them.
To your question about the tariffs, you highlighted already the most important thing is we're 80% of what we sell in the US is produced in the US. I know very many companies talking about reshoring, onshoring. We never left. So as such, we are, no matter how you look at it, we're structurally a net winner of a tariff.
All right, interesting comments on leveling the playing field, sort of borrowing a line from the administration there. That was Whirlpool. Now, coming up in the next hour, a lot of great conversations, including with Fed Board Governor Chris Waller. This is Bloomberg.
What would it mean for India to host the Olympics?
Linda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same.
Okay, 1 minute to the news. This thing's blasting off.
Look at a sustainable model. What if you look at refurbishing old stadiums?
30 seconds.
What we have. So I
Home,
think
U.S. existing home sales.
a sustainable move.
Bloomberg brings you breaking news 24 hours a day.
12 seconds, 10.
Journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
All right, news has dropped. missed the forecast.
Consider a higher tariff scenario, that they're not saying, costs are going to
Missed
be
the forecast by
that
quite a
much more,
bit.
that prices are going to be that much more in a linear fashion.
Right.
It looks like it's actually consistent with an expectation.
Let's see if that matters at all or if it's already baked in.
Lowering demand for their products.
Okay.
All right, so now
Back on again, particularly to talk about the Boston.
now we're just
Boston
gonna start looking for entries. We got all our news in.
On the screen, the Dow up 33 points. Paul?
All right, Tom, thank you very much. Coming up, this is the Bloomberg Intelligence radio program. Alex Steele is out today. She'll be back tomorrow, but Isabel Lee sitting in for Alex. Isabel, thank you so much for joining us again.
I'm excited. It's going to be a great.
So I don't have nothing else. That looks like it should
Okay, very
affect.
good. We're going to start it off strong here just in a moment. Fed Governor Chris Waller, he's going to be speaking with Bloomberg's Michael McKee. They're down in Washington, D.C. We're going to bring that to you in just
Trump's
a
in
moment.
Norway today.
But looking at the markets, the S&P 500 up 40
He doesn't
points.
sign executive
The
orders
Dow
until
up
after
43 points, and the Nasdaq up 217 points. That's
close.
43%. So just as
All
Tom
right,
and I have been here
so
this
now
morning, we've gone to
we're just waiting for our trade box to turn on in about 15 minutes. We'll start looking for entries, but I mean, right now we're in no man's land. So if you're trying to take a trade here,
that in Bitcoin. It is
I don't have anything that says we're going to reverse anytime soon. So you're kind of like playing with a, this would be the ascending knife. You're trying to catch it on the way up to see if it's going to reverse. And you can't really go long until we get a pullback or a pretty standard forecast trade. So,
You gave a speech a short time ago in which you said tariffs are the elephant in
so
the
we're in a
room.
standby mode.
The elephant seems to have only gotten bigger. You told me you were in St. Louis yesterday for a Fed Listens event, which is supposed to be about your framework review, and all anybody wanted to talk about was tariffs?
Yep, that's pretty much the talk of the town. It's kind of hard not to talk about the economy without having to address it.
Well, the Beige Book yesterday addressed it, used the word uncertainty 80 times in that. Companies talking about
Standby. All right. So maybe
possible layoffs.
maybe we start to reverse. All right. So we're just looking for a pullback. We're waiting to get into the volume range inside the trade zone, or so the trade box turns on and we get into a zone that that gives us a valid signal. All right. I got some work stuff to do. I got to make a call. I'll be back. I'm watching it as we go.
CapEx, everything has just come to a stop. It doesn't mean it won't happen later when there's a little more clarity, but it has actually just stopped. If the tariffs, the large tariffs had stayed on or come back on, then firms are trying to figure out how they're going to absorb some of that cost. And the minute they do that, they're looking at other ways to cut costs, and labor is obviously one way they do that. So it wouldn't surprise me that you might start seeing more layoffs, tick up in the unemployment rate going forward, if the big tariffs in particular come back on. The smaller tariff world of 10 to 12%, most of the firms I talk to, they figure out they can deal with it. They kind of often give me this kind of formula. Our suppliers will eat a third of it, we'll eat a third of it, and we'll pass a third of it on to consumers. So if you're talking about a 10 to 12% tariff, it's not a big price hit to the consumers if that's all they pass through.
But economics tells us that tariffs in general are not good. So even if we get the smaller tariffs, does that still leave business on the sidelines and growth prospects lower?
Well, it is a tax, and it's inevitable that there's a tax. But however, I've always tried to tell people that, given the fiscal situation we're in, we need to get some better control of the budget deficit, and that means some combination of taxes and spending. It's just an argument about what taxes do you want to have to raise. So nobody likes taxes. I don't like taxes. But if you're going to get any kind of get our fiscal situation under control, you're going to have some tax revenue. And there's no obvious reason why tariffs should have to be off the table per se.
We have some tariffs in place, even though the president goes back and forth about other tariffs, but he put some on in March. When do we start to see that in the hard data?
Well, by taking off the April 2nd tariffs, you postpone that decision till July. So we'll see some of the 10% tariffs and the auto tariffs. Some of that will start coming through particular sectors. But it's not likely to me that by July 1st, you're going to see really big impacts from it. You will see it, like I said, in CapEx and things like that have just been put off to the side. So you'll probably see some softening in the data, but you're probably not likely to see anything dramatic happen. before we get a better decision from the administration what they're going to do with the big tariff package that they initially proposed on April 2nd.
Well, what will we see first? A big rise in inflation or a slowdown in growth, perhaps epitomized by the unemployment rate?
I think you could see both of them almost happen at the same time, just in the sense that, like I said, that firms have to make a decision right away to pass through. Now, they have a lot of firms told me they have price contracts, so they're protected for a little while until they have to renegotiate those price contracts. But they're all anticipating, particularly the bigger tariffs, they're all anticipating they're going to have to cut costs somewhere. And the easiest thing to do when firms have 65 to 70% of their costs is labor, to start shedding some labor. So you might see layoffs start to happen about the same time you start seeing prices going up. So I'm not so convinced that it's going to be one first and then the other. You can see them both happen roughly at the same time, or very close together.
I assume that we're not going to see any move from the Fed on May 7th, but when would you have enough data, you think, to be able to make a decision one way or another on whether you need to move rates?
Well, as I was saying, the president's put off any decision on the large tariff world that was proposed on April 2nd until July. So all you're going to see probably till July is whatever the existing tariffs are in place. And as I said, I don't think you're going to see enough happen in the real data in the next couple of months until you get past July. When you get to the second half of the year, I think we'll start having better ideas what's going to happen with the tariff world that the administration's considering. And by then you'll start seeing more in the form of tariff price pass-through and also stuff on the real side. But there's not like you're not going to see anything on the real side because of all the uncertainty in terms of freezing decisions, spending decisions.
Well, let's put some parameters around your thinking. On the employment mandate side, what level of unemployment would bother you?
Well, it's more the speed at which it would start going up. I mean, if it just ticked up 1/10, ticked up 1/10, ticked up 1/10, kind of like what we saw last year, it would be concerning, but it wouldn't be a big problem. But if it starts going up 2/10, 3/10 a month, then that's going to happen because you're seeing layoffs starting to take off. And the labor market's in kind of a good spot. It's not like 2022 where you could reduce vacancies. Now, if labor demand pulls back, it's going to be in terms of bodies. So you'll see employment start to drop. So I'm more concerned about the speed at which the unemployment rate starts going up. And if there's a big reaction to big tariffs, it could go up very quickly.
4.5% is, I guess, the SOM rule trigger. Would that be a trigger for you?
You know, I gave a speech last September where I kind of discounted the SOM rule as a mechanical description of the data, and what it really is capturing is shocks that hit the economy. A big tariff regime being put back on in July and being put in place for the foreseeable future, that would be that kind of a big shock. So it's not so much the SOM rule as the fact that the SOM rule is really always picking up some big shock to the economy. And the big tariff regime, as it was on April 2nd, would end up being a big shock to the economy.
Well, on the inflation mandate side, since you expect some inflation from tariffs, is it the speed with which it rises as well? Because we've seen a lot of volatility in inflation numbers recently.
Yeah, that's been the struggle for me for the last basically 18 months, is that inflation progress to our 2% goal has been this kind of seesaw. You're making progress going down, but then you get a couple of bad months, then it comes back down, and it's just slower than I ever thought it would have been, say, in December of 23. But the tariffs are a one-time. I still strongly believe, just economics tells me that the tariffs are a one-time price level effect that's going to pass through. Now, it's one-time level doesn't mean it's small or big. It's just a one-time. So I still think even if it was fairly large, you would see a one-time price level effect. The demand slowdown would offset some of that. As consumers back off, employment goes down, unemployment rises, wealth continues, financial wealth declines, you will see demand effects from that. That'll put downward pressure on inflation. So it may not be as high as people think. But the critical thing is it's going to take some courage to stare down these tariff increases and prices with the belief that they are transitory. I'm not going to lie that we all have 2021 in our minds when we think about how we go forward. But, you know, the question is, what are the things that will cause this inflation to persist through the initial tariff increases? And I just have a hard time seeing exactly what that would be.
Well, do you think if we start to see the economy slow, that you would be more reluctant to cut rates because you expect that tariffs and the higher inflation will come down because of the demand effect?
See, I'm willing to look through whatever tariff price effects there are, and I've said that. So for me then, I'm not going to overreact to any increase in inflation that I think is attributable to the tariffs. But if I see a significant drop in the labor market, then the employment side of the mandate I think is important, and we step in, and we would have to start. I said this last week in my speech. I would expect more rate cuts and sooner once I start seeing some serious deterioration in the labor market.
Now, some people looked at your speech last week and said, Chris Waller's on the opposite side of all this from Chair Powell. Do you think there's division on the Open Market Committee about what should be done?
Well, that's the beauty of not having groupthink. People have different views about how the economy is evolving and how policies should be done. I think that's actually a healthy thing. As far as I've heard exactly that comment that Waller's outside of consensus, away from the chair, and I've had other people tell me I didn't really hear much different from what the chair said 2 days later. So this is always a funny thing about communication. I can say something and people perceive it one way to the left or they perceive it the other way to the right. So how people receive what I say is not always one clear vision of what it is. So I'll leave it up to people to decide whether there's a difference between the chair and I. But all I can do is say what my views are, and I've tried to be very clear what they are.
A lot of people are thinking at this point that Trump being Trump and mercurial, that the tariffs could change at any moment. Would you be reluctant to move rates not knowing that you've got any certainty about what's going to be happening?
Well, like I said, what we're going to look at is the data. I mean, that's how we always determine.
But does that leave you behind the curve?
There's always that risk. You're looking at these things like, if is inflation going to get worse? Is unemployment going to get worse? And it's a balancing act to make that decision. Hopefully you're not late. And I think if we saw, that's what I said, if I saw enough movement in the unemployment rate to make me think that things were going bad or growth prospects started tanking or consumer spending started really going down, then I'd be ready to go. I wouldn't be sitting here waiting to determine whether the inflation is transitory or not. It's time to worry about the real side of the economy.
Can't let you go without asking about Fed independence, because it's obviously the other elephant in the room these days. Will the president backing off of his comments on firing Jay Powell make it a little bit easier for you all to do your job?
Well, I try to ignore all this stuff and just focus on the data and focus on doing my job. That's what I try to do every day. Criticism of what we do, that's the job. If you don't like being criticized, don't take the job. And the president's free to say whatever they want to policy, just like anybody else. But central bank independence, as we saw, I think, on Monday, is critical to the well-functioning of the U.S. economy. It has served us well. It allows us to do things in a non-political way. And it's something I worked on in my academic life, research-wise, for 20 years about the value of it. And I don't think there's ever been anything in the data that shows you that lack of independence is a good thing.
Well, would ad hominem attacks like we've seen on the chair make it harder for the next chair to do the job? Does the job itself get harmed?
I think it's up to like I said, it's up to the person that's in the chair. You take the job knowing you're going to be criticized from markets, from Fed watchers, from average consumers. That's part of the job. And if you don't like to be criticized, don't take the job. So it's really going to be a question of whoever the next chair is. Are they going to come in and keep the tradition of central bank independence, making policy in a non-political way? And for me, that's critical for whoever the next chair is.
Chris Waller, thank you very much for your time this morning. We'll send it back to you.
Thanks, Mike.
All right. That was Bloomberg's anchor, Michael McKee, speaking with Fed Governor Chris Waller in Washington, D.C., getting the thoughts of the Fed governor on a whole wide range of economic policies. We are here. This is the Bloomberg Intelligence Radio program. It is Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney, and we're live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube as well. Looking at the marketplace here, we've got stocks actually in the green here, so a little bit of a positive reversal from what we saw earlier this morning. The S&P up 43 points, that's 0.8%, and the NASDAQ up 228 points, that's 1.3%. We'll take a look at that throughout the morning. Let's take a look at some stocks on the move today. We're joined by Bloomberg's Vildana Heinrich. She joins us here in our studio. Vildana, what are you looking at?
I'm taking a look at IBM, shares of which are dropping some 6% today after the company reported results that showed strong profit, but also suggested the economic uncertainty and U.S. government cost cuts could be denting its business. So obviously this has been a theme that we've been discussing over the last couple of weeks, how White House policies are actually impacting companies themselves. So we're seeing more evidence of that. We have the CEO saying that in the near term, uncertainty may cause clients to pause. And obviously, IBM has been working to transform itself over the last couple of years. Shares had been doing okay up until this point. They were up some 12% for the year, so holding up a little bit stronger than the market overall. But we do see shares declining today.
What about Pepsi? It cut its full year profit outlook. What are you seeing there?
Right. Shares of Pepsi are down 2.5%, 3% today. It's lowering its full year profit outlook, and it's saying it's given the unpredictable U.S. trade policies, as well as worsening consumer sentiment, which is driving up costs and denting demands for the company's snacks and soft drinks. Obviously, it's an owner of a lot of brands that we're all very familiar with, and so it gives us a really good look and a pretty broad view into the state of the consumer.
Isabel and Valdana, are you soda drinkers?
I'm not
Sparkly
much of
water.
a soda. Yes, sparkly water.
So
The
you're
one
not like a
upstairs.
Coke versus Pepsi. You've got a big
No.
opinion.
But if I were to choose, I think I like Pepsi more.
Is that right? Okay.
I would
I'm a
choose
Coke
Coke, I
person, but
think.
I'm not.
Can you put rum in Pepsi?
I
haven't
think you
heard of rum
can.
with
I
Coke.
think you
Okay.
can. So, John
Just
from
checking.
John from the shore asking, can you put rum in your Pepsi? I think the answer is yes. American Airlines, what's happening?
But it's known as rum and Coke, isn't
I
it? Not
know,
as
I
rum and
know.
Pepsi. I'm sorry. American Airlines shares are down 0.5% today. It withdrew its full year earnings outlook, and it's obviously joining a growing number of companies that are saying that unease about the economy is making it difficult to make forecasts and how the rest of the year will be playing out. Last week, we had United Air taking a very unusual step in offering dual earnings forecasts. So one for a stable environment and one for a reduced one based on the presumption of a recession. So again, just coming back to that theme of how policies are actually impacting companies and what they're saying on their earnings reports on how they're seeing things play out.
Yep, a lot of uncertainty. That's the key thing that we're hearing from some of these companies here as they report their earnings. Valdana Hajric, thank you so much for joining us. Valdana is a cross-asset reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Coming up, Tyler Kendall, Bloomberg Television Washington correspondent, will join us to get the latest on some of the tariff news coming out of Washington. And Joy Yang, head of Indexed Product Management at Market Vector Indexes, to discuss her outlook for the markets here. And again, we have some green on the screen here today. S&P up 40.7 tenths of 1%. The NASDAQ up 212 points. That's 1.3%. Yields come in just slightly. 10 years in, about 5 basis points, 4.32% on your 10-year Treasury. Bloomberg Dollar Index lower. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash, and we're being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/round the clock. Major stock averages right now, they are higher. Some of the individual shares in the move. You have IBM slumping, its results falling short of market expectations. PepsiCo lowering its full-year profit outlook. They're blaming tariff headwinds. And then you have P&G, Procter & Gamble falling. They cut their sales and profit outlook, citing tariffs and volatility in consumer demand. American Airlines withdrawing its full-year earnings outlook due to economic uncertainty. Still, Ed Yardeni at Yardeni Research told us earlier the Trump administration appears to be finally listening to some of the battered investors.
Clearly, the financial markets have had a big impact on the administration. This is the bond vigilantes and the stock vigilantes ganging up on the administration and saying, we need some moderation here. We need some cooling off, and that's exactly what the administration is doing.
Deutsche Bank strategists led by Pinky Chana slashing their year-end S&P 500 target by 12%, citing the blow to U.S. companies from the tariffs. S&P 500 right now 53 points higher, up 1%, 54.29 in the index. The Dow Jones Industrial Average up 147 points, and that's a rise of 0.4%. The Nasdaq 100 308 points higher. That is up 1.7%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
All right, JT, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well, so go over to youtube.com, search Bloomberg Podcasts live and all that kind of stuff. You'll find us there. Let's get the latest reporting from Washington, D.C. on the tariffs. It is a fluid situation, to say the least. Tyler Kendall, she's been following it for us. She's a reporter for Bloomberg News. She is down in Washington, D.C. So, Tyler, is there a sense in D.C. at the White House that perhaps this tariff policy could be more, measured or more consistent or more formal? It seems to be a little bit ad hoc here, and that's one of the reasons maybe the markets are a little spooked.
Yeah, hey, Paul, there's a lot of mixed messaging currently at the moment when it comes to tariff policy related to China, even with China saying earlier today that there currently are no negotiations happening between Beijing and Washington, calling reports about recent developments to be groundless. That was particularly interesting after President Trump yesterday in the Oval Office contended when he was asked if he's actively involved in negotiations with China. He said that, quote, everything is active. Now, we do know that there were some preconditions that Beijing does need to see before talks can really kick off, including that they would like a point person other than President Trump to lead the negotiations, but he still says that he is very much directly involved here, even though we haven't gotten any real confirmation that Xi Jinping is willing to pick up the phone moving forward. At the moment, the latest escalation is that Beijing is now calling on the U.S. to eliminate all unilateral tariffs, something that the Treasury Secretary Scott Bessent said yesterday really is just not an option on the table. But when it comes to this back and forth in the mixed messaging yesterday, again, in the Oval Office, President Trump saying that he does think that 145% levy on Chinese imports is very high and that it's leading to essentially a trade embargo, which has prompted some to think that that levy very much will end up being lower here. But then at the same time, he followed that remark by saying that if a trade deal with Beijing is not reached, that will ultimately be okay because the U.S. will just set what he called a, quote, fair price. He then suggested that the White House is preparing to release some revised tariff rates for all countries, including China, in the next 2 to 3 weeks, ultimately. So we'll have to see how that ends up developing here, but it's something that we're closely watching if we are going to get some potentially new tariff rates.
Talk to us more about China's attempt to repair ties with the European Union and as it tries to prove itself to be the more reliable trading partner compared to the U.S. What exactly is Beijing doing?
Right, exactly. So trying to reach out here to the European Union in a bid to try to shore up ties as a counter against the U.S. Most recently, we have reporting of, for example, that European Union leaders as well as Xi Jinping were actually together on a call having to do with climate change. Now, there has been sort of a distance between the European Union and China, particularly when it comes to their criticism of how China has assisted Vladimir Putin amid the ongoing war in Ukraine. But there does appear to be some easing here, particularly when it comes to negotiations around electric vehicles. So this is a very important partner that we are watching, particularly as there hasn't really been that much movement when it comes to talks between the U.S. and the European Union. You'll recall just a few weeks ago, the EU's trade chief left Washington with very little clarity, according to our reporting, about exactly what this White House needs to see done in order to get a deal. And then I would also just quickly highlight one other trading partner, and that is Japan. There is new reporting this morning from Bloomberg News, according to Japanese officials, that if the U.S. ends up asking Japan to curb its own trade against China, they will push back on that. We should make clear our reporting indicates that the U.S. has not asked Japan to do that just yet, but we do know it's something that this White House has been mulling. And also, importantly, China has come out and said that it will take its own countermeasures against any countries that try to realign here, particularly when it comes with the U.S. And what Treasury Secretary Scott Bessent has floated could be a plan to then approach China as a bloc. One statistic that I'll leave you with is that China does about 20% of its commerce. Japan does about 20% of its commerce with China. That is more than it does in trade with the U.S., but at the same time, the country does export more material to the U.S.
Tyler, thank you very much for your reporting. Appreciate you taking a few minutes. Tyler Kendall, she's a reporter for Bloomberg News. She is based down there in Washington, D.C., giving us the latest on the tariff situation. It is a fluid situation, to say the least. The market seems to be hanging almost on every tweet here. So right now, the market is higher. S&P 500 up 63 points. Let's get back to discussions on this market. Joy Yang joins us here, head of index product management at Market Vector Indexes. Joins us here in our Bloomberg Interactive Broker Studio. Joy, thanks so much for joining us here.
Thank you.
How are you approaching these markets these days? The volatility is significant. We've got a VIX 27. We've got the MOVE index showing some volatility in the fixed income market. How are you guys approaching the markets?
I think, as with everybody, we're in new territories. Nobody is certain what the outcome of this tariff negotiation is. And even if we do reach a positive win-win outcome for every party involved, which is the best case, I think there's still going to be uncertainty around how long will this last? What are the second and third order impacts? So I think this is structurally a new environment for everyone, which is we're at elevated volatility. Uncertainty will remain high. So I think for us, we're watching indicators, and those are gold prices, Bitcoin prices, on what investors are thinking. And at the moment, businesses can't make decisions. They can't give proper guidance. And those who have, investors can't rely on those. So I think people are really either parking their money into safe havens or seeking liquid assets, which they can move in and out without kind of structural damage that we're seeing across asset classes.
I feel like with all this political rhetoric, people are maybe forgetting that it's earnings season and we are in the thick of it. And around 44% of the S&P 500 companies that have reported mentioned the word recession. That's a little higher than the previous quarter. What is your read on earnings so far? It's also been interesting. Companies have withheld forward outlook, or they've had two sets of scenarios,
Yep.
the base
Yep.
case and the tariff case. What is your read on
I
those?
think it's probably impossible to rely on this quarter's, earnings guidance. And this is going to be short term. So I think it's still prudent for investors to focus on the long term and really focus on the fundamentals, which is, we'll get over this. There's got to be something after tariff negotiations. And I think structurally every industry still has a story and narrative that's focused on the long term. If you're in AI, that's a real story, right? Innovation will not break down. Disruption will not break down. But, at the moment, there's so many things shifting that to give any kind of short-term guidance is really not reliable.
Talk to us about the risk-controlled indexes, ETFs, the Market Vector Gamma Road U.S. Equity Strategy Index. Like, what is that?
Yeah, so I think this is the type of strategies that I think investors should be focused on, because I think we're so focused on equities and fixed income, right? But, you really have to think about other alternative ways of looking at the world and structuring portfolio solutions. And one is to look at these indicators out there that are independent of any single country or any single asset classes to understand how elevated uncertainty is, or what sentiment is. And I think right now our Gamma Road Index is telling us to get out of equities. But if you're out of equities and you're sitting on cash, that's not a great place either, as we've seen the dollar weakening and weakening. So I think investors should also look at alternative assets like gold or Bitcoin that are not driven by the same macro factors.
It's interesting. Gold, as we know, is just ripping, but Bitcoin as well. And I feel like with Bitcoin, you choose the narrative. Some people would say it moves in lockstep with tech companies like the Qs, but some would say no, actually it's an inflation hedge. I feel like it's still figuring it out. But can you talk to us about how different this is, this global macro shock compared to others? Because you said let's look at the long term.
Yeah, so I think definitely when you mentioned you're choosing the narrative, is because this is still a nascent asset class. And we've seen a structural shift in Bitcoin also, because it is a very volatile asset, but fundamentally it should act like a store of value. So we're seeing this as speculative players move out and we get more institutional players and more clarity around regulation. We're seeing it bring out the strengths that Bitcoin naturally has, which is it's immutable, it's decentralized, so it's not dependent on any single government, and it doesn't require trust, because trust is built into the code. And fundamentally, what we're seeing is that investors have lost trust, whether it's U.S. assets or just the correlation that happens between equities and bonds. So they're looking for things that they can actually depend on. Right now, we're seeing gold and Bitcoin as one of those assets.
How about international markets? People have been selling the U.S., whether it's the dollar or stocks, and maybe putting their money internationally. How do you think about that?
I think if we take a step back, I think the problem was people had too much bias towards U.S. assets and weren't really reflecting on where relative value is happening. And if you still look at international markets, even though globally every market has dropped, international markets still look cheap. They still look better from a PE valuation point of play. So if you're focused on fundamentals and not sentiment, this is a better place to be in. We're seeing
Does that include emerging markets as well?
It includes emerging markets, but all markets will be impacted by tariffs.
Yep. So that's kind of the issue here. But so we'll see how it plays out. But again, we've got green on the screen here today. Joy Yang, thank you so much for being with us. Joy Yang is head of Index Product Management at Market Vector Indexes. Joining us live here in our Bloomberg Interactive Brokers studio. So I'm seeing the market trading higher here. This will be third day in a row. So I mean, Isabel, is this a trend?
I think that's the big question, whether this is we've hit the bottom, or what is the next driver going to be? Is it earnings? Is it policy? Is it eco data, hard data, soft data? So it's really hard to tell.
See how that plays out. Coming up, we're going to check in with Damien Garda, Bloomberg Health reporter, on Merck. Merck is expecting a $200 million tariff hit amid some of their outlook. So that was a little bit concerning for the folks at Merck. We'll take a look at some of the outlook for Merck and for Big Pharma coming up in just a moment. S&P 500 up 70 points this year.
Okay, what we got going? Just got off a call. Hey, we got our we got the forecast cloud. Hey, Snooze, how you doing? I'm back, Shades. You been scalping longs, Shades, or have you been good? How you doing, my friend?
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with these Bloomberg Business Flash.
All right, so now we're gonna start hunting. We're right on the edge of being okay. There's still a lot of volume because we hit 1 hour order. You're short. You're negative 5 points on the short.
Several companies, including Texas Instruments, American Airlines, and PepsiCo.
I mean, the only thing I have to go short right now is the trend line that we're working off, and so maybe that order block hit right on this trend line. It'd be nice to get a pullback to the 20 so you can get out. But I'm really kind of liking for a pullback for me to get in because I'm only really looking at a long. As long as my box turns on, I'd like to see the stochastics roll down and get oversold. Okay. And then I really like this zone here. Right at this, I like it right here. We got the 20 crossing, but we got to be careful. We've been on such a run up. We could visit the 50 also on the pullback. We're completely pinned on the stochastics. The slow is starting to roll over, but you got to see it pass below the 80 to really start looking at the pullback. But I like that zone for a possible long continuation, or I like this zone here too. So these are the two zones I would consider an entry for a long. If you're short now, I completely understand why. This is kind of a good zone here. This would be a good zone to sit. That's probably right about where you are, Shades, for the short. But I would be getting out. I would be setting take profit at the 20 in case it bounces off the 20 back up into the trend line. Just looking at what I have.
One of the last exams, 2019, the pass rate was 4.2%. So I don't know. I'll have to skip, even though it's open book. Anyway.
So this is kind of what I'm considering right now. But volume, we're averaging over 9,000 per three bar. So when this is closed, the 3 bar volume, it says right here, 3 bar volume average over. I have it set for 9,000. So I don't like to trade unless it doesn't really flow as well unless we're below 9,000. But here's your pull. You got to be looking good in the short now. Where'd you get in, Shades?
We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So check us out over there. Merck.
There we go. Look at that. We're starting to get the pullback.
Put a number on the tariff cost for them. $200 million. I mean, for Merck, it's got a market cap of
yeah, this next candle, we should get the box to turn back on. We'll be below 9. It's these two candles here that blew us out of the average.
He's a healthcare reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Damien, what did we hear from Merck today? What did they report, and how did they talk about tariffs and maybe some of the costs they see?
Well, it's interesting because, yeah, as you mentioned, they disclosed that $200 million. That's what they expect.
This might be another.
To pay.
All right, so we're challenging that fair value gap. We got a nice looking fair value gap right there.
Affecting imports from China of certain goods, and then obviously exports to China.
Remember this? We drew this zone here from, I think it was 2 days ago. We hit this zone, and then above this zone is when it starts to get a little iffy. NQ is going crazy right now. NQ is jumping 5 to 7 points in a blink of an eye. NQ is impossible to trade right now. ES is a little smoother.
Where analysts find new and inventive ways to ask the company, will you tell us what you're actually expecting from pharmaceutical tariffs if they come through, as the president has promised to bring them about? and Merck kind of artfully dodging.
All right, I'll quit messing with this so it'll settle in.
Suppose is Merck to China and maybe broader pharma companies in general, because they do have this drug and they're facing stiff competition in China, and that's one of the really downfalls that the company faced in the previous quarter.
Yeah, I think Merck in particular faces tariff issues on two fronts. One, the retaliatory tariffs imposed by China make it difficult to sell products into China for any American company. They're sort of in the crosshairs of what Beijing is doing.
Oh, look at this. Look at this bar. We're at 21,000. We're double. Yeah, this is. Where's all this volume coming from? What's going on here? You're green. Okay, hey, get in behind it, dude. Get in behind it. Because this fair value gap may pop it back into the trend lines.
And then this gets a little into the weeds of trade policy, but Merck, like many
Yeah, I know. You always think it's going to run.
So Keytruda, the biggest drug in pharmaceutical
Shades always thinks it's running.
The IP lives in Ireland. And so that gets complicated.
All right, all I'm saying.
That gets complicated in the if, and these are
Greed is good. Greed is right.
All I'm saying.
Greed works.
Is maybe just bring it up to break even, just in case, because you can always get back in.
From Ireland to the United States. So that's really the number that analysts are trying to get their heads around, both in terms of Merck and in global pharmaceuticals in general, and it remains a mystery because we don't.
It won't stop you from getting rich. You're at break even now? Oh, so you're in at 6.2, 663?
Just for those out there wondering. And we got Shearing Plow, Bristol Myers Squibb all over the state.
I still have to visit New Jersey.
Have to visit New Jersey. How long have you been in New York?
7 years.
Jeez.
But I stay in the city.
If we can clear this fair value gap, we're at least going to the 20.
Frame out Merck. I mean, the stock is down 21% this year.
I think we're really, I really think this zone here is a little more valid.
I've got Lilly up 10%. What's the story on Merck? What's the concern in the marketplace?
All right. So we're past all the news.
Blockbuster vaccine for HPV, which is
I don't think this is really.
I mean, it's the only vaccine.
Yellow means it's not that big a factor.
This is a massive product around the world.
Okay, good. Oh, you're plus 6 points. Okay. So you're in the green. How many? 1 mini or 2, or what do you got working?
There had been this massive boom in demand in China for this.
All right, don't touch your stop, dude, because if it goes back, it's gonna blow right through it, man.
And then suddenly that demand.
Don't ask me how I know.
Last year, and Merck didn't have initially much in the way of convincing explanations.
So 1 mini. Okay. Shades is on. Yeah, we got Shades over to the ES. He revenge traded yesterday and said F the NQ.
Their partner in China was apparently unable to sell the doses at the level that they were previously.
One tick on a mini is $12.50 American.
All of Gardasil's potential revenue in China, you're probably talking about $3 to $4 billion
per contract.
As you mentioned, the context of Merck is not that big.
There you go, Shades. Now be careful; it can reject the 20 here.
I think the issue really with the stock move you mentioned, and they're down 40% since first disclosing the Gardasil problems in China, relates to the fact that the company has not had a very convincing explanation for why it happened and why it's going to be ameliorated. And so you're seeing both a sort of, reputational kind of risk taking place there, and then furthermore, not unlike Wile E. Coyote running off a cliff, I think when the Gardasil situation worsened.
No, one tick. One tick is $12.50. So 1 point on one contract is $50.
Around 2028, and kind of start to panic. Like, are we sure this company has a plan to withstand?
A tick is
What are your sources telling you? Why are they not?
A tick is like 0.25. Yeah.
In fairness to Merck, I think
it's a lot more than the NQ, but it moves slower. And it doesn't move as much.
Black box for them because, as I mentioned, they do business in China with respect to Gardasil through a Chinese company.
All right, this is what I was talking about, Shades, is the 20 rejected it for support. So you should be thinking about moving your stop up. Yeah. Okay, good. What'd you make? About a couple hundred, 300-400?
They didn't read the market well. We had a story earlier this
Well,
week
be careful, dude, because like you see typically on a trend day when it rejects the 20, I would wait. I would wait to see if we retest this trend line and if we break through it before you enter a short again. because this is really a long trade. This was a long off the 20 is what it really was.
Virtually everyone to whom I'm related.
And I probably would have got in. It almost hit my zone, but my forecast box is not on, so it's too volatile for me right now. Yes, this is the long. He was going short. He had something that told him the short was up here around these trend lines. He's good at drawing order blocks on his own. He sees them and draws them. He doesn't have an indicator. And he's right a lot of, like, often. But for me, the long was right here. Like, where you see where this is for the forecast, this was the long. But I'm waiting for this trade box to get into my volume range for a 3-bar average. Does that make sense, Snooze? Okay. All right. So he was taking the short into my long. So he got out of the short after the rejection off the 20. I'm saying that if this fair value gap rejects the price, this zone here looks good for a continuation. If it breaks this zone without a confirmation to go higher, then we're looking at this zone to go long. So it's kind of be careful. It's a be careful because it can crash through here real quick, then reject the 50 EMA and have this fair value gap support it, and then we could continue higher. So, but to sit on the 20 is the basic forecast trade. To sit there to take the long, you'd be looking at 5-6 points right now if you did that. What I like to see though, but you got to pay attention to the stochastic at the bottom here. You see we're halfway. This can easily drop straight down and get pinned here for a candle or two and then roll up. And that would put us almost back at the VWAP or in this zone. So I'm kind of watching the stochastic. I'm watching the volume range. There's other factors than just what's happening right here to consider on whether this is the right time for the entry. Okay, I got work stuff. Be back in like 10-15 minutes.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we got Isabel Lee, Paul Sweeney. Alex Steele's out. She's doing something on the energy patch there. I have no idea. She'll be back tomorrow. But we're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Talk about UPS bolstering its health unit, the $1.6 billion deal for Andlauer. What is that all about? Lee Klaskow joins us. Lee, talk to us about UPS. What's going on there?
Yeah, so this is really part of their overall strategy of doubling their cold chain healthcare business to about $20 billion in sales by 2026. They've done a number of, I would call them, because given the size of UPS, tuck-in acquisitions to kind of supercharge that business. Obviously, they're trying to grow organically, but I think a lot of the growth is going to probably come through M&A, and it's been a great business for them, and it's a business that they've been targeting because it has higher margins than their legacy. Deliver a package to your doorstep business. This is stuff that has call it like mid-teen margins versus anywhere between 8 and 12% margins of some of their other stuff, and they're trying to really kind of recreate themselves, if you will, because the market has changed on them. There's been an increase in home deliveries, business to customer, consumer deliveries, which tend to have lower margins, and a lot less of they go to a law office, they deliver 20 envelopes, and they pick up 20 envelopes, which tends to be a lot better business. So what they're really trying to do is focus on higher margins, and this part of the supply chain is a better business, and it tends to grow well beyond GDP growth.
It's definitely higher margin because if you need medicine shipped overnight in a refrigerated box, you will have it shipped. What else are they looking at when it comes to higher margin businesses, or for now, is it just healthcare?
Well, they also want to focus on the small to mid-size shippers. Those shippers tend to be a lot more profitable. They're kind of um, looking to, I guess, divest their exposure or reduce their exposure significantly to really large companies like Amazon. And they'd rather have the capacity available to this small to mid-sized shipper, which again is a higher margin business. And again, this is all driven by the fact that the market has changed on them. The share of B2C is increasing. And they're really becoming more of a focus company over the last couple of years. They divested from their freight brokerage business, which was called Coyote. They also, a couple of years ago, sold their less than truckload business, and they're really trying to focus on the parcel delivery business and some of these, value added business like we see in cold chain healthcare supply chains.
Lee, you cover the railroads, the truckers, the maritime shippers, the air freight. I mean, you cover the entire transportation logistics space globally here. Your companies, like no other, have their finger on the pulse of global trade here. What are you hearing from your companies about just business conditions globally?
You're absolutely right. They have their pulse on the kind of economy. I think they're trying to find the pulse right now because there's so much uncertainty in the marketplace that they just really are kind of doing a wait and see. We were somewhat surprised. A couple of our companies that we cover, like Union Pacific, which reported earnings that were slightly below expectations this morning. They're maintaining their outlook. A couple other companies have been maintaining their outlook, which to us was very surprising. Like, because going into earnings season, we thought earnings expectations would be lowered by, or they would just just say these targets are no longer reliable. So we're just not going to provide anything because we just don't know. We had a couple trucking companies that lowered their expectations, but overall, we've been pretty surprised about the outlook. That being said, I think it's really being driven by the fact that they really don't know what's happening. I mean, we are hearing that there are less ships leaving China to come to the U.S. Hapag-Lloyd, which is a major shipping line, there were press reports out that said their China to U.S. voyages or bookings are down around 30%. So, what we're seeing, at least at the early stages, as it starts in China, the impact from the tariffs or the threatened tariffs on Chinese companies.
What else are the headwinds that you're hearing? I mean, apart from tariffs or just apart from the economic woes, just those two, no biggie. But what else are you hearing from the companies that you cover?
Well, shippers are scrambling, right? They realize that, they don't want to pay 100% plus in tariffs. So they're trying to find alternatives. Kuehne Nagel, which is a big freight forwarder, they reported earnings very early this morning. They're based out of Europe, and they noted that, they're seeing a lot more activity out of Southeast Asia, like places like Vietnam, as maybe, supply chains are shifting where they can to kind of avoid the tariffs. And some of this, will be interesting to see how it plays out over time. And the reality is it's really going to be dependent on, what's happening in Washington. If these protectionist policies stick, are they negotiating tactics? Where are we? What's announced in the morning, is it really going to be executed on, or is it they're just going to walk back in the afternoon? So there's so much uncertainty out there on the demand side, and we are seeing that taking a toll on the overall economy, and it's definitely pushing out the freight recovery. We were pretty bullish in January, in early January. We thought the new administration, lower taxes, less regulation. That's going to be good for business. And we thought, truckload rates, which is really, the beginning of the supply chain, we're going to be in a lot better shape than they are. Gotcha.
All right, Lee, thanks so much. Appreciate it. Lee Klaskow, Bloomberg Intelligence. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay with us for more Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up, folks, we're going to drive this conversation forward. We got stock markets moving higher. Coming up, we're going to speak with Geetha Ranganathan, Bloomberg Intelligence media analyst. I'm going to ask her about Comcast. They reported some numbers today. That's got to be a tough business, cord cutting and all that. We'll get the latest there on the Comcast and the cable business. George Ferguson, Bloomberg Intelligence senior aerospace analyst, is going to talk to us about what's happening in the airlines. We've got American Airlines pulling its outlook for the year. So a lot of uncertainty in the airline business there. Barbara Goodstein, managing partner at R360, to discuss her outlook for tariffs, the markets, and what she foresees going forward. Michael McKee, I'm just going to say, hey, what do you want to talk about on the economic front? He's down in D.C. at the IMF meeting, so we'll see what he's picked up down there. He will give us his thoughts. But first, let's go to John Tucker for a Bloomberg Business Flash.
And it's his interview that's actually driving markets, I'll say right now. Investors seem to have latched on to the idea the Fed could cut rates sooner than anticipated to prevent recession. You heard him right here on Bloomberg Radio with Mike. The Federal Reserve Governor Chris Waller said firms may begin laying off more workers with aggressive tariff levels, and he'd support rate cuts in that scenario to protect the U.S. labor market. So that's pushing the major stock averages higher for now. The S&P 500 higher for a third straight day. You have Alphabet. They're expected to set the tone for the industry's earnings season, and they're going to report after the close of regular trading today. In the meantime, Mike Wilson, chief U.S. equity strategist at Morgan Stanley, says it won't be easy, but big U.S. companies should be able to navigate the trade war turmoil.
I would still bet on, Fortress America from a corporation standpoint, that they're going to be able to kind of mitigate and manage this, at least the larger cap quality companies for sure. So, this process is ongoing.
Among the most active, shares of Comcast down 4%. They lost customers due to growing competition from streaming companies and wireless providers. S&P 500, 63 points higher, up 1.2%. The Dow up 231 points. That's up 0.6%. The NASDAQ 100 up 322 points. That is up 1.7%. This sort of caught my eye before. The number of new foreclosure cases increasing 45% from the fourth quarter of last year to the first quarter. The increase suggests more borrowers may be defaulting on their mortgage obligations. Keep an eye on that one. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Guys.
All right, John Tucker, thank you so much. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live as well, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. As John was just reporting, we've got a pretty strong tape here today. Let's look under the hood and see where individual names are moving. We can do that with Natalia Kenijevic, equities reporter for Bloomberg News. She joins us here in our studio. Natalia, what are you looking at?
Guys, let's start with consumer names. Procter & Gamble shares are down by 5%. The company is cutting its annual sales and profit outlook. Of course, it's blaming volatility, uncertainty around tariffs. It's really difficult to predict consumer behavior. Procter & Gamble sees organic sales growth this year at approximately 2%. In January, it said it was supposed to be somewhere between 3 and 5%. Earnings report showed some deterioration in sales here in the United States. However, it was a slight improvement in China. China is the second largest market in terms of sales and profit.
Really?
It was down by 2%. Sales were down, revenue, excuse me, was down by 2%, but it was a slight improvement from a 3% decline that we saw in the past quarter. So, of course, everyone wants to know, will the company increase prices? And the CEO said it will likely roll out price increases during the next fiscal year, which starts in July. But before that, it will try to shift some sourcing, readjust supply chains, and maybe some formulas to reduce exposure to tariffs.
And you know what? One of the great functions on the Bloomberg terminals is the PGEO function. And what it allows you to do is to see kind of where revenue comes from and things like that. So it breaks down North America, Europe, Asia Pacific, Greater China, and EMEA. And you're right, Procter & Gamble is a global company. So they're going to feel it. And if they're lowering their guidance, that says something. What else you got?
Airlines, of course, we are watching American Airlines earnings report. Shares are actually up slightly, less than 2%. It dropped full-year earnings outlook, and a similar move we saw from Delta, Frontier, Southwest Airlines. Of course, the company is saying it will provide a full-year update once the economic outlook becomes clear. Now, we also see that overall, American Airlines profit margins continues to trail peers. BI put a nice note breaking down this earnings report. But I would also like to highlight a commentary from International Air Transport Association chief Willie Walsh. He said this overall impact from tariffs on airline industry would be very similar to what we saw after September 11th, 2001 attack. So he said it will be very severe, but potentially short-lived, and we may see a bigger impact on transatlantic traffic. But however, he said potentially the airline industry will recover in the next few months.
Paul, I just tried PGEO, and the biggest revenue of P&G is fabric and home care, followed by baby, feminine, and family care and beauty.
Yeah, it's
what
got
about?
it all.
I know, it's interesting. Thanks for teaching me this function.
It's a good one. Anything else, Natalia?
Yes, commodities, Newmont.
Oh, right. Yep.
Big move. Shares are up year to date, guys. It's one of those rare examples of winners. Shares are up by almost 25%. Better results are, of course, driven by rising prices of gold.
All right, very good. Natalia Kenyajevic, equities reporter for Bloomberg News. Appreciate that. Market Drivers today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. Red headline crossing the Bloomberg terminal there. Trump asked Supreme Court to allow his transgender military ban. So there we go. We'll have more reporting on that. But continue to say more activity coming out of the White House there. Comcast, one of the companies that reported today, tough business in terms of keeping their subscribers for not only their television business, but also their broadband business. So we see subscriber losses there across the industry, and that's a tough thing to manage against. Geetha Ranganathan joins us. She covers all the media companies for Bloomberg Intelligence. Geetha, talk to us about Comcast, because Comcast, in my opinion, got one of the best management teams that I've come across, period. They always have had a really strong management team, but the reality is the business conditions, there's a lot of headwinds out there.
There absolutely is, Paul. So Comcast is the largest broadband provider in the United States. They have about 32 million subscribers. So they are by far the number one. But the problem for them over the past few years has been really rising competition, very, very intense competition from the likes of Verizon, T-Mobile, and AT&T, who are making this big push into the broadband business and really going after Comcast bread and butter. So just a few years ago, Comcast used to add about 1 million subscribers every year in its broadband business. Today, when it reported, it reported a loss of about 200,000 subscribers just in the first quarter. So tremendous pressure that they're feeling from both fiber and fixed wireless access, which are, the two products that telecom is really pushing. And it's going to, the pain is definitely going to last through the rest of the year for sure.
What are they doing to stem those subscriber losses?
So the problem for them is on the fixed wireless product, which is really very, very easy to use. It's kind of a plug and play type of a product from the telecoms. The main problem that Comcast is facing there is the price point. So there is a lot of transparency. The price point, first of all, with fixed wireless is much lower than a traditional cable broadband subscription, and so they're facing a lot of pressure there from a pricing standpoint. And then with the fiber product, it's really more of a quality concern because the cable product is definitely a good one, but it's not as good as fiber. So they're getting hit really on both ends of the spectrum, and they are now they are kind of trying to change their whole strategy. They've called for this strategic pivot in this go-to-market strategy, and what that basically entails is kind of changing up their pricing and packaging. The problem with Comcast is it's really been a very regional pricing strategy, which has resulted in a lack of transparency, I think, and that's made customers a little bit furious. So what they're trying to do now is kind of offer more of this normalized or uniform pricing across their entire footprint, make it more comparable with the telecom broadband offerings, and hope to gain some of those subscribers back.
Geetha, what are they going to do with their cable networks?
They are planning to actually spin that business off, Paul, a little bit later this year. As you know, the cable network business, yes, it throws off a good amount of cash for Comcast. That's about almost about $2.5 billion in EBITDA. But that has been declining because of the pressures from the cord cutting, from cord cutting, really both on the advertising side as well as on the affiliate fee side. So, we're hoping that once they do that spin, the rest of their media business, which is, the NBC Film Studio and especially the theme parks, can actually get a much better valuation because right now what has happened within Comcast is NBC is kind of totally neglected, I would feel. And Comcast, despite having really robust financial metrics, seems to be a very unloved name with media investors.
The big thing for me on Comcast is the Universal Studios.
Yeah.
Tell us about Orlando, Florida. They're opening up a huge park there next month. I'm ready to go. Tell us about that.
I know. And there, it's, of course, Epic is the big news for this year. They've made huge investments. This is a park that is going to be one of the biggest attractions added in Florida for over, many years now. And we're expecting about 10 million, 10 million visitors per year. So this really substantially increases the attendance for the Universal Parks. I mean, the Universal Parks typically get about 20-25 million visitors every year compared to Disney, which gets about 50 to 60 million in Florida alone. So this is really Comcast going after Disney in a big way and kind of increasing their footprint all over the world. And it's not just Epic. In about 4 to 5 years' time, they're actually going to open this new theme park in London, which again should, increase their international footprint. So they are really going after the theme park business in a very, very big way, Paul.
Yeah, absolutely. I'm going. I'm telling you right now. I know John Tucker's going to be down there as well.
I don't leave New Jersey.
You got Great Adventure, Six Flags.
That's all you
You're not
need.
going. All right, very good. Geetha Raghunathan. She is the media analyst for Bloomberg Intelligence. Appreciate getting some thoughts there on Comcast stock trading down. And again, tough business there with all that cord cutting. That's been just a brutal situation. Switch gears. Let's talk airlines. American Airlines pulled guidance. I mean, we're seeing a lot of that. A lot of companies taking down their guidance just because of economic uncertainty out there. And the companies that do have guidance, a lot of those companies are pulling their guidance. American's one of them. So we want to get to the bottom of it. So we talked to George Ferguson. He's actually in studio. He's not out on a sailboat somewhere. He's in studio doing some work here. He covers all the airlines and aerospace companies for Bloomberg Intelligence. George, talk to us about first just what's happening at American and what's happening with air travel.
So, what's happening in American? Look, I think the quarter American looked about what we expected. They're also citing softening demand in the marketplace, and I think they're pointing largely to leisure. We're seeing load factors kind of fall at a lot of companies, right? They're trying to hold fares up, and load factors are sort of caving in because they just can't get the demand to fill the airplane. So it feels like later in the quarter they were starting to have the breakdown in demand, right? Because they probably they kind of sell these seats at certain gating points to try to have the airplane filled at certain gating points. And when you don't make your load factor, it means as you got to flight time, you just couldn't get people to take that ticket price. So it seems like Demand has kind of faded over the over the quarter. Again, they're citing leisure, and so that's been the knockdown in load factors. And so to us, we saw that at Southwest as well. To us, it looks like capacity's got to come out of the marketplace, right? But these companies are still managing a lot of expense inertia, right? Americans still saw cost per available seat mile rising mid-single digits, right? So that's a heavy level of inflation inside the business. It's going to be hard to cut capacity, which you need to do to firm up fares, and not have those costs balloon. So we're seeing that kind of across the industry. It'll be very interesting to see how they try to address that.
So if domestic demand and travel has waned, what about international?
Yeah, so I mean, we're watching international closely. What we're hearing is domestic leisure. We're getting told that domestic premium is holding up, and international is done pretty well as well. The first quarter is typically not a heavy go to Europe kind of period. So a lot of them cut capacity, and they saw really nice yields, which are synonymous with fares during the quarter. So it looked okay. But I think if you look closely at the euro, I don't have the absolute current spot on the euro.
113.
Yeah, but so we're up 13% on the euro. Things are getting very expensive to go to Europe. Now, look, everyone's not going to stop going to Europe. Usually that's a more well-heeled crowd. They book further out in the curve, right? I think I have a joke, like I think everybody gets up, Christmas morning, and they open their presents, and then the well-heeled families go, so we're going to Madrid this year, or we're going to Barcelona, right? And so I think they've already got their plans in place for this year. But our guess is, especially for second quarter, but our guess is third quarter, we could see some softening in Europe, and that's really been holding up the U.S. airlines' profitability well. One thing I'd point out real quick on that is really the U.S. carriers are flying Americans to Europe because Europe was cheap.
Yep.
Europeans aren't coming here.
Yep.
So the question is, if the euro flips here, will the Europeans come here given maybe a little bit of the political climate? Maybe we've seen a little heavier inflation. You go to dinner in New York, it's not dinner in Madrid. That's the question I have, and I think we'll see it as we get into 3Q, whether or not that's going to hold up.
The American Airlines execs joining Delta Airlines and saying they're not going to pay more for airplanes because of tariffs.
Yeah.
How can they say that? If the price is going up because of tariffs, are they just not going to take planes?
So Delta did flatline the back half of the year on capacity, and I think part of that was in reaction to reaction to tariffs and not wanting to take deliveries and not to shoehorn themselves. Look, I think a lot of the CEOs don't believe this is going to go on for long. We've done some analysis at Bloomberg Intelligence, and if you look at the markets, if you look at Europe and at the US, and you look at Airbus and Boeing market share, Airbus has almost as strong a market share in the US as Boeing does.
Wow.
So the Europeans are going to have to find some way to fix that problem. I think these CEOs think it won't last. They don't want to pay up right now for it.
All right, very good. We'll see a little game of chicken there. We'll see how that plays out. George Ferguson, Senior Aerospace Defense and Airlines Analyst, Bloomberg Intelligence. I mean, you get him in New York, you got to get him in the studio, because to get that guy out of Princeton, I mean, you got to have a shoehorn. I mean, let's be honest here. These guys have gotten comfortable down there. He's got the sailboat there. He's got the whole thing.
Wow.
He's got it all played out. Now, he's down to the shore. It's a short drive from Princeton to the yacht club, as they say. S&P 500 up 78 points. That's 1.5%. NASDAQ up 330 points. That's 2% here. Markets moving higher. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages higher right now. You have 10 of the 11 major industry groups in the S&P 500. They are up. Looks like tech stocks, information technology, and communication services, they're in the lead. And after the close of regular trading, we're going to get results from Google parent Alphabet. PepsiCo lowering its full-year profit outlook. That's because of tariff headwinds. Procter & Gamble falling. It cut its sales and profit outlook, citing tariffs and volatility in consumer demand. And then you had American Airlines withdrawing its full-year earnings outlook due to economic uncertainty. A posting, President Trump saying on Truth Social just a few minutes ago, Boeing should default China for not taking the beautifully finished planes that China committed to purchase. Right now, the S&P 500, 74 points higher. That's up 1.4%. 5450 on the index. The Dow Jones Industrial Average up 275 points. That's a rise of 0.7%. NASDAQ 100, 2% higher, up 370 points. I did have some economic data. Sales of previously owned homes falling in March by the most since 2022. You want to guess what the median sales price is nationwide?
What?
I know you're eventually going to be in the market for this. $403,700.
Average price of a house?
Yeah.
Wow.
That's up 2.7% actually from the
It's a whole
year-ago
housing
period.
affordability thing that is just brutal for
I don't know
young
how
folks.
Millennials are just really just doomed.
You can always move into my basement with your husband. Love to have you. You were talking about Epic.
Yep.
Well, once confined just to like around Halloween, monster and horror theme attractions are actually becoming fixtures of theme parks the entire year as they try to bring in some new revenue. Chill-inducing attractions in the works across the U.S., including from Walt Disney, as the entertainment industry looks to capitalize on growing interest in all things spooky. As if things weren't spooky enough out there. Let's get more spooky stuff. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney. We are here in our Bloomberg Interactive Broker Studio. Alex Steele's on assignment today. She'll be back mañana. We're also on YouTube, so head over to youtube.com and search Bloomberg Podcast Live. Our next guest I really want to get to because I believe she has a real unique perspective of what's happening out there in the markets. Barbara Goodstein joins. She's a managing partner. The firm is known as R360. She joins us via Zoom from Fort Lauderdale, Florida. John, at Fort Lauderdale, Florida today, sunny and 81. Just for those.
We're not too far
We're not too
behind.
far from that now. We're catching up with them. Barbara, thanks for joining us here. I'd love for you to just start by saying, what is R360? Who are your clients?
So it's a community for ultra high net worth people and their families. And these are people who have been very successful. They're worth an average of over $500 million. So it's a very prosperous community, and it's a community that's dedicated to purpose and creating extraordinary legacies.
So given the background of your members, these are folks that have built businesses, have some wealth. What are they asking you about, or what are they discussing amongst themselves, I guess, these days?
Well, obviously, everybody's talking about what's happening in the markets. We have had what we're looking at now is a parade of all the different investment banks and all the luminaries coming in to talk to us and give us advice about what they think is going on. But everybody's, interested at the same level about what they should be doing, how they should be investing, and how they should be planning for the future. Our members have a much longer time horizon, so they are not pressured to make decisions. They invest very thoughtfully, but they're also watching what's happening and very curious about the meaning of what's coming next.
What are their biggest questions? Are they differentiating this global macro shock compared to the GFC or the COVID-19 pandemic? How are they looking at this? You said long term. So in the grand scheme of things, this might just be a small blip then.
Well, it's not a blip, but it is probably in the long term not something that this group is going to start changing their diversification plan. So everybody here is very well diversified. They understand that they need to have protections against market shocks. And so they have the luxury of doing so. Something like a Bitcoin. Bitcoin isn't sensitive to tariffs or recessions or PE ratios or China selling treasury bonds. So our group is very positive on Bitcoin, and we encourage people to have a certain percent of their assets in Bitcoin. So we have been very conscious of maintaining very well-diversified portfolios, and that comes into play right now as the markets are shifting and fluctuating.
One of the assets that actually has been performing well this year has been gold. Given that your members, they are diversified, as you mentioned, they do enjoy having a long investment horizon. How does gold fit in with most of the folks that you talk to?
Well, gold is another asset class that everybody here appreciates and values. And I think that we assume that most of our members have some small percentage of their portfolio in gold. So we, like in Bitcoin, is like digital gold. People are holding gold, they're holding Bitcoin. And now for downside protection, we're looking at hedge funds and hard assets. So this is portfolio insurance at this point.
With Bitcoin, when did you start looking at it? And what is the general sentiment around that? Do you find yourself having to convince them more of the Bitcoin narrative, or are they more averse? What is the general pulse?
So it's interesting because some of our members are among the original investors in Bitcoin. And in fact, some of them are consulting to President Trump on Bitcoin. So we're very fortunate to have such well-educated people in our midst. They've been educating the group for years already. And in fact, one of our members recommended to his group that they buy Bitcoin. I think it was like 10,000. So wow. Everybody's quite appreciative that we have people that are this well educated in our midst, and they've been very vocal and active, telling us all the reasons why Bitcoin has so much upside opportunity.
Yeah, just looking at Bitcoin today, off just a little bit, off about 0.5%, but still $93,000 per token. So it's had a nice run there in the last several weeks. Barbara Goodstein, thank you so much for joining us. Barbara Goodstein's a managing partner at R360. That is a group of wealthy families, and they talk amongst themselves about kind of opportunities, risks, and all that kind of good stuff. It's good to get a perspective of maybe a little bit different than just the general market here. So Barbara Goodstein, we appreciate her time. Let's head down to Washington, D.C., check in with Michael McKee. He is Bloomberg's international economics and policy correspondent. He flies to D.C. He doesn't take the train. He doesn't take my advice, but he does the flying thing. But he gets down there, and he does great stuff. Mike, we got some economic data today. I'm not seeing any cracks yet in the labor market. That's a good thing. Initial jobs claims kind of came right in line with expectations.
Yeah, we got the Beige Book yesterday afternoon, the Fed's collection of anecdotal evidence about the economy.
Right.
And it basically said that companies are making plans for layoffs if they need to, but they're not there yet.
Interesting.
And part of it is that people don't know what the ultimate tariffs are going to be, so they can't really model out how it's going to affect their business.
What about the IMF World Bank? Spring meetings are underway, and we have Secretary Scott Bessent saying that they serve critical roles, and we shouldn't really expect a wrecking ball or some sort.
Well, it's an interesting situation because during his interregnum between administrations, Donald Trump was quoted as saying he wanted to pull out of the IMF and the World Bank. Now, Scott Bessent is saying we just want to reform them, get them to focus on their original mission of lending and not get into things like climate change and gender equality and things like that. Not clear how the rest of the world is going to respond. The administration hasn't appointed any representative to the IMF or World Bank yet. So this is a situation that is going to be down the road, I think, before we get a clear idea of what the administration wants to do. The meetings this week are pretty much all about tariffs anyway. In every conversation that comes up, that's what people are talking about and how it's going to affect them rather than the IMF and World Bank itself.
Here we go. This is a red headline crossing the Bloomberg terminal. U.S. to demand Putin accept Ukraine's right to military force. This seems like a big piece of news as it relates to Russia and Ukraine, and we will have more reporting on that coming up. So, Mike, just some more geopolitical news out there for you. And Mike, again, what's the feeling at the IMF about, these members? Do they feel like they can depend upon the U.S. as a trading partner, or do they have to prepare for maybe a new day here?
I think everybody is preparing right now. It's the only thing you can do because you don't know whether the United States is going to be there with you as a partner or across the table as an opponent. And so the thing that you hear over and over again is take care of your own, take care of yourself. Make sure your policies are in good shape, make sure your economy is in good shape, and don't depend on the U.S., especially don't depend on the U.S. as the buyer of last resort, some person who's going to take in all of your exports, because now that may not happen. So we do see a cleaving, and the question is whether this can ever be repaired. And a lot of people I've been talking to here are worried that it won't be able to be fixed, at least not for many decades.
What is the collateral damage looking like to you, whether on the policy front or economic front? You did mention that it's basically looking out for yourself now, and that's not really how the global trade order or the global order that we want it to be work. But now it seems like it's really a regime shift.
It is a regime shift, and that's a problem for the United States because we have depended on free and open trade in our relationships with the rest of the world for a long time economically, and it's benefited people here in the United States. There have been downsides, certainly. The globalization of manufacturing hurt many communities in the U.S., but you can't really fix that through adding tariffs. So this doesn't put us in a good shape economically. And then because strong economic partners are good security partners, it puts us under the gun in national security as well, because we can't necessarily count on our former friends to partner with us on national security issues. Are the Europeans or other people going to join us in trying to restrain China and to keep sanctions on Russia, that sort of thing? So we lose either way, and that's what the general worry in Washington is. I heard some people last night say they don't think the rest of the country gets this yet, but they are very concerned about what has happened to not only the U.S. economy, but to our relationships with other people around the world.
Any changing thoughts on the Fed, Mike, what they might do, how they might move in response to what we're seeing?
No, well, of course, I spoke with Chris Waller, the Fed governor, today, and he basically said the same thing that everybody else has said, that they don't have enough information to make plans or to come up with views about what is going to happen to the economy. He said if the economy starts to slow, if we have a serious rise in unemployment, he would support rate cuts. He thinks that inflation is going to be a one-off risk from tariffs because you apply tariffs once and then prices go up, but then they don't stay up. In that, he's a bit of an outlier. But he isn't calling for any rate moves now either, and says it'll probably be July or later before we have any kind of clear picture of the impact that tariffs are having.
And what about, it seems like every day there's just a new headline, and that's really changing the Fed's position, the economic policy. How much are your sources telling you that they factor in, or are they more in a wait-and-see mode? Because you can't keep on changing your allocations or your stance or your views every day.
Yeah, people are very much in a wait-and-see mode. There are certainly professional traders who are trying to jump in and out on headlines, but the general feeling is there's nothing you can really do right now except wait it out, because you don't know whether any kind of tweet or any kind of remark to the press is then going to be walked back by someone in the administration one way or another. The president said yesterday that the Chinese were talking to us, and Scott Bessent, the Treasury Secretary, said, no, the Chinese are not talking to us. So do you place an investment on China? I wouldn't think so.
All right, Michael McKee, thank you so much. We appreciate it. Michael McKee, Bloomberg International Economics and Policy Correspondent. The news, again, crossing the tape here, geopolitical front. The U.S. will demand that Russia accept Ukraine's right to have its own army and defense industry as part of a peace agreement between Moscow and Kiev. The Trump administration also wants Moscow to return Ukraine's nuclear power plant, ensure Ukraine has passage over the Dnepr River, and return land occupied by Russia in the Kharkiv region. So it seems like some really big news on this front. So let's talk to somebody who knows this stuff. Nick Wadhams is a U.S. national security reporter for Bloomberg News. He is based in Washington, D.C. Nick, this seems like big news coming from the administration. Put it in context for us, please.
Yeah, I mean the big thing here is that a lot of what we've been hearing so far out of the administration and the conversations between the U.S., Ukraine, and Russia have been a lot of demands on Ukraine. So we recently heard that the U.S. wanted to recognize Russian sovereignty over Crimea. They wanted to block Ukraine from getting NATO membership. Host of other issues, a critical minerals agreement, and that had provoked a lot of fears among European allies and critics of the Trump administration that essentially this deal was going to be really heavily favored toward Russia and Ukraine wasn't going to get anything in return. We are starting now to get some sense of what the U.S. is asking Russia, and what we know so far from our reporters' source-based work is that they are going to rebuff or push back strongly against this Russian demand that Ukraine essentially demilitarize. This has been a central war aim that Russia has made clear since the start of its invasion in 2022. And the U.S. is now saying, listen, we want to do this peace deal, and we're not going to let you get away with that. This is going to be something you're going to have to agree to. And then this energy issue, we know energy has been very important to President Trump. So the Zaporizhia power plant, a massive, massive power plant in Ukraine that Russia seized during the war, the U.S. is essentially saying you got to give it back. So we now understand the U.S. is going to present these terms of a potential deal to Russia, and we'll see what the answer is.
And how do you think Russia will respond to that? Because the U.S. is demanding this military right force, but will Russia agree to it, you think?
I mean, that's the great question, and that's we're going to learn a lot about the viability of these negotiations. I mean, the Russian idea that Ukraine essentially demilitarized was always seen as an extremely maximalist goal. I mean, it's hard to conceive of the U.S. or any other mediator basically acceding to the idea that a country be left totally demilitarized. I mean, that was something that you saw out of World War II with Japan, but otherwise this has not been repeated in modern history. So it would have been an extremely difficult demand to meet. The U.S. is saying essentially that's not going to fly. And, I think what we'll see is, depending on how Russia responds, we'll have a better sense of whether they see these negotiations as a viable path toward an actual ceasefire, or whether they have no interest in peace and are just going to press ahead with the war. So we should have a strong indication of that in the next few days when President Trump's envoy heads to Moscow.
Nick, is there any sense as to what kind of leverage the U.S. has here on the campaign trail? Candidate Trump at the time was very confident about his ability to get what he termed a good peace deal negotiated quickly. Do we have the leverage to actually do that?
Well, I mean, the U.S. definitely does have some points of leverage. It also has some weaknesses. I mean, the big leverage it has, obviously, for one thing, is the sanctions, the massive sanctions regime that have essentially choked off the Russian economy, separated it from the West. Though Russia has been able to keep its war machine going, the economy is in pretty grim shape. And the U.S. could just keep up with the flow of weapons and support to Ukraine, under the idea that, hey, like Russia, they did this invasion in 2022. They've taken over about a fifth of Ukraine's territory, but they did not topple President Zelensky's government as they had hoped, and Ukraine doesn't seem to be going anywhere. So the U.S. could certainly exercise leverage in those ways. Russia, though, also sees that it has its own leverage. Trump does not want to give Ukraine the amount of military aid that it's gotten so far, and they have made battlefield gains in the last several months. So in some ways for Russia, there is a continued interest in prolonging this thing and drawing it out in hope that President Trump turns his ire again toward Vladimir Zelensky rather than toward Russia. That whether that's a gamble they're going to be willing to make, though, is another question entirely.
All right. Fascinating development here. Nick, thanks so much for your time. We appreciate it. Nick Wadhams, U.S. national security reporter for Bloomberg News. He is based in Washington, D.C. And again, the headline crossing the Bloomberg terminal and a significant shift in this story in Ukraine. U.S. to demand Putin accept Ukraine's right to military force. So we'll continue on that reporting throughout the day. Right now, let's get a reset here. We'll go to John Tucker for a Bloomberg Business Flash. John.
The major stock averages are higher for now. A theme investors seem to have latched onto is the idea the Fed's going to cut rates sooner than expected to keep the economy from spiraling into recession. Several companies, including Texas Instruments, American Airlines, and PepsiCo, they've lowered their earnings outlooks or withdrawn them altogether because of uncertainty surrounding the tariffs. S&P 500 up 70 right now. The Dow up 256 points. The NASDAQ 100 up 365. Amy Wu Silverman at RBC Capital Markets says more investors have been seeking downside protection.
It's certainly been incredibly tumultuous, and I think that's why even since the beginning of the year, you've seen this dramatic uptick in folks who want to use the options market for protection, buying S&P puts, hedging overall, looking at VIX options.
Walmart doubling down on discounts. The retailer rolling out managers' special signs. They're calling out price cuts on key items across departments. This according to a document seen by Bloomberg. And we check the markets for you all day long right here at Bloomberg Radio.
Okay, I'm back. Ooh, my stock is running. Got a runner.
Isabel Lee, she's sitting in for Alex Steele.
All right. Shades, crushing it today. 1,500, man. That's awesome. That's like half the practice account if you're doing 50K. Makes me feel good. Okay, so guys, we might be transitioning to the short, so we kind of got to be careful here. We've got a long forecast, but the issue is what you see how the forecast cloud is closing up. Oh, hey, Blasted, how you doing, my friend? If you're out there, I've had calls a lot of the morning, so I've been in and out, but I'm trying to just keep the chart updated here. So it kind of looks like I haven't taken a trade yet. The volume is just now getting into line. We had news this morning after the open, and it kind of lingered. So the short, you see where the forecast cloud is thin. That means that we're almost to more selling volume than buying, and then the control EMAs are starting to close up. So this is turning into a short. Now, if you were being a little aggressive, you could probably front run the short here at the 20 EMA. If you wanted to, like if you had a bias, you're like, okay, we're definitely going down to this line of resistance, or at least the 50, somewhere in this zone. Like going short here would be okay, but you got to be careful. I'm kind of feeling okay about it, to be honest with you, front running it a little bit. I'm going to give it another candle. Your stochastics are rolling down. That's good.
Thinking about the day-to-day. No one is judging you by your market performance this week, this month, this
stochastics are looking good.
When the news flow is this,
so we're kind of looking at a short here.
When the amount of headlines and policy changes and it's really easy to get caught in that maelstrom. It's really useful to just step out of yourself, step out of the moment and say, when do I need this money? Hey, if you need the money in the next 12 to 24 months, well, then you have every right to be concerned about all this volatility. But if you don't need this money for, and we just had a conversation with an endowment.
Back testing looks good. Too good, actual. Something is not right. Okay, let's take a look.
Who cares what happens in a random Thursday? It's not meaningful to their long-term
Let's take a look.
Performance.
What about, based on the sources that Paul and I have spoken with, and I'm sure many are saying that they're just staying on the sidelines or staying put. But do you think this decision paralysis all this uncertainty will drive the U.S. to a recession?
You called that long. If this was your long,
I'm a big
that was a beautiful long.
I've had him on the podcast a few times. He started the year 0% chance of recession. All right, now he's at 95% chance of recession.
I love it.
That we don't walk back these tariff measures where there's lots of signs.
It's a nice looking chart. Look at the stat table to the left.
Since 1950, we've had
this here, pair
a recession just about
buy, sell. So, okay, buy, sell, sell, sell. That last sell was a little tight, depending. Sell, yeah. If those are coming in right on cue.
The problem is markets
left, I'm sorry.
at sniffing out the impact of a weakening or contracting economy. And by the time we realize we're in a recession, market's already down 15, 25, 30%. It's too late to do anything. And the flip side of that is always so amusing. Markets bottom when the headlines are terrible, right? Just think about how far we're off of
This
the
one
lows
here?
and how bad the headlines were when that happened.
Total oh, this is your back testing result.
Pandemic. The headlines are awful.
So you ran the back test. What kind of signal is this? Holy cow. Equity curve?
But what can you do about it? The fascinating thing to me was that Wall Street
You got a win rate at 83.3.
because the assumption was
So are you machine entering? Yeah, this looks really good, dude. So you know what I would do is I would pay attention to what the variables around this, like the chart speed, the volume average,
like Smoot-Hawley tax cuts of 100%. These aren't
you know,
negotiating tactics.
volume average, chart speed, what other factors can you look at that might be where you might be in a range in those factors to where this would be consistent? You know what I'm saying? So you're kind of looking at the outer end variables that create this within, and that's kind of how I look at it. But if you can figure out the outside variables or time frame variables, yeah, I need to turn this up and down further. Yep.
Should we take him literally? Should we take him seriously?
But damn, dude, you made a 98% return. But the win rate though is well, what kind of ATM are you running on this? Do you know what kind of average ticks you're winning, or because that matters too? Is you got to have an ATM strategy to match it. You know what I'm saying? So I would back test it again with an ATM strategy and let it, and then when the signal goes off, do the buy and see how it reacts. Does that make sense? Then you know what's going to happen.
Yeah, Besson may end up being kind of like the.
This is pretty tight though.
Of the first Trump administration.
That's exactly who I was thinking of.
Yeah, a little bit of a voice of reason.
Precious that picked that up.
Yep, interesting. All right, Barry.
48 trades. How long of a time frame is this for 48 trades?
Masters in Business, a
Yeah, I get it. I get it. But when you get into like more detail, like as you get into like trying to figure out how to actually pull profit out of it, each step, that's how I did it. Each step matters like that. Yeah, poured it into NinjaTrader. Yeah. Because in NinjaTrader, you can set all this up and get it to trigger on your signal and run a strategy like what I run. And then it'll automatically take profit and like have a trail and take it out and see if you can see if it's possible to let it run during certain times of the day, because you wouldn't want to run it during news and you wouldn't want to run it during the open and close, but you may have times where it's okay to let it run under certain variables. I think this is a great start. I like it. It's great. Thanks for sharing that. Okay, so we're getting some consolidation here. We may go higher. We may go higher from here. Got a chat. Let's see. Yeah. Don't FOMO. I'm not FOMOing. There is no FOMO. No, I'm just kind of, I didn't miss a trade really. Like this here, but the volume was still too high. I would have just opted out of that because I was a little afraid of it. But here, we're getting some consolidation. I like the stochastics rolling up. You know, maybe, you know, you've got these trend lines here that have been holding it down. But you see the 20 is now supporting it. So maybe there's an entry based off like this trend line. That may be a good entry to go long. I'm kind of liking the long. You know, the forecast is still short. It could go back green here any moment. So if we're going trend, but you got a really good core to start working with to build it out into, you know, something usable that can run. I really like it. All right, so we're kind of ranging here. So we're going to give it a couple more candles. If we retest the 20 again, I might actually look at it. Or if this trend line becomes support, I'm kind of liking that. I don't have any trades in today, but my buddy Shades crushed it this morning. He's moved over to the ES with me for minis.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee, Paul Sweeney.
Hey, Snooze, you take any trades yet? Are you out there?
Steele, she is on assignment in the oil patch. She will be back tomorrow. We're streaming
Man.
on YouTube, so head over to youtube.com and search Bloomberg Podcast Live Podcast, and that's where you'll
Oh, we're about to double top. Let's see what happens.
Here in our studio,
74.
Results.
That's,
The big issue.
it's like 8 points.
I could see AI, ChatGPT, whatever the other ones are, really damaging Google's core search business.
Oh, hey, Mrs. Shades, how are you?
So when you look at the past 5 or 6
Shades crushed it this morning.
segment growth, it's been high single digit to low teens, and the makeup of that has been ad pricing contributed low single digit growth. The ad impressions, the total paid clicks, which is your user growth, volume growth, contributed.
What kind of dogs do you have?
That has reversed in the past 2 quarters, and I feel that trend is going to continue.
Mrs. Shades.
Whereas the volume user growth slowed to low single digit. And what that tells you is ChatGPT is taking a share in terms of the volume of search queries, but Google is able to offset that.
All right, so we're double topping here.
I mean, think of it as a tool.
How long can that go? I like pricing power, don't get me wrong.
Yeah. Well, it can go on.
Let's see if we pull back into, like, it'd be nice if we pull back to this trend line.
With a subscription model. Right now, they are not monetizing it with ads.
Oh, cool. You got little yappers, little yapper dogs.
But to spend on Google ads, even though ChatGPT is getting engagement, it's got user traffic.
Bachan Friss.
If you're an online business who wants customers for your business and you want to show an ad, it's just Google.
Yeah, he's having a good day.
So even though Google
1500's a good day.
traffic, they're able to charge more for the ad that they're showing. And I think
these guys.
It's still, I mean, they are still insulated from all the pullback in advertiser spending because they have the highest ROI when it comes to ad spend. There's no other place where you have a higher ROI per dollar spent on ads.
I'm looking forward to this because it will really set the tone for the big tech, and I feel like everyone's feeling a little jittery. What about the cloud unit? Isn't that the clearest indicator of how AI will continue down the line?
Yeah, so that is where the diversification element plays in for a company that generates over $350 billion in annual revenue. So clearly they have this sizable business, $50 billion run rate. The problem for Google is even though that business is growing,
All right.
30%,
Let's see here.
profitability, it's such a
Okay, so we're getting a pullback.
search contributes. The margin profile of cloud is like
We got,
much inferior than the overall.
man, oh man. Let's see how far this pulls back. See, the thing is now the stochastics are already rolling back up. So
But because
if they start to roll over, we may get a shot at the zone I've been looking at for a while down here.
Doesn't get as much attention as search does because of the profitability aspect.
What's investor sentiment on Google these days? Positive, negative? I'm just looking at the A&R function. Still 60 buys, 15 holds, no sells.
Yeah, and this is the least, I would say, in terms of buys. So if you go back in time, it was much higher in terms of consensus buy. And look at the multiple. I mean, when you compare Google's PE or take any other multiple relative to other Mag 7, this is the cheapest company in terms of multiple. And it's been like that for the past, I would say, 12 months because of the ChatGPT effect, slightly because of the regulatory headwinds, the Chrome divestiture that has been in the news. But look, if search performs, and search grew double digit last quarter, and they are able to offset that with Gemini and the LLMs that they have a lot of things going for them on the chip side, the cloud side. So it's just a matter of calming down the fears about search being
Okay, so now we're touching the 20 again.
What would you say?
Who trusts it this time?
I mean, they've rolled that out. That's an AI product. Make sure you show the engagement of how they are monetizing AI overviews, because one of the fears is AI overviews doesn't monetize as well as the traditional blue links.
And we know that Google faces regulatory pressure. How much do those actually affect sentiment?
I mean, look, when it comes to Chrome, if you are talking about...
See, I don't want to do my thing where I can say, okay,
that is where you do it.
20,
So if they lose
held, and then all of a sudden we break down. I waited too long to take it.
become vulnerable to all sorts of competitive attacks. So Chrome, to me, is at the heart of them deploying Gemini and LLMs, and that is a very big case that's going on, the monopolization trial, where the remedy is to divest Chrome. And Chrome is crucial, 3 billion plus monthly active users. Even though it doesn't generate direct revenue, the impact of that is huge.
What does Jen say about Jen?
All right, we got a long order block, just fire.
Yeah, I mean,
so what is she saying?
Okay, you see how these stochastics are pointing straight down?
Not going to be divested. They will be able to.
We don't want to take the long into that. I'll be right back.
But with these trials, you never know.
What's the timing of this?
It's still going through this phase where there is a hearing going on. They lost the case. Now it's about remedies, and it may, I think, take another few months before we hear the final outcome.
You had to have some intestinal fortitude to step in front of that thing. Because, I mean, I don't know. All right, Mandeep, that's your job. That's what we pay you for. Mandeep Singh, he's a senior tech analyst at Bloomberg Intelligence. He is, along with Anurag Rana, leading our global tech research. And folks, you have to have a global view on technology. You have to have boots on the ground in Asia. You have to have boots on the ground in North America and Europe. We do at Bloomberg Intelligence, and that's why our technology research is some of the best on Wall Street. So check it out, BIGO on the function. Isabel Lee, thank you so much for sitting in. I think we're going to free up tomorrow. I think Alex will be back. But we've got Balance of Power with Joe Matthew. Boy, he's got a full plate here coming up. He's down in Washington, D.C. That coming up right after Global News.
This is CBS News on the Hour, sponsored by Steel.
I'm Deborah Rodriguez. We begin in Illinois, where the man who admitted to a shooting 7 people to death at a July 4th parade in 2022 has been sentenced to 7 consecutive life terms. The judge pronounced 24-year-old Robert Crimo irretrievably depraved, permanently incorrigible, irreparably corrupt, and beyond any rehabilitation. His victims ranged in age from 8 to 80s. President Trump lashed Vladimir Putin after overnight attacks that killed at least 12 people.
Who thinks we continue long, and who thinks this is the transition to short?
Russian strikes on Kyiv, not necessary and very bad timing. The Post goes on to say, Vladimir, stop. 5,000 soldiers a week are dying. Let's get the peace deal done. This criticism follows a Russian airstrike against Ukraine that killed at least 9 civilians and injured more than 70. The attack happened even as the president criticized Ukraine's President Zelensky, saying it was tougher to reach a peace deal with him than it was with President Putin. Linda Kenyon,
All
CBS
right.
News, the White
I
House.
think
The president's not happy with Beijing either for backing out of a deal to buy U.S.-made aircraft.
it's a code that he's writing on his own. I think that we're going to transition short here. I think maybe I'm going to go ahead and get in right here if I can.
Boeing says more than 50
Order
new planes
submitted.
were headed to China, but
Order
China is
submitted.
refusing to take delivery.
I'm going to front
as
run.
the trade war heats up. China has already returned a few planes.
The Trump administration asking the Supreme Court to allow enforcement of the president's ban on transgender people
Oh,
in
I'm
the
on the wrong
military,
one.
while legal challenges move forward.
Order
Loyola Law
canceled.
professor Lori Levinson.
There had been a court below that said that that executive order should be put on hold.
All right.
And that people
Order
should
submitted.
be
See if
allowed
he
to
comes up
serve,
and gets
even
me.
if they're transgender. But now the administration has run to the Supreme Court on that.
Not right now. You don't think the shorts yet? I'm almost in.
Pope
Order
Francis'
filled.
coffin in
All right,
St.
I'll
Peter's
stay
Basilica.
tight. Let's see.
Word yet on when a conclave will begin. Austin Ivory reports on the church.
Inevitably, some of those
Oh, maybe I
cardinal
got in
electors are
early.
not yet here. We had this morning in the meetings that the cardinals are holding every day, 103 present, which means more than two-thirds, so they can proceed with making decisions. But we will see in the next few days, in the lead up to the funeral on Saturday, more arriving. There are various reasons why cardinals can't come straight away.
New report from Whose Heritage finds that despite growing efforts to remove them, more than 2,000 Confederate symbols still stand throughout this country. Dow up 268. This is CBS News.
All right. Well, we're glad to have you here, Mrs. Shades. This good short. Put your buy limit lower for the first swing low. Yep. Got it, brother. If I don't get stopped out first. Maybe I went a candle too early. Yeah, I went a candle too early. All right. I gotta fix this. All right.
Rumors are spreading about the Pope and a quote being attributed to Bob
We're too
Dylan.
short.
Many people posted this quote
Taking
online,
heat.
attributing it to Dylan. Pope Francis was a voice of mercy in a time of noise. He walked with humility, spoke with fire, and dared to
Probably
love
should have
the
waited
world.
till the
He
20
reminded
turned
the
into
world that
support, but I'm gonna
compassion
get
isn't
right
weakness,
in
and
behind
faith
it.
doesn't have to shout to be heard. May he rest in the eternal peace he so often preached. But CBS News confirmed says there's no evidence Dylan ever said that.
The Bob Dylan?
The statement hasn't been shared on Dylan's social media channels or website, and his fan club is telling fans not to share it.
Chilling like Bob
A little bit more.
Christopher
Now.
Cruz, CBS News.
A day after he led the American Music Award nominations,
All I ever wanted was a black Grand National.
Kendrick Lamar making history as the first rapper to have 3 albums simultaneously charting in the top 10 of the Billboard 200. Deborah Rodriguez, CBS News.
All right.
From the
All right, you
world
can
of
break down
politics
now.
to the world of business, this is Balance of Power.
All right. Give me a handful of ticks so I can get break even.
Washington, D.C.
Thursday edition with the Norwegians in town. Welcome to the fastest show in politics as Norway's prime minister arrives in Washington for meetings at the White House with Ukraine on the menu. Bloomberg now reporting new conditions the U.S. is putting on Russia. This is just breaking, and we'll get more on the agenda straight ahead by Bloomberg's Tyler Kendall standing by at the White House. More on
Come on
Ukraine
now.
this hour from Ben Jensen at the Defense and Security Department at CSIS. We'll gauge the markets coming up with Ed Harrison and a new batch
Little
of
bit more
polls
room.
painting a pretty bleak picture for the president's first.
I got room to let it run.
We'll review the numbers with our signature political panel. Jeannie Shanzano and Rick Davis are with us for the hour, and we start, as always, on Wall Street. Let's get the baseline on the markets with Charlie Pellet in New York.
That 20 turns into support, I might add, or turns into resistance, I might add. Come on now. There we go. That's the money candle I was hoping for. Stay under.
Extending the advance for a third straight session. The S&P 500 index.
Oh, you're good for the day, dude. You got half your account.
Wall Street investors are betting that the Fed could cut rates sooner.
I want to see you get qualified, man.
We've got the Dow up 255, the Dow up 6
There we go.
But tech stocks the standout ahead of Alphabet.
All right, I'm going to pop in. Oh, no, wait, hold on.
Nasdaq advancing 294 points, up by about 1.8%. Russell 2000 index of small cap shares also higher, up by about 1.1%. 10-year at 4.32%, with the 2-year currently yielding 3.80%.
If we clear that slow EMA, I'm going to add the solid red.
And West Texas Intermediate crude flat on the day now, 62.26 a barrel.
Next candle in a minute 30. Yeah, this EMA is the slow control. If we stay under that, we're definitely, if we close under that, well, I don't want to get tapped out on a quick spike.
He needs the tax revenues identified in tariffs to help fund his
Slow control, yep.
By the way, are not tax cuts really, they're extensions. And if we don't get that extension, there is a massive tax increase that happens, which really becomes an issue around the economy.
Jenny Johnson of Franklin Templeton. Alphabet will be the big story. It is the parent of Google coming up after the close of trading. We're going to be all over that when that number drops. Right now, we've got Alphabet shares up by 1.5%.
There we go.
Also reporting after the close of trading, Intel surging now by 2.8%.
39 seconds. There we go.
For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington, the Thursday edition. Here he is once again, your host, Joe Matthew.
All right, Charlie, we do appreciate it. Off and rolling here on our Thursday edition. You made it to Little Friday.
18.
Being with us here on Bloomberg Radio, on satellite radio.
All right,
channel
we're adding.
101, and on YouTube. Search Bloomberg Business News Live. You'll have a seat in the studio.
Now push down.
Live stream, and we've got a
There
lot
you go.
to do.
Run, you motherfucker, run.
This hour. Hey, you know how it goes.
Go.
High noon in Washington. This program is here for a reason. Things are about to
Come
happen
on.
every day at this time. We bring you to one end of Pennsylvania Avenue or the other, and today it is the White
All
House,
right,
of course.
come on.
Big
Grab
result
it a little bit
for the
more.
Norwegians. And we're going to have the rolling
Oh, fuck. Come on.
display of events here, not unlike the visit from the Italian Prime Minister or any other world leader. You get the big arrival at the West Wing, and
I'm thinking about just taking these three off.
Prime Minister Jonas
Come on now.
to arrive. They're going to have a little lunch together, and then there's a bilateral meeting in the Oval Office. So they're going to have all the reporters crushed in there. A lot of questions will be asked. We'll see how many are answered. Ukraine, as I mentioned, is on the agenda, but you've also got tariffs in the air. And that's where we bring in Tyler Kendall on the North Lawn at the White House right now, standing by for the delegation to arrive. Tyler, here we go.
Yeah, hey Joe, from where I'm standing, I can see the Northwest gates opened as well as the Oval Office door open, which signals to us that the Norwegian Prime Minister is arriving now. Actually, you're about to see him cross over my shoulder. For our radio listeners, it is a massive SUV followed by a van with the rest of the delegation. So live pictures right now. This is immediately happening. If I can see, it looks like
Come on now.
the door where he typically greets these leaders. And important to note here, it's not just the Norwegian Prime Minister who is going to be here. He's accompanied by his finance minister, who is a very familiar name. That is Jens Stoltenberg, of course, the former NATO Secretary General, who knows President Trump very well from when they worked together under the first Trump administration.
There you go,
We are
Ron.
expecting
Come on.
defense cooperation amid the ongoing war in Ukraine to be one of those top topics that they are discussing here today, because as you mentioned at the top of the hour, Bloomberg News just breaking the story that the U.S. is set to demand Russia accept Ukraine's right to build up its military and defense industry as part of any negotiation or deal going forward. Of course, as you well know, that would be considered to be a concession by Vladimir Putin if he did agree to
There
it.
you go.
Because
Come
he's
on,
wanted to
breakdown.
see
Damn
Ukraine
it.
disarm as well as see a halt to Western military flows into the country. At the same time, though, we are expecting that Ukraine's ambitions for NATO membership to be taken off the table there. And I bring that up because one of the key parts of these discussions as I try to get a deal underway is that our European allies really want to see two things happen first, which is a ceasefire and then discussions about what some more permanent U.S. security guarantees could look like, because the U.S. has put forward to our allies potentially freezing battle lines where they are, potentially recognizing Crimea as Russian. And our allies, including Norway, have been asking this White House what other security guarantees are they willing to put on a table before they talk about any sort of territory concessions, because up to this point, Joe, the White House has really been reluctant in that category, saying
Forecast
instead,
clouds
security guarantees,
change.
for the
We're
most part,
trying to
really
front run the
implicit.
short.
The White House had an economic interest in Ukraine.
Stop
We'll have to see
filled.
if we see any progress on that today.
I got my stop got
Norway
hit.
arrives here at the
Damn
White
it.
House.
I should have pulled those off when it started running down.
With some really important reporting today by Bloomberg.
Now we're long again.
As well, that Jens Stoltenberg will be in this meeting, right? The former Secretary General at NATO, said to be the Trump whisperer. Tyler, we're still asking about tariffs. We've got a pretty good vibe going in the markets today, but the president was kind of stepping on his own remarks last evening. There were a lot of questions about China. He suggested that they're talking every day, and Beijing says they haven't even.
Yeah, no, it's okay.
Right, Joe.
I should have pulled those off. I almost did.
Saying that, denying that there are any negotiations.
Let's see what this next candle does.
Washington and Beijing saying that reports about positive developments in talks are.
But that's the risk of front running it too early.
Saying that they want to see the U.S. remove all unilateral tariffs going forward. That is something that the Treasury Secretary told reporters yesterday is not an option on the table. But of course, it comes, as you're mentioning, President Trump yesterday in the Oval Office saying that everything is active when asked if he's actively involved in negotiations with China, also saying that 145% levy is very high and essentially amounts to a trade embargo. But as you're about to hear, he also told reporters that if a deal doesn't happen with Beijing, that would also be okay.
We're going to have great deals. And by the way, if we don't have a deal with a company or a country, we're going to set the tariff. We just set the tariff. It's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks, we'll be setting the number.
All right.
And we're going to pick, could be for China too.
So, Joe, President Trump suggesting that the White House might actually put out there some revised tariff rates for countries, including China, in the next 2 to 3 weeks. So we're still waiting on further details on that. What would those rates actually look like?
So this is definitely long now.
Effect? And just quickly, when we are talking about those other countries, we know, of course, the U.S. has been prioritizing talks with Japan, and new reporting from Bloomberg News out this morning that Japan will push back if the U.S. asks it to take any action to curb its own trade with China. That is a particularly interesting development, and while we should say that Japanese officials tell Bloomberg News the U.S. has not made that request yet, we do know it's something that this White House is mulling.
Tyler Kendall with a comprehensive report on another very busy day at the White House. Tyler, did you see how they timed that out for the arrival with Tyler Kendall? A vision of spring today on the North Lawn. We're going to be inside the building a little bit later on this hour and next as they get to lunch.
Yep, you're right. You know what? I was just thinking that, Shades. I could have totally blown the account up right there by moving that stop loss and then adding to it, and I didn't. Right now, this is recoverable. So, I mean, really, the move now is if I can get close to the 20, we want to get long, and we'll hold up into this fair value gap up above. It'd have been better, though, if I'd have taken those 3 off when I had profit, because it was only 3 or 4 ticks away from hitting my take profit line. I had it in my hand. I almost moved it up and dropped it on the price.
You realize there's just a lot more in the air here. Edward Harrison is the author and with us right
So you don't want to get the fake out here to go higher. We kind of let's see what this candle does.
It's just not always as simple as a headline. A lot of business writers are asked to do that every day. How come the market went up or down? You can't really always put that in one answer, and there's a lot more than tariffs going on here, isn't there?
There really is. I mean, if you really think about it, in 2020, we had a recession. We had a historic rate hike campaign in 2022, 23, and yet, if you look at the grand sweep of things from 2009 to today, we've really not had a downturn. The March 2020 downturn was very short, and so in the grand sweep of things, people are conditioned to buy the dip.
Yes, right. I love that. But I think, a lot of people have made the point that if it wasn't tariffs,
All right.
something had to pop this balloon for a minute.
No, I think we're going higher from here. If we didn't come down and test the 50, I really thought we were going to at least test the 50 to go higher. Because right here, we kind of turned the 20 into resistance, but the trend won over. Now it's just finding an entry to go long, really.
Walmart's trading at 38 times earnings, which is incredibly high. And then I asked myself, why is that? I looked back at where Walmart was 5 years ago, 10 years ago, even 15 years ago. And what I found is that over that entire period, what we've seen is a huge increase, not just in Walmart, but throughout the entire U.S. equity markets, of what you're paying for an individual stock, the amount of earnings that you pay and the price that you pay for the stock. And that's not sustainable.
Okay, and there are a lot of Walmarts out there when it comes to
All
at
right.
least,
Shit, man.
valuation concerns. Does
I
that
guess I
mean
should have took the
that
long
somewhere
off the.
defensive other than gold or Bitcoin? Those are the two outperforming sectors right now.
Yeah, I mean, it means that when you look for a place to hide,
Yeah.
and if you're hiding in Walmart, you're hiding in something that's very expensive.
Sure.
Consumer
Can't do
staples
nothing
are not
now.
cheap, and so.
Well, technically, we had the order block. We tested the order block and then went higher. That's typically. See here.
Go down, then really
We
there's
went
no
lower.
place to hide, and that means that the market actually is going to be more susceptible to falling aggressively if these tariffs end in a recession.
I want to just make a quick note to our listeners and viewers that we might be invited back into the West Wing here in just a moment as the Norwegian Prime Minister sits down with President Trump. They are apparently gathering the pool here for some kind of a conversation. We knew they had lunch planned. They're going to have a bilateral. And tariffs are on the menu here, as we've discussed, among other issues. Edward, it does make you wonder, if all the tariffs went poof tomorrow, if we woke up and it was one horrible nightmare and we can't believe that we're back to reality, what would the market do after the volatility we've experienced the last couple of weeks?
I think the market would rally for sure. There's still a
All right, stochastics are completely oversold.
Because ultimately, I think what we've seen is that the dissonance from previous administrations of this particular administration on
Or overbought. I'm sorry, overbought. Oversold would be down below. This is overbought.
Saying, look, if
We're about to
the United
cross.
States is going to have this
The slow is about to
kind
cross
of
into the,
volatility in
or the
their,
fast. The yellow is the fast stochastic cross. Once we cross the slow, you'll see usually a quick spike, and then you'll see a
I
rollover.
think that's going to be the same thing in markets as well.
That rotation that you talked about, though, not only just into maybe defensive plays here in the U.S., people are having trouble finding a lot of them, so they're going abroad. What does that mean for Europe? What does that mean for China? And does that money come back?
Even if there's a global recession, it means somewhat more outperformance there. It was interesting that the Goldman Sachs chief economist Jan Hatzius said the dollar is actually overvalued. 2 standard deviations of overvaluation.
And I guess that's a lesson right there. I had a chance to pull 3 of those off with $200 or $300 of profit, and I didn't. Doesn't hurt to pull them off because you can always put them back on. Putting profit in the bank lets you move that stop loss a little more, so you've got a little more room to move to see if this is going to work out or not. So if I would have dropped those, it would have been almost, it'd have been the loser would have been cut in half probably. Well, no, it might not have, because I wouldn't have run 4 against me the whole way. It only would have been 1. It might have been a break-even trade if I would have dropped those out. So, if we're going to analyze everything we do, I knew to do it. I almost did it. I was hovering over it and I didn't do it.
A recession is the sort of thing that would get you a bear.
I'm working the DOM in case this is what the DOM looks like.
But that's not a recession. In the near term, if you look at things like
You can move the trades on the DOM.
today, if you look at cars, people
I
that are
don't know if
buying,
anyone's
there
using
might
it.
actually be a bump up as
A lot of people like
begin
just
to
the chart
buy
trader.
front loading, and that means that there's going to be an air pocket in the back half of the year potentially, and that is the risk, not just the economy in its steady state, but the air pocket from a front loading of people's consumption.
Doing a great job on this newsletter. I hope you're having fun with it. The Everything Risk newsletter. Edward Harrison. Find him on the terminal. Find him online. It's great to have your analysis. Don't be a stranger. We've got a lot more to talk about with Edward because we haven't figured out this tariff situation yet. I don't know if this meeting at the White House might help, but Donald Trump is sitting down with the Prime Minister of Norway. Let's bring you into that meeting right now. They're about to have lunch together. They've brought reporters into the room. This is live on Bloomberg.
He's been doing a fantastic job, and truly respected throughout the world as a leader. And thank you very much for being here. We appreciate it. And we're going to be having a meeting in the Oval Office in a little while where you'll be invited back and you can ask some questions. It's also a pleasure to have my friend who did such a good job at NATO, my great friend, right? So you really did. We started off, they had no money, and they ended up having a lot of money. After we said, you got to pay up. But you did a fantastic job, and thank you very much. And I'm glad you're here. Glad we meet each other again under these circumstances. So we'll be meeting in a little while at the Oval Office, and if you have maybe one or two questions, we'll do it now. And after that, we'll go to the Oval.
Mr. President, on Russia, do you still believe that Putin is serious about peace given the events overnight in Ukraine? And if that bombing doesn't end, are you considering new sanctions on Russia?
So we are thinking that very strongly that they both want peace, but they have to get to the table. We're waiting a long time. They have to get them to the table, and I think we're going to get peace. We want to save 5,000 young people.
All right.
I used to say 2,500.
Okay, so our stochastics are starting to get pinned way over bot, hovering right about 91. Let's see if we can find a good healthy trade here. So now we're kind of looking for a pullback again.
But I think they both want to make peace. I do believe so. There's a lot of hatred there. There's a lot of very bad blood, a lot of distrust. But I think we're going to.
So I guess the lesson there is if you're trying to front run a trade and you have a chance to pull contracts off to enable you to lengthen out your stop loss, then it's probably a good idea to do that. Oh yeah, no, I'm talking about the last trade. No, we're looking for a pullback to go long right now. I was talking about the last trade. I was trying to front run the short. You see where it was closing up, and I was like, okay, so let's take a chance on front running the short. Right? So I was taking a chance on front running the short. You know, and that's a low, you know, you're taking a chance that it's going to do what it did. And I had a chance to pull 3 contracts off with, $200 to $300 of profit and bank that. I should have done that. So when you're on the front run, you got a chance to pull contracts off green, you should just do it because you can add, because it hasn't confirmed yet. See, if those would have touched, we probably would have went all the way at least to the 50 and probably would have went all the way down and picked up the zone I've been holding. I had the zone here all day, really. So that's kind of like reviewing and kind of journaling that trade. That would be what I would take out of it if we're trying to get something positive out of everything. It doesn't. Every time you pull contracts off with profit, it enables you to hold the trade a little longer to see if it's going to work out and still break even.
About it as far as I was concerned. Other presidents went in, they made a speech and they left, and that kept going on. And in the meantime, they had no money, and the United States was paying far more than its fair share. You could say that they were paying. I actually said sometimes it looked like 100%, and it was unfair. And the two of us worked very well together, and we took care of the situation. Yeah, please go ahead.
Statistics are showing that the U.S. actually has a trade surplus with Norway. Are you going to be looking into that and see which of the countries are actually in a trade surplus?
Yeah, well, with the United States, almost everybody has a surplus.
But not
it's really an amazing phenomenon. Now, there's a surplus of a couple of $1 billion I think you have with us. I congratulate you. That's very good. We got to get a little bit of that for ourselves, maybe, but they do have a surplus. Norway has a surplus.
In the current tariff situation, analysts have pointed out that the U.S. actually need allies. Do you consider Norway as a possible ally in the situation?
I think Norway's always been an ally They've been somebody we've been very close to, very friendly with. Maybe more so now with me than other people, but I think Norway's always been a great ally. Yeah, Norway's been a friend.
That's a very strange question, actually, because the U.S. is our lead ally, and we build on a relationship we will talk about now, Mr. President. But it's of high relevance, and I'm very happy that we have Secretary of State and Secretary of Defense. So this is a very strong tie.
But it was a question about ally in the tariff situation specifically.
Tariff situation?
Yes.
All right. So we got to pull that going. Sorry, I'm doing emails. I mean, the only reason to front run is to go in for the long. Well, you see, so when I mean front run is the control EMA cross. So at this point, the control EMAs hadn't crossed to signify the short on the trade box, right? So, but I did have a brief forecast cloud change to red. The 20 EMA turned into resistance. You see, it's resisting. So that was red. So I said, I'll take a chance, front run the short on the control EMA cross. And it didn't work out. Does that make sense? So I was trying to front run the short from the long.
President Trump for having been taking very
Snooze. Does that make sense? And then what happened is the short never like the fast control EMA, the green, never crossed over the slow control EMA, which is the orange or red, which turns this red for a short. Oh, taking off contracts. Yeah, so you take off the contracts and then you take that profit in case it doesn't cross. Yeah, but you don't know is the problem, is that you can always add those contracts back on after you confirm. Because our next level was way down here. You know, our first level, we take them off at the first level, just make sure that we cross and we're already in, then add those contracts and ride it to the next take profit again. You know what I'm saying? It's just ATM management. If I had taken those contracts off, instead of being down 750, I'd probably be close to break even because it would have only went against me one contract. Because that's your average.
All right, there you have it. It's time for lunch. Live from the White House, the president there sitting next to his secretary.
That's your average. Because now you're only in, like if you took one off and you have one, you average down by half because you took that one off. So it averaged down your position. So that's why you're going negative on that position because you took that money out of the trade. You're always trying to take the money out of the trade whenever you can, and it helps you because you can always add it back in. The worst thing to do is hold that, not pull off the contracts, not take the profit, then when it goes against you, add more contracts. So now you're multiplied against you. That's the mistake I constantly make. But at least I didn't move my stop loss that time. I should have pulled those contracts off just to make sure that the 20 was going to be support, and we were, see right here, I was looking, instead of this, I was looking for the cross and then the move down, but it never came.
On Ukraine, when asked about that, there was a reporter who asked him as well about.
So now we're challenging the zone I shaded in earlier today.
Now, all of this comes after a massive missile and drone attack.
See, that was all trade management. I'd be sitting really good right now if I had pulled those off. It would have been like it'd have been a squash. We'd be even. But now I got to fight back $750, which is psychological. It'll make me take more chances trying to get even. So now I'm going to end up putting more contracts on than I should and take bigger chances, and I don't want to do that. So it becomes a psychological thing as you go. It builds and builds and builds.
According to Bloomberg, persons familiar, the U.S. will demand Russia accept Ukraine's right to have its own army and defense industry. This may be a non-starter for Moscow, as Vladimir Putin has made it clear. Remember, before the invasion even happened, it was about the demilitarization of Ukraine. So where are we? As Steve Witkoff prepares to pack his bags for Moscow, we're joined by Ben Jensen,
a new voice on the program, and looking forward to the conversation with Ben, director of the Futures Lab and senior fellow with the Defense and Security Department at CSIS, the Center for Strategic and International Studies. Ben, it's great to have you. I'm fascinated by this new wrinkle here because this has really seemed like a negotiation.
You know, how good would it have felt to get out of that trade at a break even when I was trying to take a chance and front run it anyway? Because the big moves come on the cross. You know, the EMA cross is where the big move happens. So if you can front run it, you can get the whole move instead of trying to wait for it to come back to where it's, you know, where it's supporting. You know, like we did the other morning, we front ran the EMA cross, and it worked out. But if it doesn't work out, you gotta make sure you're paying attention so you can get out of it even if it doesn't work out. And even if you get out even and it goes your way, so you know you can get back in. You know, it's okay. It's the object is to break even and not take the loss. You know, when you're looking at more than just this trade, you're looking at maybe 100 trades. Over 100 trades, if I was able to break even, that if they didn't work out, but I broke even before it went against me, you know, how much further ahead would I be? It just multiplies. That's kind of the idea.
More importantly, what it reminds us of is that not everything is as it appears from the outside.
Yeah, isn't that always the case? Well, Vladimir Putin certainly isn't waiting around. As you heard me mention, the attacks on Kyiv, missiles and drones.
And if I can master that, I don't have to sit here and mess with these QuickBooks friggin' people all day. You know, the worst QuickBooks people are the nonprofit people. They think the world owes them everything.
I am not happy with the Russian strikes on Kyiv. If you're with us on YouTube, you see the post. Not necessary and very bad timing, he writes. Vladimir, stop! Exclamation point. 5,000 soldiers a week are dying. Let's get the peace deal done! Exclamation point. Pretty interesting. Vladimir, stop. Ben, will he?
No. In fact, I would direct you and your viewers and listeners to check out our Firepower Strike Tracker at CSIS. So for over a year now, we've actually been scraping statistics to analyze how Russia uses a mix of long-range drones, the Shahed, as well as ballistic missiles and cruise missiles to effectively negotiate by fire, to use a punishment strategy as a way of gaining strategic leverage over President Zelensky through trying to kill as many Ukrainian civilians as possible. This is completely counterintuitive to most of the ways we've talked about war in the 21st century, but it shows us that war remains not only a continuation of politics, but ultimately tragic and brutal. And so what Putin did is not necessarily any different than what he's done. What you're seeing is that Ukraine is at a critical point because Russia is actually getting more sophisticated in its targeting, better able to integrate satellite intelligence, better to integrate cyber intelligence, and now increasingly being able to direct a complex mix of ballistic cruise missiles and then more sophisticated Shaheds that resist Ukrainian electronic warfare. And if you check out that Firepower Strike Tracker, we detail with all the statistics. We actually break down and do the analysis to show that when you mix the different types of attacks and you concentrate them in a geographic space, so I mix ballistic missiles, cruise missiles, and drones just on the capital, it's going to lower the probability that Ukraine can intercept them. And it's going to actually begin to really wage this punishment strategy into a brutal war of attrition, as we've already seen. So it might have seemed like it was audacious, it was bad timing, but this is central to Russia's strategy. They can't win on the battlefield. They're throwing their own young men, literally what the Ukrainians call them as meat assaults, at front lines where they're killed by drones. And so their bid for success when they can't win with this 21st century version of trench warfare is to try to bomb the Ukrainians into submission. It's utterly brutal, and our president is right to take the stance he did.
This is incredible, Ben, terrifying as you describe this. I'm looking right now. You got to check this out, guys. Go Google it.
All right.
Ben mentioned here,
Okay. How come when I... Okay. All right, I'm caught up. All right, guys.
From the Futures Lab.
So the fake out short was really... we were clearing... We were liquidating to go higher, it looks like.
And in fact, that's something for
So
your viewers and listeners to really take into consideration.
So that move is over. Now we got to wait for another setup, really.
Level down to the operational.
I mean, you can't, I don't have anything to go short unless you just want to use that. Let me get rid of that. Unless you want to use this resistance here as a reason to go short. We lost our cloud, or I mean our trade box.
Increase these kind of highly concentrated firepower strikes.
This candle here.
Continue to sacrifice the life.
Next candle it'll turn back on.
You are also going to see them beg, borrow,
So this kind of sucks.
North Korea, China,
I really wish I'd have dropped those contracts out now.
authoritarianism. But at the same time, on the other side,
I mean, it could be another hour before we see another setup.
some pretty daring raids and
I mean, how high can we go?
the Ukrainians have been utterly
We break this zone. I mean, honestly, what's stopping it?
entered the conflict with 5 drone companies and now has over 500. And they produce thousands of FPVs, first-person view drones, all the way up to long-range, low.
See, this is the zone.
Daily. So
We broke through this zone on the NQ. If you look on the NQ, this is the zone. From this zone up, I basically have nothing for 1,000 points.
you've had a Ukrainian strike.
There's nothing stopping this from going up for 1,000 points on the NQ.
On a major ammunition depot. So I think we're going to also see the Ukrainians trying to
So,
get those poker chips for the negotiation table as well.
yeah, it's exactly the same. So, free range after, yeah. So I was thinking maybe another reason why I tried to front run the short, I was like, okay, well, maybe we're going to really reject and we're not going to get into that free range area. And we're really just going to pull back to the VWAP for a while. So I felt like it was a good trade. And probably that thought in mind is why I just didn't mentally drop those 3 contracts out on the price line on the DOM.
And it's not even a point of discussion. He goes on to say that if he wants Crimea, why didn't they fight for it 11 years ago when it was handed over to Russia without a shot being fired? That's a bit of revisionist history if you were paying attention to things then. The press secretary at the White House, Caroline Leavitt, picked it up from there in the White House driveway yesterday. Ben, here's what she said.
Well, as President Trump rightfully pointed out in that statement, it was President Obama who gave up Crimea, who allowed Russia to take it over in 2014. And so the president is not asking Ukraine to recognize Crimea. Nobody has asked them to do that. What he is asking is for people to come to the negotiating table recognizing that this has been a brutal war for far too long. And in order to make a good deal, both sides have
So we kind of missed it. We missed the long.
Ben, you don't have to wade into the Obama stuff, but aren't we asking Ukraine to acknowledge Crimea as Russian territory? And what would happen to those Russian sub bases if, in fact, Crimea went back to Kyiv?
Oh, let me go back to the
I think what you're
ES.
seeing in all of this, if rhetoric and reality have not aligned for some time in American politics. So I think the president's trying to make the point.
So that was the logic behind that trade.
And this is where the
At least it was thought out.
of the Ukrainian Constitution, and we're Americans, so constitutions matter to us. Our own constitution matters, and we know that other countries also guarantee.
And I didn't start trading over and over. I didn't lose my mind and go crazy. So
Article 2 of the Ukrainian Constitution makes
I did not go full retard.
Zelensky to recognize Crimea as part of Russia. And the Ukrainians, frankly, did fight for it. They fought for a long time. It's just that Russia, through a manipulation of the law of armed conflict, used the little green men to seize it. And frankly, there were a lot of Russian pensioners in Crimea and large Russian naval bases, making it easier. So what you have right now is a very interesting situation where the president is just doing what he does. He really likes to turn up the rhetoric. He likes to say things that grab our attention, and he's frankly successful at it, and pull us in a way that he can try to pressure both Ukraine and Russia to try to negotiate to achieve this objective, which in a larger strategic sense means that the United States can focus on the ongoing Iran negotiations and also focus more on China. But in the meantime, what's happening is it's unsettling some of the
But
larger...
you see, the nicest thing about rules is I'm not freaking out here. I know that I have to wait for my next setup. So I'm not feeling like I'm missing out on anything. I completely logically thought through why I made that trade. The mistake was I didn't drop those 3 contracts off just to give myself a little more room to run. I got a little greedy because it came so close to my take profit. Now I'm kind of content that I just need to wait for everything to line up again, and we'll make another logical decision. I mean, 750 is not a lot. We can come back from that. We got about 3 hours left in the day. 2.5, 3, you know. before
which means we're
we
left
get
with
to
a
the
very
close
difficult
action.
reality. Ukraine cannot cede Crimea.
If nothing else, we go full port on MOC, right, Shades?
Constitutional referendums under martial law.
We'll get it back on MOC. That was a joke. We don't do that.
What has to move first? Can you have elections in Ukraine? Can you put those things up? And it also is a reminder to us that no matter what we hear on Truth Social or what Zelensky says in a nightly address, this process is going to take months, if not years, to play out. And the details are what will matter. The technical details are what drives negotiations in the end.
Really fascinating. You know what I love?
Full port MOC. That's the backup plan. That's right. If nothing works out, you always got MOC. That's a joke. I got to make an emote for MOC. That's what I got to do. We got to turn it into a meme of what not to do.
With Ben Jensen. These are the kind of conversations we try to bring you every day here on the fastest show in politics, only on Bloomberg.
Okay, so
Assembled our panel next. Speaking of only on Bloomberg, Rick
let's see
Davis
here.
and Jeannie Shanzano are with us. But first, we want to check Wall Street. Markets feeling pretty good today all over.
Okay, see, our stochastics are rolling over. So now, let's pick a zone here. I really kind of like it down here. So I like it here for a possible long, and I like it here for a possible long. So on the pullback, so pull back under the 20 percentile here. Stochastic pullback, start to rotate back up. If we're in one of these zones, 50 turns into support, like the slow control EMA or this trend line, and then boom, back up to a double top. That's kind of what we're looking for next.
And Bitcoin just about flat on the day at 93,619.
We're always looking one way. So when it's green, we're only looking for longs. Now, if we get down and the forecast cloud has closed out because we got more selling than buying, and the EMAs are about to cross, then we can consider the front run like I did last time. Maybe front run the EMA control cross. So that's what we're looking for next.
Earnings news, Texas Instruments now up by 6.8%. IBM after last night's report down now by 7%. Chipotle Mexican Grill up 0.8%. And of course, the big earnings events after the close of trading today. We'll be hearing from Alpha.
Talking to this nonprofit. Do you have a nonprofit discount? Like, no, you're not special.
Okay, Charlie, thank you, sir. Watching Wall Street for us.
You're probably just a tax shelter. Go away.
Pellet, the voice of Wall Street and the New York subway. Glad you're with us here on Bloomberg Radio.
All
Satellite
right.
Radio channel 121.
All right, that's about it. Let's check our news. Let's take a look at the news and see if anything interesting has popped up.
Meeting with President Trump and the Prime Minister of Norway. You might think you just saw that. That was actually the beginning of their luncheon. Prime Minister arrived a short time ago. They're going to break bread, and then they'll be in the Oval Office with reporters a bit later on. Ukraine.
Maybe for entertainment, I can put up my leads for work as I work them. I can't do that.
As we consider the polls this morning that are making the rounds.
While we're waiting for the next trade. All right, so let's read the news. What do we got?
37% of Americans approve of Donald Trump's handling of
UK economy is not close to a recession. Is anyone in the UK? Shades, you're in Scotland. Are you close to a recession?
And you know who else does? Fox News. Fox News
Governor Bailey says you are not, so that's good news.
Trump's second term, and it doesn't
Governor,
great. He receives the best marks
may I please have another? Governor.
Where his ratings are in positive
He's got a lot to say here.
His worst are on inflation. Only 33% approve, 59% disapprove. Tariffs, pretty similar. 33% disapprove. Foreign policy.
ICT adoption in automotive set to.
None of these are looking good.
What's
You shouldn't
ICT?
have been surprised this morning on Truth Social when Donald Trump started writing. This is only 2 hours ago. Rupert Murdoch, he says, has told me for years he's going to get rid of his Fox News Trump-hating fake pollster, but he has never done so. This pollster, in quotes, has gotten me
Information communication technology.
start making changes at the China-loving Wall Street Journal. Not a fan of the paper either. This is where we start with our panel, both experts on polling. Rick Davis is with me here at the table in Washington. Our Republican strategist partner at Stone Court Capital, Jeannie Shanzano in New York, political science professor.
Oh, they have an
at
X.
University, our Democratic
Maybe I got to
analyst.
do an
What do you
X.
think, Rick? Is Fox about to get a new pollster? And what does this tell us about the first 100 days of the
I could probably stream to X too. ICT, I can't trade. Yeah, I'm having trouble with trading over here. I want to redo on that last one.
Basically, incursions have all but dried up under the Trump administration. Nobody's coming across the border illegally. Everything else is a dismal failure.
Yeah, oil business going on. Trump meets with Norwegian. Hey, who wants to see that? Is that on right now?
I'm going to bring those costs down. I mean, economy. He won on the economy, and now negative 16% on that rating. I mean, it's really, really bad news. And you can only make the assumption that
Oh, it's the same one.
You know, this first 100 days, unless there's a significant change in what's happening, it could portend really poorly for these midterm elections. I mean, we're a long way away. Nobody's voting today.
Peace is a good thing.
If you're, you know,
Trump
after
on.
the first 100 days, these numbers are all worse than his first 100 days in 2017.
So he's talking with China over the trade.
What happened in the midterms in 2017? We have a model to work from.
That's right. Democrats are loving this. Jeannie, I don't know your thoughts on these numbers because Donald Trump said yesterday in the
Winners of the World Series Innovation Impact League. What the hell is that? Network for teaching. Oh, it's a school or must be like a
To Rick's point, this is pretty consistent.
like a trade school, like a trades, internet technology trades or something.
I always like to look at averages, and he is underwater, and it's stunning that he is performing worse
Okay,
than
that's
he
it.
was in his first term.
All right, so I'll keep this up in the corner. We'll switch. Is the volume on that? Let me mute that.
Modern president, and so it's not
All right.
going to look up here. I'm sorry to tell him. And you know the reality of all of this.
So it looks like we're kind of floating here. We're still waiting for these stochastics to roll down. All right, I got to get these people a quote. 1 minute. I'll be right back.
Done to himself, shot himself in the foot, if you will. I mean, just imagine if he had come in, he had not gone with his idea of tariffs. He had instead worked with Congress to pass the reconciliation bill. He had worked to secure the border, but he had done so knowing that he has to follow the court orders and due process. And when he makes a mistake, send Abrego Garcia back. His numbers might be up where they were when he came in. But all of this is of his own doing. It's as if he can't halt himself or stop himself from his worst instincts. And I think number one that's going to go down in the record books is his adherence to a discredited economic policy that even a sixth grader could have told you since the Great Depression was not a good idea. And he has followed it right down the path. And this is where he ends up. I quite frankly think the numbers, he should be pretty happy. They're better than they probably should be, given how quickly he has dismantled the economy.
Geez, I don't think anyone's there to tell him that, Jeannie. Cece's, by the way, keeping us honest here. That 92% approval rating was on veteran services, and it was still not correct. So, Rick, I guess the question is here, is it the cadence, or is it, in fact, the issues that he's tackled? If Donald Trump was in there signing EOs every day, keeping the media running, but it was actually about lowering prices, would we be having a different conversation?
You know, look, I mean, I think that part of it is the rhetoric and part of it is the impact, right? I mean, you know, we know that there hasn't been substantial increases in inflation, as these numbers might actually indicate. But there also has not been substantial decreases. And even though Donald Trump likes to talk about the price of gas coming down, eggs, he's just not making that case. And by the way, he's drowning out all that noise, all that message with the noise around tariffs, the noise around attacks of people, you know, the negotiations on Ukraine. I mean, like we've talked about this a lot during the campaign season. He's not getting any points for trying to solve the Ukraine-Russian war, right? Right thing to do. Voters aren't going to give him credit for it. And I think the one thing that Fox poll really indicated was that people have a very dim view of the future. It's not just where they are today, but overwhelmingly the economy is getting worse, 55%. Trump policies are in the long run are going to be bad. Negative 11%. I mean, like, it's a dismal future to most of these voters. And you see that in the consumer data. Michigan Consumer Sentiment, best poll in America, same thing. People don't see this getting better.
And Jeannie, that's not just Democrats in this case. And of course, we're hearing on a daily basis from pretty smart economists at major firms who we hear from on the regular here on networks like Bloomberg, and they're increasing their odds for a recession. If we find ourselves in one in, say, the second half of the year, maybe by the end of the second quarter, what happens to these numbers?
They're going to continue to get worse because what we've seen
All right.
almost at every step, experts and
This is the boring part of trading.
economists on the economy, whether it's legal experts on what he's doing with the courts or in education, the experts in those areas.
This is where you just sit back and read the newspaper.
To stop. They are saying he is moving in the wrong direction. And the public is always going to be a little slower. We're a little slower to catch up with that. And it's a little slower to be
This is
reflective
what
of
it's
what
like being in sales, waiting for a lead to show up.
going to happen eventually if he doesn't stop. And, I think we've
Got a lot of time to
this week,
think.
Susie Wiles and others trying to tamp
So what are we doing right now? Well, we're thinking.
sort of tried to get him
The thing that's dangerous is you got all these buttons in front of you, and if you think too much, you find yourself in a trade for no reason.
But if he keeps barreling down these paths,
Support down for
the
Trump
numbers in
immigration.
these polls and consumer sentiment and everything else are just going to continue to get worse. And so, the big question is, who's there in the White House to stop him? Doesn't seem like a lot of people. Bessent seems to have stepped up. The CEOs have come in, but he feels unshackled in his second term, and he is committed to these ideas, and he is moving down a path with no thought of the impact either on himself politically as a self-interested person, or the American public, or the world economy, quite frankly.
Rick, you mentioned Ukraine. Is there any recourse? We're going to be talking a lot more about the prospect for peace in our next hour as the president meets with the prime minister of Norway. Is there any recourse to promising over and over to be able to solve this on day one and reach 100 days with no real plan in sight? Or did no one actually believe that to begin with?
I think that first of all, everyone sort of takes that kind of thing with a grain of salt.
They do, right?
It's hyperbole for him, right? And he even claims it's hyperbole. And so you can't really tell the difference between what he's, sort of preaching about and what he actually believes. But it does have an impact. In this Fox poll, they asked about, do you think that the administration is competent? And 52% says they're not. Well, you don't want the majority of America thinking, forget if you're even trying to do the right thing, you're not competent enough to implement it. And so that is a very, very troubling number, because we all remember when Joe Biden, at this stage of his presidency, all of his numbers were significantly better than these. But he tried to withdraw from Afghanistan on the short run, and it was a disaster, and people made a decision.
All right.
Competent government. And everything since then in his administration was bad, and he couldn't dig out of it. Because
All right, so it looks like this resistance, this historic resistance in this zone we need to break through to get the real breakout it's holding it.
Are you surprised that Pete Hegseth
So
has a job with that said?
Look, Donald Trump is, known for his quick
there's
trigger
not really much we can do.
firing people. He made a whole living out of a show.
We need a pullback to go long, or we need another reason to front run the reversal to go short. And honestly, we need to be down in this zone here to be considering, like, this trend line probably needs to be resistance to push it down to really consider a short at this point.
But we also aren't done with the week. Rick
Maybe.
Davis and Jeannie Shanzano, our panel
But I like the
on
long
balance
right
of
here
power, will
if
be
we're going
back,
to
as
stay
mentioned,
long.
in our second hour.
I don't know. What do you guys think?
Search Bloomberg Business News Live if you want
Hey, Blasted, you out there? What do you think? What's your chart say, Blasted?
in our next hour. We'll have
Blasted's building a badass indicator.
a conversation around the war in Ukraine, prospects for peace.
Vladioff,
The president will
are you in on this long still?
Prime Minister of Norway,
Like, what are we doing?
Secretary General at NATO, Jens
Anyone have an idea?
in the House, and we'll have a lot more ahead on the fastest show in politics. This is Bloomberg.
All right, is anyone feeling the long now? Like off this resistance line? Like if we come back in this zone, is anyone feeling that long all the way up here? This is when you start getting a little bit of FOMO.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Thursday edition with the Norwegians in town. Welcome to the fastest show in politics as Norway's prime minister arrives at the White House to meet with President Trump with Ukraine on the agenda. Alongside Kaylee Lines in Washington, I'm Joe Matthew. Thanks for joining us here on the early edition of Balance of Power. Bloomberg now reporting, Kaylee, new conditions for peace that the U.S. is putting on Russia we haven't heard about until now.
Yeah, our first real insight into concessions being asked of the Kremlin, which specifically, according to our reporting, is that they would have to accept Ukraine having its own military and defense industry in any kind of peace deal, which would mean Vladimir Putin does not achieve one of his stated objectives of this war, which is the demilitarization of Ukraine. So unclear whether or not he would agree to this. It's probably going to be up to Steve Witkoff to relay this to him when he visits Moscow, expected tomorrow.
That'll be quite a conversation to be a fly on the wall. Those tend to go on for hours based on the meetings that they had. But you're right, in the early stages, before the actual invasion, Vladimir Putin talked about denazification and demilitarization. We're apparently taking these off the table here. The first one wasn't real to begin with, which could be a non-starter for Moscow, just like giving up Crimea would be for Kyiv.
Yep, and Vladimir Zelensky, has made that clear, something President Trump wasn't necessarily happy with. And of course, we expect we may get more conversation around the war in Ukraine this hour, as the press is expected to be let into the Oval Office as President Trump meets with the Prime Minister of Norway, and not just, of course, Norway's Prime Minister, but Finance Minister as well, who happens to be the former Secretary General of NATO. Jens Stoltenberg.
He spent a little bit of time in that room. We're also asking questions about tariffs still, with some confusion over China, the impact tariffs will have on the lowest served communities in this country. Part of the conversation we're going to have with John Hope Bryant, Operation Hope Chair, CEO and founder, will join us live from Atlanta a bit later on this hour.
Yeah, and we're looking forward to it. First, though, as always, we got to check on the markets, and Charlie Pellet has a look from New York. Hey, Charlie.
Thank you very much, Kaylee and Joe. We got a lot going on, and with the Dow, the S&P, and NASDAQ are all advancing. The big event coming up after the close of trading could very much set the tone for more tech earnings to come. We'll be hearing from Alphabet, parent of Google. That stock higher right now. Also higher Intel, which reports after the bell as well. Complete coverage on Bloomberg Television and Radio. Equity markets pushing higher, with the Dow retaking the 40,000 mark. 40,033 right now on the Dow Industrials. We'll start there, up 426 now, up by 1.1%. S&P up 93, keeping it all in context, up 1.7%. NASDAQ up 372, up by 2.2%. Broad-based rally with the Russell 2000 index up by 1.7%. The Bloomberg Mag 7 index ahead of tech earnings, up by 2.1%. Your 10-year 4.30%, with the 2-year 3.79%. Gold up 1.3%, 33.31 the ounce. West Texas Intermediate crude 62.74 a barrel, up 0.7%, and Bitcoin now lower by 0.3%, 93,373 on Bitcoin. Again, Alphabet and Intel after the close of trading reacting to earnings last night. We've got IBM shares down 6.8% and Texas Instruments after earnings surging now by 7%. Lots going on. We got you covered. Back we go to Washington as Balance of Power continues, and your hosts, Joe Matthew and Kaylee Lyons.
Lots going on indeed. Charlie Pellet, thank you so much as always for keeping an eye on the markets as we're keeping an eye on the White House. We expect that President Trump and the Prime Minister and Finance Minister of Norway will emerge from behind closed doors, head to the Oval Office after their bilateral lunch meeting, and let the press back in for more questions and more answers. Probably a lot of them focused on issues of trade and, of course, the ongoing war in Ukraine. As we already heard at the beginning of their lunch meeting when press was let in momentarily from President Trump, that he does believe Ukraine and Russia would like to reach a peace deal, but he says they need to get to the table to do that.
They need to get to the table, and it's coming hours after a deadly and just terrifying attack, drone and missile attack against Kyiv last night. Russia claiming 9 lives, more than 60 wounded. And of course, President Zelensky is perplexed by some of the concessions that he's heard about. We're now talking about concessions for Russia. This is the backdrop of this meeting today in the Oval Office that we will witness together coming up a bit later this hour. And it's where we start this hour with Bloomberg's Tyler Kendall on the North Lawn of the White House. Tyler?
Yeah, hey, Joe. It appears that President Trump is trying to ramp up the pressure here earlier, saying that he has his own deadline when it comes to when he wants to see Ukraine and Russia agree on a deal. He didn't elaborate further besides saying that he would like to see a deal done fast. Of course, defense cooperation amid the ongoing war is going to be a top discussion today because you mentioned it at the top there. It's not just Norway's prime minister here, but also their finance minister, a familiar name, Jens Stoltenberg, the former NATO Secretary General, who President Trump said called him a great friend in the Oval Office earlier. And this meeting comes on the heels of some important Bloomberg News reporting earlier today that the U.S. will demand that Russia accept Ukraine's right to build up its military and its defense industry, which would largely be seen as a concession by Vladimir Putin if Russia does agree, because they have wanted to see Ukraine disarm, as well as see a halt of Western military flows into the country. On the other end of that, though, we are reporting that very likely Ukraine's NATO ambitions are going to be off the table. And I bring that up because there are still some big disagreements here, of course, but particularly among European allies like Norway and the U.S. about the right path forward, because the U.S. has put forward a plan that potentially could mean freezing battle lines where they are, potentially recognizing Crimea as Russian territory. But our allies have said that a few things really need to happen first, including a ceasefire, as well as, recognizing what sort of security guarantees the U.S. could be providing here in order to make sure that a deal could actually end up being long-lasting. So that's one of the big themes that we're waiting to see emerge here today, whether or not Norway can pin the U.S. down when it comes to any sort of firmer security guarantees, besides for the implicit guarantees that they have talked about when it comes to a vested economic interest.
Well, of course, we understand that is one item, top of the agenda probably, Tyler, but the president also said that Norway and the U.S. would be discussing trade, and we heard a little bit from him about trade with China as well, a suggestion that they met today. But Tyler, who's they? He wouldn't say.
Right. No specifics there, particularly after China's Commerce Ministry said this morning that there are no negotiations currently going on between Beijing and Washington, just a day after President Trump had said that everything is active when asked if he was actively involved in talks with China. We do know that there were some preconditions on the table for China to get to the negotiating table, including that somebody other than President Trump needs to be the point person. At the same time, though, yesterday, I'll bring up those comments again, that President Trump said that he feels that 145% levy is very high and amounts to a trade embargo. But at the same time, we're talking about mixed messaging here, as you're about to hear from him yesterday. He said that even if the U.S. doesn't strike a deal with Beijing, that would still be okay.
We're going to have great deals. And by the way, if we don't have a deal with a company or a country, we're going to set the tariff. We just set the tariff. It's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks. We'll be setting the number. And we're going to pick, could be for China, too.
President Trump there potentially floating that this White House could release some revised tariff rates for countries, including China, in the next 2 to 3 weeks. We're still waiting on further details on what exactly that could be as we try to glean whether or not negotiations really are taking place and who they are taking place with. One of those countries, though, that the U.S. is negotiating with, we know, of course, is Japan. Joe and Kayleigh, I'll quickly mention some other important Bloomberg News reporting this morning that Japan says that it will push back on the U.S. if they ask them to curb their own trade with China. We should be clear, Japanese officials tell Bloomberg News the U.S. has not asked that quite yet, but we do know it's an option that the administration is thinking about.
All right, Bloomberg's Tyler Kendall, live at the North Lawn of the White House. Thank you so much for joining us here on Bloomberg TV and radio as we await again.
All right, who's kind of feeling the short here?
From President Trump and the Prime Minister of Norway in the Oval Office on the issue of the war in Ukraine, but also on tariffs as well. And this comes, Joe, as we've gotten some fresh polling data out of all places, Fox News, on how Americans are feeling.
I feel you, Snooze.
Handling of tariffs and the economy overall, and on both metrics, he is underwater by a pretty wide margin. Tariff approval, disapproval, 58% disapprove of tariffs, only 33% approve of his policy.
It's kind of funny. It picked this zone here, huh, to consolidate in.
Modern history, which has prompted Donald Trump to get to Truth Social and call on Rupert Murdoch to.
I'm telling you, the power of trend lines and resistance areas is.
At the Wall Street Journal, but of course it brings
It's
us to the issue.
the algorithms are kind of almost predictable or sneaky.
Although we are feeling a little better about things today, and the corrosive impact it's had in the psyche of many consumers who are concerned about rising prices and where we're going to be in the second half of the year. Kayleigh,
I mean, I drew that this morning.
raising odds for a recession in the second half.
Yeah, and it seems that those concerns are reflected when you're looking at more marginalized communities in terms of their financial health. According to a new survey from Hope Insider survey from the Operation Hope project, 3 of 4 participants in the survey said they are not confident that the economy will remain stable. 53% believe the change in administration will not increase job growth in their communities.
Sensing a bit of a theme here. With that in mind, we're excited to introduce John Hope Bryan, bring back to Bloomberg, the chairman, CEO, founder of Operation Hope. He's with us live from our bureau in Atlanta. John, it's great to have you with us here on Bloomberg, and I appreciate your coming to talk to us. You actually were in the Treasury Department recently to talk about financial literacy, which I know is a matter of great import to you. You spent some time with Scott Bessent, who tweeted a photo of you together and wrote, "Financial literacy is a necessity, not a luxury." Is the word tariff in the financial literacy notebook that you're bringing forth?
Well, I believe that, first of all, honored to be with you. Thanks for having me. I believe that financial literacy is a civil rights issue of this generation, and the color's not black or white or red or blue. It's green. It affects all of us, and based on your reporting you just had, even more so now because the economy is basically driven, the biggest economy in the world, driven by consumer spending, over 70%, and everybody's starting to feel the pinch now. No, tariffs is not typically part of the financial literacy lexicon. I do understand that a president might want to use it as a negotiating tool in the short term to try to get someone to level a playing field with regard to trade, trade imbalances, et cetera. As a long-term tool, I think for a country that runs on sentiment, it runs on how do I feel about things, and again, the economy is mostly consumer spending. As a long-term instrument, I don't think it's productive. I actually think it's potentially harmful. I'm hopeful that this is not a long-term strategy.
And I just lost a big deal. Those people just went online and activated it on their own. That's the one thing about QuickBooks is you can go online and buy it. So if you're working a deal and people just go online one day or somebody creates it that you didn't work with, you can lose it. Yeah, it's a big deal too. I really needed that. You're like, well, it looked like the pricing was better. Well, I had talked to you 2 months ago. The pricing was better, but it's the same checkout system. You can't really cancel it and redo it. It doesn't work like that. Oh, well. Maybe I'll get a freebie later today. It always works out. Somebody else will drop the ball and I'll just pick somebody else's deal up. Yeah, I know, it sucks. That's the life of commission. the life and
The
working for
Treasury
commission.
Secretary is the adult in the room, and there's been much reporting about his role
Okay.
in implementing or having the president implement that.
Here we go. We're going to get a fake out short again.
On firing the chair of the Federal Reserve.
Yeah, it doesn't bother me as much as it used to because it's just part of the game. But that one was nonsense. I mean, they could have emailed me. I spent a lot of time with those people. They even, like, they just missed their appointment. So I emailed them that they missed their appointment. And she's like, oh, thank you for all your help. You really did awesome. We just went ahead and signed up online. I'm like, great. I really did a good job. Thank you. That makes me feel good.
This is the most serious conversation.
Whatever. It's all right. It hasn't happened in a while, to be honest. Because I got stuff I say during the whole process that makes them feel like they can't do it without me. So that doesn't happen as much as it does to other people, I don't think.
I knew that the president has had this on his mind since 1980. He's been talking about this since 1980.
Yeah.
He's going to do it.
I got a karma sale.
one way or another. Why put the secretary-
I want to cash that karma sale in on this next trade, please.
It's a question that can't be answered. So let's, you know, it is what it is. Let that go forward. There are a lot of other things that we have more control over, and that's going to again play itself out the way it plays itself out. The things that I did engage him on, he was completely transparent about. He wanted to have constructive criticism, a critique. He wanted to know how policies were affecting the average citizen. He wanted feedback on that on a regular basis. He understood that this is a nonpartisan issue, that you need, this can't be something that gets put into some partisan discussion where only one group supports it. That it will fail that way. You need Republicans and Democrats, blacks and whites, rich and poor, urban and rural. You need my population that I represent, we're the largest in the country, to embrace something that makes sense from the administration. He was very smart, I think, to ask a group that has 1,500 offices in the country and a pulse on what's going on for not only just help with the program side, and maybe we give him some policy recommendations he might like. He's invited those. But also to help at the right time to get this really could be a unifying issue for the country, and at a time where everybody argues over is it dark outside, is it light, is that really light? No, it's not light. Somebody's lying to me, right? You know, I mean, you can't. Somebody says something's up, somebody says no, that's down, right? Everybody's like in the business of arguing, and I think people are exhausted by it. By the way, isn't it nice that there's a topic that actually most people agree on? And I think he thinks financial literacy could be that issue that is a unifier. Now, we got to get all the noise out the way, the political noise and the partisanship out the way. I mean, people saw me meeting for the administration from, you call it my community, and folks start coming at me with that. And I said, look, trust me, sit down for a minute. I've known this guy for a decade. He's a good man. And just trust me, I think there's something we can do here that's good for everybody. And they said, great. Well, that has to happen. Everybody has to say, this is a radical movement of common sense. This is something we can agree on. This is something we can get done. And let's work on it. And that's his view. And it was very refreshing, actually. I didn't feel uncomfortable in any part of the meeting. He was himself, which is direct and transparent. And he was squarely focused on this issue, but he also understood that financial literacy ripples out into the broader economy. In other words, he wasn't treating this like it's some trinket issue or some marginal issue.
Yeah. We refer to you as a longtime friend in his posts supporting this idea on Financial Literacy Month, and we appreciate your bringing us inside that conversation, John, because, you know, the president's surrounded by a lot of different people who have different ideas.
All right, who wants to do the old-fashioned front run now? Now volume's falling off. Why is my box gray?
As a pro-impeachment Trump hater, even Elon Musk retweeted that.
Oh, our volume is low now. We're below 3,000.
What you heard there, or if that might impact your relationship with this administration.
Is this the short?
I believe is that the election is over. And he's the president of the United States. And as I've said on multiple TV interviews and black urban radio interviews, if the president succeeds, we succeed. If the president fails, we fail. What's complicated about this? Nobody should be rooting for his failure. We should be trying to help him succeed. which is exactly why I risked, pushback from my traditional community to go and have this meeting, which I thought was important on the first day of Financial Literacy Month. And luckily, I'm getting very proud of the black and brown community. They're very mature about it. They were like, yeah, it's not about black or brown, John, as you said. It's about the green, right? It's not, so go get us some green. Let's see what we get. And Dr. King died.
All right, so this is the same setup as last time.
This month, and we were in Memphis for that with Republicans.
We're either looking for a long, if we touch the 50 to go long, or we're looking to front run the short because we're almost to a we're almost to a red forecast cloud. It's the green, like we've almost got more selling than buying. It's almost closed up. Control, we're below the 20. We're already below the 20. So if the 20 just, this candle made the 20 support. So let's see what happens on the next candle. We just got the forecast cloud just turned red. So this is either going to be a bounce long or we're going to follow through and do the short this time. So
we got to get back to that conversation because the Bible says a house.
So we're almost in my zone where I was picking to kind of go long again, but I don't.
And we want to worry about whether we're hitting on each other.
The stochastics are lined up great. So I'd love to see the stochastics around here and roll up and then take the long out of this fair value gap, maybe even.
North Korea want our way of life. They want what we have.
So let's just hold on a little bit more this time.
They can only get it if we mess it up. And we got to figure out whether we're better together. That's what Dr. King believed. That's what I believe. So, what does like have to do with it? I mean, this has to do with do we I really respect me and learn to like me, that like me never respect me, right? And do we respect each other? Because by the way, we need different views. This country is made up. On the way in here, I heard from my people that California, which went from the 5th largest economy in the world to the 4th largest economy, ahead of Japan, right? Well, California, I believe, is the most diverse place in the United States of America. And New York, I believe you guys are in New York, is the second most biggest economy, right, in the U.S. And it also is one of the most diverse places. So diversity wins. Diversity wins. And by the way, most people are immigrants, including my European friends. And of course, black folks got on the wrong boat. That's another conversation. Look, we gotta lighten the temperature, and laser in the focus on what we are really about.
This is an interesting candle. We're kind of hanging out right here.
Again, this is the biggest economy in the world, and it's 70% consumer spending.
So if these stochastics start to roll back up, that might be our entry to go back into the zone.
Return to the point you were just making on
So we just let's watch the stochastics this time. We're not going to front run the short.
Its way through financial market participants in the last month or two about the end of U.S. exceptionalism. Is that the way you see it? Is that what these policies could bring about?
I think every 50 to 70, maybe certainly 100 years, this country has an identity crisis. We had it with the first Reconstruction, which was, of course, we had it with the war for our independence, but then you had the first Reconstruction.
All right, minute 31, minute 30 till the next candle.
The Republican Party, people don't know, was birthed on freedom and anti-slavery agenda. I don't know if people know that. That was why Lincoln got so much heck. But that was the first Reconstruction. And then you had Frederick Douglass, a black man, working with Abraham Lincoln, a white man and Frederick Douglass criticized Abraham Lincoln.
So this is, let's see how the next candle goes. If this is the bottom of the range and we range here for a little bit.
Frederick Douglass into the conversation. At the end of the day, Frederick Douglass made him a better president.
Yeah, dude. Full port. That's tomorrow. Full port's Friday tomorrow. Hey, what's up, mofo? Yeah, man. Since you showed up, it really started to we're starting to gather some people to hang out, man. I appreciate it, dude. When my man Shade showed up, I hooked up my Shure microphone and we started working on entries and stuff. Now we got a bunch of people hanging out with us. That's pretty cool. I streamed for a long time and I didn't really, I hadn't really started talking yet. Shit, look at this.
I mean, this is one huge digestive exercise where we got to.
Yeah, that's right. We're recruiting for Full Port Fridays. Everybody's got one account. One account you can blow. Full Port Fridays. You either make your account or you blow it.
Massively in the middle. It's a radical movement.
All right, so is the 20 going to turn into resistance or support?
They want to start a business.
So we almost touched my zone.
They want to go to the park with their kids. They want to enjoy their neighbors. They want to the diversity.
All right, yeah. All right, brother. I'll see you in the I'll be here in the morning, bright and early for Full Port Friday.
But the diversity is all. You know that women. You know, in 1972, a woman did not have a bank, could not get a bank account. Not 1872. After in the second Reconstruction, affirmative action.
That's right. We can't miss the Open.
Actually went to benefit white women.
Nothing like the Open on Fridays.
By the way, today women couldn't get a loan unless her husband guaranteed it in 1972.
Okay, so I would really like to rather be in the trade at the bottom of this range if we start ranging here. Stochastics are bending up a little, but I don't like hopping in right here because this candle, I don't trust this candle to go higher yet, so I'm just going to wait for the next one. The aggressive move would have been probably to get in on this candle, but I'm kind of waiting for a little confirmation.
The largest group of baby boomers in the history are beginning to retire. As you know, there's going to be $100 trillion wealth transfer in the next 10 to 20 years. That's basically white, wealthy people trying to go play golf at the same time. You know, the businesses, who's going to buy them? The GDP, who's going to replace it? My rich friends need my poor friends to do better, if only to stay rich. And so this is what I told the secretary, is you can't, well, I'm sorry, I didn't tell the secretary this part. I told TV this part. You can't cut yourself alone out of this crisis. Yes, there is waste. There is bloating. Let's get to that in an intelligent way, not in a the how is as important as the what. We can be gracious about this. We can understand it's not the employee's fault if they're working at an agency that may not be efficient. Let's deal with that in an intelligent way. Get that out of the way. Now let's at the bottom third of the economy and make them capitalists. And let's repair the ladder and let them become homeowners. 44% of black people own a home compared to 75% of their white counterparts. That's good for banks, for them to get financially literate, right? Then get their credit score up. By the way, credit score increases of 100 points in Black America alone is worth $750 billion
Okay.
by 2053. Then you go buy homes.
Next candle now. What's this next candle do?
That's good for $800 billion. That's $1.5 trillion of wealth creation and 2 to 3% of GDP increases every year. And then you have.
I almost jumped in on that.
Baby boomers don't want the businesses. The baby boomers are retiring. They want to give away the stocks, bonds, the cash, all that stuff. In the homes, the family wants that. The family don't want the businesses. Well, let somebody buy that business. That's $1 trillion of wealth creation. And AI, artificial intelligence. I'm co-chair with Sam Altman on the AI Ethics Council, and I'm co-chair with Doug McMillan of Walmart on Financial Literacy for All. This is civil rights and silver rights. These two things. That's $1 trillion. So that's $3.5 trillion of new wealth creation by 2053, 20 years or so.
Yeah.
And 2 to 3% of additional GDP. Who doesn't want that?
I almost got in right here. All right. So I'll tell you what. Let's see what happens. Now I'm being chicken. Because I'm.
Yes, here legally. When they succeed, all boats.
I don't know. Does anybody think that this is going to turn into support and we go higher? Does anybody believe that?
But this is.
Do we have the catalyst to go higher
That's why we wanted you
before we visit the VWAP again?
I feel like you're going to solve this for us right now in this hour. You know, there are very few people who come on Bloomberg and we clear the decks for like this. At some point, we are going to check the markets. But while you're still with us, live from Atlanta here, you know, there's the old saying, if you're getting it on both sides, you're doing something right. And I suspect that you feel like that right now. Would you go back to meet with this Treasury Secretary again?
If he invites me, I'll come back, sure. I mean, I was there meeting with other folks a couple weeks, last week actually. I mean, look, I'm gonna give him some room and let him do his job. He's helping to run the world economy. He knows my number. If he wants to call me, I'll answer. But you know, let him have some room. Let him talk to some other people. Let him, you know, look, we have the largest infrastructure for financial literacy coaching in America. We're not going anywhere. And we're the best in class, and we're in urban community. 20% of our offices are in white, poor, rural communities, by the way. And they don't care what color I am. They just care whether they're getting their earned income tax credit, their credit score up, their debt down, their savings up, and the bank says yes to an approval. And so we have this infrastructure that's growing, 1,500 offices total, millions of clients, and we're here when the Secretary of the Treasury and by extension the administration has some make sense things they'd like to do that we can be helpful for. If they don't need us, we'll go on about our business.
All right, we'll leave it on that note. John, thank you so much for being so generous with your time today. John Hope Bryant, Operation Hope, Inc., Chair, CEO, and founder here with us on Bloomberg TV and radio. Much appreciated. And as he says, the Treasury Secretary needs to get out and talk to more people. He currently is in the room in the White House along with other cabinet secretaries and President Trump and the Prime Minister and Finance Minister of Norway. We again expect that they will emerge from that meeting in short order. When they do so in the Oval Office, we'll be bringing it to you live here on Bloomberg TV and radio. But before we do so, as Joe said, we do got to get back to the markets. So Charlie Pellet, how we looking from New York?
Right now, we are looking at a Dow Jones Industrial Average that is hovering right around the 40,000 threshold, up 390 right now. That is a gain of 1%. Dow Industrials at 39,995. A couple of moments ago, it was moving above 40,000. The S&P up 92, up by 1.7%. And NASDAQ now higher by 382 points. NASDAQ is up 2.3%. The Russell 2000 index of small cap shares up 1.7%. Your 10-year 4.31% with the 2-year currently yielding 3.79%. Gold up $46 the ounce, $33.35 the ounce, up 1.4%. And West Texas Intermediate crude very close to $63 a barrel now, up by 1.1%. PepsiCo has lowered its full-year profit outlook, showing that demand for the company's snacks and soft drinks is wobbling amid unpredictable U.S. trade policy and worsening consumer sentiment. PepsiCo shares on an up day for the rest of the market. PepsiCo down now by 5.3%. And Procter & Gamble is cutting its annual sales and profit outlook, citing tariffs and volatility in consumer demand. Procter & Gamble down by 4.6%. Our last guest alluded to it. California's nominal gross domestic product reached $4.1 trillion last year, making it the world's fourth largest economy. Governor Newsom using his state's economic power to challenge President Trump's trade policies. Recapping, S&P right now up by 92. That is a gain of 1.7%. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet on the markets for us every day here on the fastest show in politics. Thanks for being with us here on Bloomberg TV and radio, on YouTube as well. Search Bloomberg Business News Live. You can always find us, of course, on satellite radio channel 121. A lot of ways to find Balance of Power, including our podcast, which you can find at Apple and Spotify. We're in waiting mode right now for President Trump and the Prime Minister of Norway. Behind closed doors, they're having lunch right now, and they will have a bilateral meeting in the Oval Office that we're told will be a fly on the wall for. It was supposed to start about 30 minutes ago, and so we're running a little bit late here. They did spend a bit of time in front of reporters earlier. When the Prime Minister arrived ahead of their lunch, reporters in the room asking questions about Ukraine. This is going to be a major part of the conversation today, the path to peace, if there is one. Only hours after Russia delivered one of its largest missile and drone attacks in recent memory against Kyiv. The president was asked about deadlines for peace. Here's what he said.
I have my own deadline. And we want it to be fast. And the Prime Minister is helping us. He wants it to be fast, too. And I think everybody in this, at this time in NATO, they want to see this thing happen. So we have a deadline. And after that, we're going to have a very much different attitude. But I think that has a very good chance of getting done.
Remembering that the first deadline we had heard about in the war between Ukraine and Russia was day one.
I'm looking at the NQ. The NQ is looking weak to me. If you look at the NQ,
into office, he thought he could end this war, which is still ongoing. So on that note,
it's just looking weak to me.
Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Stonegard Capital partner and Republican strategist. Jeannie, Democratic analyst and senior democracy fellow.
But we'll see. Sometimes that can be a leading indicator. Like the ES and NQ can kind of be leading indicators for one or the other,
Promises made, promises kept.
Like one will be lagging behind the other, and you'll be able to pick the lagging one up for that direction.
A suggestion that this might actually be a promise.
I mean, there's no short here.
To keep as they thought.
Yeah, I think anytime they enter into the debate on how long is it going to take to get a deal with Vladimir Putin, they're running on very thin ice. Obviously, he was thinking that the power of his personality, the strength of the Union of America and NATO, would be enough of an influence to get something done quickly. But I don't think he's ever really quite understood how intransient Vladimir Putin is, and all the kind of nice things that he says about him and tries to blame the war on Ukraine isn't going to convince Vladimir Putin to do something he otherwise doesn't want to do. And so I think, we're 100 days and counting. Yesterday, the vice president was talking about, like, if we're not going to settle this thing soon, we're walking away. I saw the president's comments as a way of walking back that a little bit today, not trying to create too much heated rhetoric at a time when Putin is still making these really untoward attacks on the Ukrainians. So, look, I think he's in the middle of a mess, and it's going to take him a lot longer to try and figure out. We may be here another 100 days wondering, hey, he promised 100 days in to his administration that he was going to end this thing soon, and still no answer.
Well, it's at least 9 dead and 60 wounded in this overnight missile and drone attack in Kyiv. Jeannie, we talked to Ben Jensen at CSIS earlier today, who said attacks like these will only increase as we get closer to any potential peace as Vladimir Putin tries to strengthen his hand militarily. And you see Donald Trump on Truth Social today. I'm not happy with the Russian strikes on Kyiv, he writes. Not necessary and very bad timing. Vladimir, stop! Exclamation point. Is he learning a very difficult lesson, to Rick's point here, about Vladimir Putin?
I thought I'm so glad you raised that post, because I think it's a moment that we're going to remember, this sort of personal appeal from the president, Vladimir, stop. And this is not necessary. And 70 missiles, 150 attack drones, including ballistic missiles, targeting citizens. And
I'm really thinking about putting a limit order short here.
They are at the table to have these talks. I don't know if Donald Trump
Order
is
submitted.
learning. He has said things in just the last
I think I'm
few
safe
days and
if I
few
get in
hours,
short
things that
here.
You scratch your head, like blaming Barack Obama for Crimea, for instance, something he said as early as 2018, but has reiterated in the last few days, few hours. But the reality is that we aren't really much closer to a ceasefire than we were when he took office. And this is not on Donald Trump beyond the premise.
And this is based off what I see on the NQ, the stochastics. I'm going to try and front run the short. I don't think we're going to bust through this resistance.
On the campaign trail is now coming back to haunt him, and we can feel his frustration. And of course, we all feel that along with him.
Well, and I wonder what those in the Norwegian delegation, including the Prime Minister and the former NATO Secretary General, now Finance Minister of Norway, Jens Stoltenberg, will be feeling as they're having their conversation with the president now. It will turn public in short order. Again, we'll bring that to you live here on Bloomberg TV and radio when it begins. But Jeannie, given what we saw in the Oval Office when Ukrainian President Zelensky visited, how quickly that went downhill, how careful do leaders in Europe of alliances that the U.S. has at least historically held very close have to be when navigating this issue with President Trump? Is there a way for them to be able to convey their concerns without it potentially jeopardizing their own relationships with this country?
I'm just going to sit here for a minute.
I think they probably are taking a lesson from the Prime Minister.
Yeah, I'm front running it.
And the Prime Minister
You see the control?
Negotiate those visits very well. Of course, you never know what to
No, you're right. I mean, I'm front running it. I'm trying to stay out on top of the zone to front run it. Because look at the NQ.
Donald Trump does have a long relationship.
The NQ is going full on short here.
They do have two huge issues on their plates between tariff and the Ukraine issue. But, the hope is that they are able to convey to him the concern.
All right, I'm going to pull it down. You talk to me. I'm pulling it down.
And of course,
pulling it down. All right, IBN right now.
In alliance with NATO.
Let's see if I was right. You're right. I got a full green. I'm breaking all the rules.
Norway and these other countries.
That's what I like about having the stream, because people are holding me accountable. Let's see if I was right.
Democratic Western world, that we do stop these kinds of incursions and we don't by any means support Vladimir Putin in this
What's the frown for?
doing the same thing if we turn our backs on them.
Rick, we're here for the first time today, at least in
Front running, honestly, front running the control EMA cross is a new thing for me. I just started doing it. But you were right. I'm pulling it down. I'm pulling it down. The trade is down.
in Moscow. If we've got this
The Eagle has not taken off or landed.
This is a standoff, right? This is a deadlock.
Yeah, it indicates to me that we really haven't made any progress. You know, that unless Vladimir Putin is prepared to give.
You're right.
not his
You're.
maximalist principles of everything.
I spent a lot of fucking money on that box. I spent a lot of money on that box, and it's almost always right. I'm telling you, it's almost always right. It's when you try and get you try and get smart. You try and get smarter than the boxes when you get snatched. Look at that. You were right. Follow the rules. Forecast.
Sovereign territory. I mean, like as a basis of a conversation.
It's like a Weather Channel forecaster looking at the weather and telling you it's like when it's obviously going to rain, it's going to be sunny. You're reading the wrong thing off the Weather Channel. What do they call that? The Doppler radar, the Doppler check.
The idea that they somehow are going to, you know, neutralize.
Okay, it'd be dicey right now if I took that short because basically I have everything's in a long right now.
That you can't put European troops in the country.
You know, I have a bias is my problem. That's right. It wasn't even cloudy there. It's all. I just, for some reason, I have it in my mind it's not going to break this resistance. So I got to let that go. I got to let that go.
Take your pick. If all it is about being a middleman between Ukraine and Russia, does the U.S. really need to be involved, or is the U.S. involvement the only hope of ever bringing an end to this conflict?
No, I'd say at this stage, I would make the bold, blatant statement that the U.S. is an impediment to getting a deal done because we've been coddling Vladimir Putin, and no one else in the world will do that, right? If the Europeans get involved in a negotiation for this, they will say, get out of Ukraine first and foremost. And the last thing they want is to reward a bully for invading another country, one that they live right next to. And so the U.S. is the best chance, because of Vladimir Putin's seemingly adoration of Vladimir Putin, for Vladimir Putin to get a deal that he could actually agree to. And so maybe the U.S. getting out of the middle of this thing will result in some clarity on where the real bounds of a deal can be made.
Well, so is that where we're going here, Jeannie? We've heard multiple threats from the president himself.
Well, that's it. It's like you can't reward bad behavior because then the box means nothing. You know what I'm saying? The box means nothing if you ignore it, and then you're right once, and then you do it 5 more times and you're wrong. You're like, fuck, I need to listen to the box. It's just it's such a psychological fuck. See, I'm telling myself, yeah, it's an expensive box. I don't want to make any more payments on it. I just, for some reason, I have it in my head that we're going to resist this, but I have nothing that confirms it yet. The control EMAs have to touch or be almost touching in order to get in. And so I need to wait for that. Now it's okay to front run. It's okay to front run the box, but they like the fast control EMA really needs to be angled down aggressively. You need to have the forecast. You need to, or the cloud. You need to have the cloud in the red. You have to have the cloud in the red, and the control EMAs need to be like right about like they're heading that way, and then your stochastic needs to be turning down, and then you can front run. And I had it here. I had all of that. I had all of that here, and the trade was going okay. I just didn't let go of my extra contracts to give myself the room to breathe.
Alphabet and Intel, yes, Bloomberg Television and Radio. We got you absolutely, positively, completely covered on both those names. Right now, the S&P is up 87.
Look at the NQ. Oh, you're looking at the NQ. Let me go back to the ES. See, the NQ, I'm about ready to take a trade on. NQ looks really good.
NASDAQ up 300.
It's still bouncing around too much for me, though.
NASDAQ 100 index up by 2.3%.
31 to
34.
34.
Index of small cap shares up 1.6%. The Bloomberg Mag 7 index ahead of tech earnings up 2.1%. Spot gold right now trading higher by 1.4%, 33.33 the ounce. 10-year 4.30% with the 2-year 3.79%. And West Texas Intermediate crude up 1%, 62.86 per barrel of WTI. Bitcoin right now at $92,995. Bitcoin down $690. Bitcoin is declining by 0.7%. Bottom line here, investors are betting that the Fed could cut rates sooner than anticipated to prevent a recession due to President Trump's trade war. Company news, Bristol Myers Squibb raised...
Yeah, I like the short on the NQ, but that means that the ES is going to go short also. So right now, if I would have kept that on, I'd be looking okay, but let's see if we get a pullback. Let's see what happens on this next candle. See, the problem with the NQ, look, you don't have the forecast cloud. Look, let's see how wide it is. You still have more buying than selling in the float here. You know, you need that to be red.
All right, Charlie Pellet looking at the markets for us.
Or we may not run. That's, you have everything else but that to front run the short. You know what I'm saying? That's why you want to, but you're not sure yet.
In regard to tariffs, and we certainly
on the ES here, to sit on the 20 would probably be okay to go short. It's almost closed up. See how the, like, we've almost got rid of the, you know, the buying volume so that we can run down.
China itself pushed back on that overnight, saying no such talks have begun. President Trump doubled down. Just an hour ago, when he let the press in his meeting with the Norwegian Prime Minister, saying that they had a meeting today, but that whoever they was is not important. So once again, we're being left with questions as to what exactly, if any, progress has been made on reducing what is 145% and 125% levies, respectively.
Doesn't sound like the principals are in the same room. As the president has said, we're waiting for the call. So based on everything we understand, no call has been made. Whether there's some sort of back channeling going on, he might be presumably referring to. We have no idea.
Yeah, and it's that.
See that the volume is still floating it up.
Reserve officials about as they try to consider what impact tariff policies ultimately are going to have on their policy making. And on that note, Federal Reserve Governor Christopher Waller had some thoughts on the subject when he joined our colleague Michael McKee here in Washington earlier today. Here's a taste of their conversation.
The president's put off any decision on the large tariff world that was proposed on April 2nd until July. So all you're going to see probably till July is whatever the existing tariffs are in place. And as I said, I don't think you're going to see enough happen in the real data in the next couple of months.
The aforementioned Michael McKee is with us right now at the table in Washington, spending the week with us here for the spring meetings at the IMF, which means you're having a lot of really interesting conversations, popping around town and hearing things that a lot of people might not have planned to say on the air. I'm just wondering if you can bring us into some of those conversations. Is uncertainty the word that you're hearing about, or is it a more nuanced conversation around tariffs?
Well, it's really uncertainty. The people who are experts.
Okay, so now we've got the forecast.
Obvious things that this is
now we're under the 20 EMA. So the 20 EMA, is that going to show as resistance on this next candle?
What the impact is going to be is much.
We need it to show resistance.
Because they don't know what the ultimate tariffs are going to be and what products they're going to be.
We've got the stochastics going our way.
Impact everybody. You heard Chris Waller say.
This is what happened the last time I got right here. Same thing.
When do we get some?
But you see, it's
will tell us one way or another.
the distance to it is shorter.
So we're going to be living in.
See, I want to take the short right there. That's where I want to take the short.
Well, it's also a question of even when that hard data materializes, which portions of the hard data the Fed chooses to be most reactive to. Is it anything that indicates cost pressures and inflation?
But I'm not doing it. See, there we go.
In the labor market, they got to pick a side.
Listen to the box.
Well, his view was maybe not.
It's called reading the forecast, damn it. Listen to the reading box.
Theory, enunciated by Jay Powell is that they'll look at which one of those is farther from where it should be and try to deal with that. Inflation is always their major concern. So if we do see,
This is why you listen to the boss.
now Waller differs from Powell a little bit in saying that he thinks that growth is a greater danger in the tariff scenario than inflation. Inflation would be a one-time jump in the price matter, whereas Powell said it could last for a while. So we'll have to see how that data plays out. The other thing people are talking about, though, is how this affects the rest of the world. Certainly, everybody we've had in here, and we've had a lot of finance ministers and central bankers from around the world this week, is saying that this is going to affect us. And then there is a rebound on our relationship with the United States. And last night, we were at an event where we heard people say it goes beyond economics to national security. Because if you can't count on the United States economically, can you count on them with national security? We have to take care of ourselves.
We're going to witness a confluence of these
The
two
box
issues
knows.
in a couple of
It
moments. The
does.
press pool is staged outside the Oval Office right now, and we're going to see President Trump and the Prime Minister of Norway really get to this. They're also talking about national security and how to
All right, so we're
the war in Ukraine.
running in a range now.
The market listening to this conversation, though, to what extent does the market have patience for each wrinkle? You know, we sit here obsessing over this, carrying all of these events live every day, Michael, and it's hard to tell how much of this lands and is actually being digested by the market or by an economist who sees news here that changes the landscape.
So if you were gonna try it, you would want to be at the top of these candles. You would want to sit here and you'd want to be in up here. But really, you want the 20 to show that it's going to be resistance for the move down. See that now you got a higher low on close. Oh, that's not closed. Got a minute 13. I don't know. This is no trade right now.
Things get walked back, and we've seen some evidence of things getting walked back. And then how much damage is
If we wait and miss it, then that's either direction. I mean, that's fine. I don't have a. Honestly, this is a long. The trade box is reading along, so you should be taking the long probably at the bottom. Probably like the slow control EMA for the long, but the problem is you're going long right into this mess up here that, you know.
Well, especially if you read the story rather than just the best headline, you would see that he actually said a comprehensive trade deal with China could take 2 to 3 years. Right. The idea that none of this, frankly, Mike, is seeming like...
Hey, SM, you out there? Has SM been here yet? He hasn't checked in.
These trade agreements take years to do, just to do the...
SM from Chi-Town.
And that changed that treaty very, very little.
He was like 50% on his eval yesterday.
Benefit both sides would take some real work, and each country is going to have different trade issues. Read something today about the administration hoping they can reach a deal with India that would be a template, but it's not really a template because what India wants to put tariffs on or take tariffs off on is not going to be the same as what Japan does, and so it's going to be very difficult. And each of these leaders, each of these countries has their own constituency. The Japanese, their biggest tariff is on imported rice. The rice farmers are not going to be very happy if the prime minister negotiates away the tariff that's put on there. And that's just one example in one country. This is however many countries. They say 90, 20, they give us a different number every day.
I think the press secretary actually suggested hundreds have called.
I'm still trying to count that many.
I didn't know there were that many.
But I didn't
hundreds
either.
plural.
So, all right. All of that said here, let's say the tariffs went away tomorrow. Donald Trump has a revelation at lunch, and we're just going to walk away from this whole thing. Do we go back to where we were? Is there kind of a neutral position that we revert to? Or has there been a corrosive, lasting impact when it comes to trust, as you pointed out, for the economy or security?
I think it might have been on the business side. Consumers tend to just roll with the punches, and if all of a sudden the idea that they might lose their jobs goes away, if they don't see prices continuously going up at the grocery store, then they may continue to go away because the economy was in pretty good
Are we going to
shape
break out?
this year. But business has to grapple with the idea that
Are we going to break out?
did all this.
I got to be honest with you. I want to get in on this long if we feel like we're
takes it all
breaking
off
out.
again, they've got to worry about whether he's going to change his mind again. And if you're making big investments, those are take place over a period of time. And you don't want to make an investment and then have the president change his mind again. So it does look like he's probably done himself and the country some damage that would be very hard to get over. Eventually, maybe you
So
leave him, but
this line of resistance, if that turns into support, I may get in for the long and just it is what it is. I think that's, it's starting to sell me on the long.
Tariffs, but there's been major questions raised in recent weeks about the credibility or the security that U.S. assets may even still be able to provide investors. Whether full faith and credit for U.S. treasuries is something that is still applicable. Are you hearing about that this week from these other countries who might be holders of this debt?
Less this week. Part of the problem is there is no real substitute. The U.S. Treasury market is the most liquid and deep market in the world, and you don't have a lot of alternatives. People can't switch en masse to another country. The German market, the French market, they're not big enough. China doesn't have a convertible market. So you're really looking at buying
So
American.
97 to 55, 20
Maybe you
points.
spread out your purchases, but people will still buy treasuries. As the old saying goes, they will always clear, but at what price?
I'm going to sit right here.
Do we see interest rates
I get picked up,
rise
I'm going.
to attract
I think
that
we're going the whole way.
investment? And then that feeds into the whole question of our budget deficit, which is a separate issue that a lot of people you do hear about talking about, that interest rates are going to have to rise to even without the trade issue just to get people to buy, which makes the budget deficit worse. So this is an issue that will be on the table for quite some
If I
time,
get
because
picked up.
even without trade, you've got reconciliation in the whole budget process, and they've got to figure out how to pay for the tax cuts and everything else.
Scott Bessent being described as the grown-up, the adult in the room, so forth. You spent time with Scott Bessent before he was the Treasury Secretary. You spent time with Howard Lutnick as well. I just wonder, when you pull back here and look at a more sort of a relieved market in the last 48, 72 hours here, how much of it has to do with specific headlines versus the idea that Scott Bessent has won the battle of who gets Donald Trump's ear?
Well, I don't think you can say that anybody is seriously trading on the idea of Scott Bessent winning the battle, because that can change in a moment's notice.
Fine.
We know that the president could come out at this lunch and say something against Scott. And so I think the relief is that more bad things haven't happened. And while they're still out there, they're still out there. They're not maybe as imminent as they were. So we're going to trade in the meantime. But all of this could come back the same way very quickly.
Yeah. All right, Michael McKee, Bloomberg International Economics and Policy Correspondent, here with Washington on a busy IMF World Bank week-long extravaganza. Thank you. And of course, as Mike alluded to, you never know what we're going to hear in the Oval Office, but we're about to hear more of something as the press is heading in now, as the president, of course, gets ready once again to be sitting across from the Prime Minister of Norway.
That's right. Elbows high as we pile in to the Oval Office. We saw them earlier before their lunch, Kaylee, the Secretary of State, Marco Rubio, and the Secretary of Treasury,
SM.
among those, including
What's up, brother?
Wall Street National Security Advisor, spending time.
Make any trades yet, or you been in school?
We've got the Prime Minister there. We've also got Jens Stoltenberg, the former Secretary General of NATO, at the couch in the Oval Office. He's been present for all of these conversations.
Yeah, now.
All right, how'd you do?
Norway's finance minister. So he's
$30?
in line for this
Good.
as well, and President Trump has just begun. So let's listen live on Bloomberg TV and radio.
All right. Oh, man. I don't know if I want to chase this now. I'm going to wait. If it gets me, I'm good. If I get pounded out, then I'm okay. How'd you feel about it? Did you feel pretty good, or? That's right. That's right. The C is not on the degree either. You just hand the degree over so they can see that you have it. That's the only C on the degree, is that you can see it.
This next few days is going to be very important. Meetings are taking place right now. Additionally, we talked about trade, and we get along very well. I think we'll do something.
I'm with you, my friend.
I think the Prime Minister knows that over the years, the United States has been very good to a lot of people.
Ooh.
And it's time for us to benefit also. So we're going to have a good relationship on trade, and
Oh, is this
we
gonna
discuss
start?
things also.
We look after
But,
security in the
Mr.
north,
Prime
in the
Minister, it's
Arctic,
an honor to have you
a lot of
the White
confidence
House.
between
Thank
our
you very
services.
much.
Well, thank you,
we
Mr.
have
President.
discussed,
This is this year is the war in Ukraine. I have saluted the president for his
There's
commitment
Trump.
to make progress towards something that
I
can
guess that's the Norway president.
an end to this terrible conflict. It is a complex picture, but it needs political will and push, and we have exchanged ideas on that. And then I think the president and his team have been
Yeah.
to hear our perspectives.
Norway is a pretty rich country, I think, right?
We have also
They got a lot of natural resources.
we can benefit, both of us, by trading. We can be complementary.
All right, we'll see if
We can find
we'll see if we got faked out or if this is gonna be okay if it gets me.
and the tone of this
Yeah, oil. That's what I thought.
confirmation of a very strong partnership.
A lot of offshore oil, right, or something like that. They got a do they have hydro too, or is that the Netherlands?
Have you spoken about the tariffs that you want to impose on Norway? Is there a chance that you can lower
We spoke
them,
about
lower
trade,
those tariffs?
and we understand each other very well. I think we'll have no problem.
You think that's
Ah.
I think we'll have no problem.
All right, I need to move up. I need to get in on this. We're turning into support.
We didn't, but
I don't want to have to mark it in.
I've been there, and it is a beautiful place. They have.
But I told the president,
Nuclear,
you know,
deep sea drilling.
as
Yeah.
in the term, he's welcome to visit Norway. We would like to have him, and it will be another way of emphasizing this strong friendship.
Mr. President, Norway has been a
Order filled.
supporter of
Oh, I'm filled.
since
All right, let's see if I chased it too far.
Has something been discussed here today that may have altered your views on things?
No, we want to, very simply, I have no allegiance.
There's our targets.
I have allegiance to saving lives, and I want to save a lot of lives. A lot of young people, mostly young people. It's the war. It's the soldiers. And if we can do that, also, as you know, I got started because
Oh, I didn't have my copy trader on. Damn it.
war is insane. It should have never happened. And it would have never happened if I were president.
Oh well, that's
But
okay.
Biden spent $350 billion on this, and it's a shame. And that's what got me involved. And then I looked at, and I see the results. It's horrible. It's a killing field. 5,000 soldiers a week on average. And we want to stop that. We both want to stop that for a lot of reasons, but I would say that is my number one reason.
See, 42 seconds to the next candle. Going long.
That you will get Russia to accept a deal that also Ukraine and Europe.
2 contract, 2 minis on.
I do. I believe they will accept, and I think we're going to get this over with. I hope so, soon.
Let's see if we break out of my shaded zone here.
Continue to lack support from NATO allies in your goal of obtaining Greenland. How will you proceed if you don't get that support?
Well, Greenland's going to be interesting, but that's for another day. I think we need that for international
What are you
peace.
expecting of
And
your
if you
allies?
don't have that, I think it's a big threat to our world. So I think Greenland's very important for international peace. Yeah, please.
Mr. President, this morning in Truth Social Post, you used the words Vladimir, stop.
All right, there we go. I like that candle. Let's move up from here. Let's move out of this zone.
I didn't like last night. I wasn't happy with it. And we're in the midst of talking peace, and missiles were fired. And I was not happy with it. That's what I meant, and that's, you know, what it said. I assume that's what you mean.
Sorry,
Yeah.
if
I
the
assume.
bombs keep falling, will you consider additional sanctions toward Russia, or what will you do if President Putin?
I'd rather answer that question in a week. I want to see if we can have a deal. No reason to answer it now, but I won't be happy. Let me put it that way. Things will happen.
We're about to cross the stochastics, which you know what that means.
Putting a lot of pressure. You don't know what pressure I'm putting on Russia. They're dealing. You have no idea what pressure I'm putting on Russia. We're putting a lot of pressure.
Can you maybe tell us that?
We're putting a lot of pressure on Russia, and Russia knows that, and some people that are close to it know, or he wouldn't be talking
Order
right
filled.
now. The Prime Minister understands that better than anybody. He wouldn't be talking right now. He's talking, and we're putting a lot of pressure. I think he wants to make a deal. We're going to find out very soon, but it takes two to tango, and you have to have Ukraine want to make a deal too, and they're being hit very hard, and I do believe they want to make a deal.
Mr. Prime Minister, if I may.
You said that Ukraine have to give some
Come on now, let's go.
among them Crimea. Do you stand by that? And I know that the former NATO General Secretary today has told you that he does not agree and he believes in territorial integrity of the Ukraine. How will you deal with that with your allies? And do you stand by that Ukraine have to give
Former
Crimea
Secretary
to
General happens to be right here, so they can't put words in his mouth. He's been a great general, frankly. It was because that's what you are. Really, you're a general. But he's been a great Secretary General. We had a tremendous relationship, very successful, and I think he could speak for himself. He's right here.
But do you
Come on now, let's go get my target.
Ukraine have
Come on.
to give some territory away to win peace?
Well, it depends what territory. They've been fighting. They've lost a lot of territory. We'll do the best we can.
Come on, push up. Push this candle up.
The best we can, but they lost a lot of territory. When you say Crimea, that was handed over during a president named Barack Hussein Obama. That had nothing to do with me, Crimea. That was 11 years ago with Obama.
There we go.
And,
Come on.
They made a decision. There wasn't a bullet fired. There was no fighting. There was no anything. They just handed it over. Now they say, well, can you get it back? I think that's going to be a very difficult thing to do. That was given by Barack Obama when he was president, not by Donald Trump.
Thank you, Mr. President.
you had a long
You have a
meeting,
peace
Mr. President.
proposal that you put on the table.
Come on.
Proposal, your national security team presented it to both Ukraine and Russia. 2 months ago, Ukraine agreed to that ceasefire proposal immediately. Russia has not. And my question is Russia the obstacle to peace based upon that?
Come on, push.
That 30-day ceasefire.
I don't think so.
All right,
I think
I'm
they
going to
both
pull
want
these
peace
off
right now.
and just take that profit.
We'll see what happens. Complicated, very complicated. But I think they are both very much looking to make a deal. Marco, what would you say?
Well, first of all, what was put before our partners was options to discuss about things that it would
Stop.
take.
All right, got that in the bank.
This war is endable. Both sides just have to agree to it. We've shown them a pathway forward. We've discussed those ideas. It was a good meeting yesterday. There'll be good meetings over the weekend. We've shown them the finish line. We need both of them to say yes. But what happened last night with those missile strikes should remind everybody of why this war needs to end. It's horrible those missiles landed. What's even worse is there are today people that were alive yesterday that are not alive today because this war continues. And the president wants to stop it. And everyone should be thanking the president for being a peacemaker and trying to save lives. That's what we're trying to do here. It's not our war we didn't start it, as you know. But we're trying to end the dying. We're trying to end the destruction. And we've shown the path forward. We can see the finish line, but both of them have to get there. We're going to do everything we can to help them get there, but they have to ultimately say yes.
And we are using a lot of pressure on both. If you think we're just in there because we're nice people, and we are nice people, but we're using a lot of pressure on both.
What concessions, Mr. President, and to your national security team, what concessions has Russia offered up thus far to get to the point where you're closer to peace?
Stopping the war, stopping taking the whole country. Pretty big.
5 seconds to the next candle.
Mr. President, if you are going to take down the tariffs, what do you want Norway to buy more of from the U.S.?
To buy more? Well, you don't need snow. You don't need skis. You don't need ski champions either, right? You have a lot of.
Trying to figure if I'm gonna go in for a couple more. See if we run hard.
I think now maybe closer than ever, but we've had a great relationship with Norway. I think just keep it the way it is, kid. You can't do better.
Really? Not even by, say,
Well, if they want to give us some additional concessions, that's okay. You can't do much better. Yes, yes.
Mr. President, you've had a long meeting with Norway today. You said that Norway is doing a lot of things right, but on the Ukraine, if I can ask both you and the Prime Minister, did you find common ground today on Ukraine and the peace plan?
Totally. It's totally common ground. The Prime Minister can speak, but I can just say he wants to see people stop
Just add it.
more than anything else, and he'd like to see it end. He's going to help us end it.
All right, now let's continue higher. Come on now.
To move towards an end of this war, U.S. engagement is critical, and President Trump made that possible. That is clear. That is obvious. It's really happening. Now, the important thing is that both parties have to know that they have to deliver, and they have to feel the pressure to deliver. Ukraine is under attack. They are defending themselves. Lives are being lost. And we believe very firmly that there needs to be a ceasefire, the initiative taken by the US some time ago. It needs to be respected. And then to move on to something which both parties can own.
Come on now.
That is the complicated part in such a dramatic war. And here I believe Europeans and
Want to get in
Americans
behind it.
together, as we do much closer now. I salute the team of President Trump for being, open in that process. We had a good discussion on this today, and then we have to move on, and we cannot lose time because there's drama happening.
Damn it.
One thing is people losing their lives, but it is a bad thing for Europe, and it's a bad thing for the world to having such a broad conflict going on. It can have ramifications far beyond Ukraine.
Mr. President, my follow-up question. Mr. President, I forgot my question now. I wanted to ask about.
It's all right. That happens.
It happens sometimes, yeah. No, Mr. President, I wanted to ask about the. Well, actually.
Order filled.
Zelensky has said that he wants more Patriot missiles. So far, there's been no response from the United States.
Come on.
And the United States decides to pull out of negotiating for peace, trying to go for peace, does that also mean a no on Patriot missiles, a no on sharing intelligence with Ukraine?
Let's see what happens. I think we're going to make a deal. And if we make a deal, that'll be wonderful. We won't have to worry about your question. You can ask that question in 2 weeks, and we'll see. But I think we're getting very close. The Prime Minister feels the same way, and we'll hopefully not have to answer that
You said
question.
once the president.
Norway is the third country to.
This is painful. Come on.
Why did you invite Norway so soon to the White House?
Because I like them. And I like your Prime Minister, and I like the way your government.
I can't let it go much longer.
And
God
I
damn
respect
it.
the king. He's highly respected. It's a great thing. Not an easy thing to do. He's done a great job. Yeah.
Would you like an invitation to visit the king?
Absolutely. You get me that invitation.
I just told the president he's welcome to visit Norway.
President Trump, first like farming you said before that you like the Norwegian Petroleum Fund, and I'm wondering if that has been up for discussion today, the way that we have structured our money and whether.
Well, this fund was created in the late 1990s to save for future generations the income from oil and gas. Norwegians should continue to work as hard, dedicated, innovate, and move forward, despite having these incomes, which we happen to be in the period of our history where we can harvest, and we have transferred that into investments, half of them, by the way, here in the United States. So I think this is a model which we have been able to explore. If we can share experiences, and we do with our colleagues in the US, you never copy this one-to-one, but there can be techniques and way of working that we have used in organizing our fund. Jens Stoltenberg was the finance minister when the first dollar entered that fund, so he is a safe hand to have as a finance minister today. What do you say?
No, and as you said, Mr. Prime Minister, we are ready to sit down with the US to also work with them on if they want to establish a sovereign wealth fund, because we have a good experience with our fund. And I think that one example of how we work together with the United States is that half of the fund, close to $1 trillion are invested in the United States, mainly in equity, but also some in fixed income, including government bonds. So this is an expression of trust in the United States, expressed by the strong investment of the sovereign wealth fund. Then just briefly on Ukraine, since it was mentioned, we had a very good and extensive discussion about Ukraine, the path forward to peace. And as the Prime Minister said, we commend the US for pushing forward to try to find a negotiated solution. At the same time, we need to continue to support Ukraine.
Come on now.
Therefore, I'm proud that Norway has actually tripled the military support to Ukraine. And this year we will allocate close to $8 billion to Ukraine. That will strengthen them and also their hand on the negotiating table.
If I may add to that, if there's a peace, and there will be a peace, we have a common responsibility in securing democratic Ukraine for the future. And the best security guarantee they can have is the ability to defend themselves. And we are investing in that.
Mr. Prime Minister, if I may,
As it relates to tariffs, Mr. President, when you unveiled your reciprocal tariffs on April the 2nd, the tariff rate for Norway was 15%. Based upon your conversations that you've had today with the Prime Minister, do you see that tariff rate coming down from what you proposed just a few weeks ago?
Well, they have a great fund of $2 trillion. It's a big fund. And they don't have any debt. So I think they'd probably be willing to pay us more than that, I hope.
Are the two nations in agreement?
Mr. President, in 2018, your former secretary...
Come on, bounce off the 20 and go. Bounce off the 20 and go.
Administration. Why has this administration changed its stance on territorial concessions for Crimea?
Well, the war started. It would have never started if I were president. This is a war that is horrible. All wars are horrible. This one is in particular bad. And I don't know that you can ever say there's going to be a winner to this because so many lives have been lost. Not only soldiers, I mean, a lot of lives have been lost. I think that we want to do one very simple thing. It would have never happened if I were president. Zero chance it was going to, and it didn't. You know, people say, how do you know that? Number one, it didn't happen. We never even discussed it. I would talk to Putin about it. It was the apple of his eye. You know, Ukraine was the apple of Putin's eye, but there was never even a thought that he'd go in. And I think he understood that I would not be happy if he did. And it was only when I got out, and you know, when you mention what happened to Ukraine years ago under President Obama and a vice president that was also president later, unfortunately for this country. What happened is large chunks of land were given up, and it was called Crimea, and that was a big
Come on.
thing. That was a big moment. But this isn't my war. This is Biden's war. This is a war that Biden was president when this war happened. But I'm trying to put out the fire, and I think we'll be successful. And if we do, we're going to save a lot of lives. Otherwise, and the Prime Minister had a statement, he said, this is just a point in time. We're very lucky because this is a point. And if this doesn't happen, this could go on for a long time.
Mr. President, will you have meetings with other world leaders when you're in Rome, sir?
Future Democrat president?
I don't think he will. I think he wants to make peace. I think he wants to end it. And I feel pretty confident of that, but we're gonna know pretty soon.
Mr. President, will you have meetings with other world leaders when you're in Rome?
Yes, I will.
Which leaders do you want to meet, sir?
Well, I'd like to meet them all. That would be nice. I'd like to take care of all of them, but we have many of them there, and they all want to meet. They want to meet about trade, and we are making some great inroads and great deals. You might want to speak about that, Mr. Secretary.
We had a very successful bilateral meeting with the Republic of South Korea today. We may be moving
All right.
faster than I thought, and we
Come on, Trump, say something nice.
as early as next week as we reach.
Took a little heat. We took some heat.
As soon as next week.
I ain't gonna lie.
The Koreans came early. They came with their A game, and we will see if they follow through on that.
President Trump, you're rounding up your first 100 days.
Do you think you deserve the Nobel Peace Prize if you manage to create
Do I deserve the Nobel
If you manage to create peace?
Well, maybe for the Abraham Accords. I don't want to get ahead of myself in this one, but they say for the Abraham Accords, and by the way,
Come on,
speaking of
push.
that, we're going to be filling it up. A lot
You
of
can do it.
countries want to come into the Abraham Accords. You know, we have 4, and Biden did nothing on that one too. It's the same 4, but they're great countries, and they were brave doing it, and it's worked out very well. And we're going to be filling up the Abraham Accords. They're going to be, I think, filling it up very rapidly.
You can do it. Push.
Did you say something about that?
There's great enormous opportunity to grow the Abraham Accords, but I would just point to one thing. Of all the leaders in the world today, no leader is working harder to prevent wars or end them than President Trump is right now. We're trying. That's why we're talking to Iran. That's why we're engaged with Ukraine and Russia. It's the desire to
Come on.
prevent these wars from
You're
breaking
almost
out
there.
and end the ones that exist already. And again, I just think it's tremendous for our country to be led by a president who desires to bring peace and establish peace and protect peace. So it's hard work.
Mr. President, you know, Marco just mentioned something that maybe we should talk about for just a second, if we could, Mr. Prime Minister. And you're
Damn it.
involved in it
Come on.
too, because you've been involved in the world and peace. But I think we're doing very well with respect to Iran, and we're having very serious meetings.
That's not good.
And there are only two options. And
I
the
might
good
be wrong
option
on
is
this one.
Not a good option.
Come on.
It's not a good option. at
Be
all.
resistance.
And I think we're doing very well on an agreement.
Or
with
support. Be
Iran.
support.
But that one, we're doing a
Be
lot of
support.
things, I will
Be
say.
support.
But that one is well on its way. We could have a very, very good decision, and a lot of lives will be saved.
Mr. President, on the economy, there was a slowdown. Mr. President, on the economy, there was a slowdown as it relates to home sales in the month of March. The
Come on, be
slowest
support.
pace since 2009. Is that an economic indicator, and perhaps the Treasury Secretary can weigh in on this as well? Is that an economic indicator that concerns you about the broader U.S. economy?
No, they have very good numbers
Well,
in housing today, extremely good numbers.
I might be forced to here pretty quick.
Because, you know, if you look at what
I'm gonna
happened,
cut
they
it.
said,
I'm gonna pull right behind here any second.
Energy just hit $1.98 in a couple of states. It's way
I'm
down.
hoping that was a
Energy's
sweep.
down, and we're about $64 a barrel. When I came in, and we were
Hoping that was a sweep. Come on.
$95. And by the way, that helps us solve the war too.
Now I'm hoping the 20 is support,
A big incentive.
and we
for
can
Russia
continue
to
up.
Also agree with solving the war problem. Groceries are down. When I was with you 2 months ago, you were complaining about eggs. I said, I just got here. I was here for about a week when the press started saying about eggs.
Come
have
on.
gone through the roof. I said, I just got here. Tell me about eggs. And they have been. They went through the roof and you couldn't get them. So we just had a big Easter egg hunt at the White House. Thousands and thousands of eggs. And the price was down 87%. So we did a great job. Housing is doing very well. We should lower interest rates. That's the Fed. I hope they lower interest rates. That's a smart thing to do. Be ahead a little bit, although already it's a little bit late. But in the end, we just have a great country. We have a very strong
Come on.
country, and we have
Be support.
every other country. I can't think of one country.
Be
that doesn't
support.
wanna
Be the ball.
negotiate
Be the
a
ball.
deal. And they either negotiate a deal or we set a deal that we think is fair. Because we don't have to go through all of these. It would be physically impossible. You know, you have so many people that really understand it, which is a very small group of people here. And
See the ball. Be the ball. You are the ball. You know that, Caddyshack?
treated us very unfairly. They'll be tariffed higher than others. But we've been ripped off for many, many years. The United States has been ripped off like no country probably in the history of the world has been ripped off for 45, 50 years. And countries have gone rich by doing that with the United States. We've taken care of their militaries, and military is another subject we talk about. We're not going to make that subject to any of the deals, but you know the same countries that I do, where we virtually take care of their military, and then we don't get treated
Come on, be
fairly
support.
on trade. So the people, and I don't blame those countries. I blame the people that sat at that beautiful desk right behind you, because those people didn't do the job for this country, and they let us lose $4 billion a day on trade. We were losing $4 or $5 billion a
Yes,
day
he
on
is a
trade when
legend.
I got here, and now we're going to be much better
Come
than
on.
breaking even, and we're going to be making
Be
$4
support.
or $5 billion a day on trade.
Just be support.
But I don't blame any country, not the worst of them. And we were abused by countries. I blame the president of the United States that happened to be sitting.
I don't like
when
that
these deals
candle.
were made.
That's the candle I don't like. That's the candle
When I
that's
was
fucking
here, we-
shit.
4 years,
Come
we were
on.
the most successful economy
Be
in the
support.
history of our country, my first term. And we were very tough on trade.
I got roped in. You know what I added?
Hundreds of billions of dollars in tariffs. But nobody else ever did that. China paid not 10 cents to any other president. And but not only China, virtually every
Come on, blow through the
got
20.
away with murder. And we just can't let that happen. Thank you very much, everybody. Thank you very much. Appreciate it. Thank you very much.
Super chop, yeah. This is the danger of adding. This is the danger of adding. Come on, just hold this line. My trade idea is that it holds the line and that we go to 55.19. So we'll see if I'm right. If I'm wrong, I'm wrong. But hold the line.
Yeah, that
I gotta
was
quit
certainly
adding
the focus.
contracts.
The president, he said, we're putting a lot of pressure on Russia. He was asked about Russia sanctions. He said, stay tuned, I will answer in a week. The president asked about additional Russia sanctions. He said things will happen.
51
He
seconds
thinks
to the
Russia will
next
accept
candle.
a deal that Ukraine and Europe like.
Should also point out they talked a little bit about a sovereign wealth fund, which of course Norway has. And the president talked about meeting leaders in Rome, where he will be there for, of course, the funeral of the Pope. So maybe some conversations coming out. He also did talk a little bit about the Fed and saying that he hopes that the U.S. central bank lowers interest rates, and he reiterates his criticism that the Fed is late. So again, some of the major issues that are certainly top of mind for investors. But again, it does feel like we went back to geopolitics in a big way on this Thursday. All right, so let's talk about that, and let's start.
Where are we
there.
at?
We have a great guest, someone we turn to
Come
often
on.
when it comes to some of the big issues that are
6
facing
seconds to the
global
next candle.
relationships. Back with us is Ed Price. He's a former British trade official. He's now non-resident senior fellow at New York University. He's advised members of the European and British parliaments. He's a former British trade official, and he writes often about politics, economic policy, and so much more. And he joins us now.
Be a flag.
from
Let's go.
upstate
Be a
New
flag.
York.
Let's
Ed,
go.
Good to have you here. How are you?
I'm well, Carol. Thanks again for having me. How are you?
Doing well, trying to keep up, and certainly taking our cues out of the White House, and specifically just moments ago from the Oval Office. Let's start with, I think, what is top of mind and what seemed to be top of mind for the discussion between the Prime Minister of Norway and President Trump just moments ago, and that is Russia-Ukraine. U.S. is expected to demand that Russia accept Ukraine's right to have its own army, defense industry as part of a peace agreement between Moscow and Kiev. How do you see these developments and where it might be going, and what might bring this to an end, if any time soon?
Sure. So I'm very puzzled about the situation in Ukraine, honestly, because it seems to me from the outside that Putin has been slowly losing this
Come on,
war
be a flag.
and slowly losing
Minute
this war
25 to
at
the
least
next
against
candle.
his initial ambitions, which, as we know, included
Yeah, it
the
is, man.
fall of Ukraine,
It is.
installation of a puppet government. And so if you go away and read about this, ask people that are better informed than I, maybe who travel more
Hold the
frequently over
20.
there, they'll tell you that Putin is doing
Hold the 20.
pretty
Let's
poorly,
turn up.
and that the Russian economy is not in the sort of place that could continue this war for long. And so when I see President Trump,
We're at
announce that he's
5,500
going
right
to
now.
come up with
Let's
a
break
deal,
it.
I don't understand why he doesn't push forward with more
Might be a
weapons
psychological
and more
number, that
supplies to Ukraine
55.
in order to push that deal forward, whatever it is. So it's very confusing because on the one hand, Trump seems to offer carrots to Putin, carrots that Putin hasn't asked for, while withdrawing the stick. I haven't actually read the art of the deal. That might be how you're supposed to do it, but I'm not sure.
36 seconds to the next candle. Let's break this
Something that he has
zone.
been consistent about is the disdain that he has for the loss of life. And it's something that he mentioned several times today,
Come on,
talking
let's
about
break
the
it.
thousands of young people who continue to die in Ukraine each and every week as a result of this war. Could it be, in your view, that he just wants to end the fighting?
He may want to end the fighting, but I'm not sure that the same man who threatens Greenland, Panama, and Canada with possible military action truly cares about the loss
Let's
of
go.
life. So I would put that down to a nice
3,
talking point
2,
that he does want
1.
to repeat because it's
Boom.
powerful.
Let's go.
And I should be careful myself as,
Come on,
as
green
an
candle.
analyst not to enjoy or celebrate wars. And we talk about this one in Ukraine very often. It is indeed tragic. Now, that might be cynicism. I don't look at President Trump at his entire policy agenda,
Come on, green candle.
at his entire foreign policy agenda, and think this is someone who cares about lives. Need I remind the people watching or listening to this live stream that we've also been sending people without due process to El Salvador. So I would certainly take President Trump's concern for human rights or the loss of life with a pinch of salt.
The other things that the president has certainly talked a lot about, and to be fair,
Let's
it
go,
is
green
his
candle.
quest and his mission to make sure that the U.S. has what
Let's
it
create
needs for
support.
national
Let's
security.
go.
And I think it's safe to say that a lot of nations are thinking about this at this point. He talked about Greenland, important for international peace. You've been traveling, Ed. You've been not necessarily to Greenland anytime soon, but you have been to Panama. You've been to Canada. I am curious what you've been hearing, seeing when it comes to maybe a new global order.
Well, if there's a Bloomberg challenge for me to go to Greenland, I accept.
We'll work on that.
And I'll report back. We'll work on it. Canada and Panama are in the same mood. And when an American citizen turns up and says, look, what do you think? The answer is not much. Both of those countries are very upset with the idea that the United States, the apparent champion of liberty in its 249-year history, would be threatening the annexation of allies. It's completely bizarre.
Come on now.
And it's also something that I think is causing quite a lot of stress. Now, the Canadians and the people in Panama were very polite to me. That might be because they were misled by my accent, and they thought I was British. But as soon as I said, look, I'm actually American, in a hotel lobby or even at the checkpoint, there were raised eyebrows. So we always talk about whether Trump is serious in his foreign policy script. I don't know if
NQ is
he
going to
or not.
break
I think
out.
it is, but other people abroad do.
To the
Do you
NQ.
think there's a legitimate argument for the United States to want to annex Greenland?
We need to
I
turn
think
this
security-
trend
from a
line into
security
support,
perspective,
and then it's
No,
no
it's completely
looking back from there.
Because whatever the gain in annexing Greenland, there would be a loss in the EU as an ally. And you could never fully sit down with the eyes and ears of God and calculate what that net calculation would be. But I'm pretty sure you could take a rough estimate and say, okay, we expand our presence in Greenland, we formally change the deed, we say we own it, and we put a few more troops in there. Just imagine how annoyed and disgusted Denmark, France, and other EU countries would be with us. I mean, they could turn around and say, well, look, if the United States is actually willing to cross frontiers and take land that doesn't belong to them, maybe a deal with Beijing, which, to be fair to the Chinese, they haven't actually done that. Maybe a deal with China is in our interests long term. So I think there's absolutely no argument for it when you sit down and do the net calculation. If you have a simple view of the world and you think this is
All
mine,
right,
that's
let's
theirs,
see.
then
Let's
of course,
go
like
break
I said
out.
before, you can draw a Sharpie around an area and say it's mine. But I don't think that's taking into account the second order effect of losing the Europeans.
Well, just a reminder of what the president said last month in an address to Congress, quote, "We need Greenland for national security and even international security, and we're working with everybody involved to try to get it one way or the other. We're going to get it."
One of the things I think about, Ed, too, as we are watching kind of the back and forth between world leaders, I guess what
All
I'm
right.
most
Break
obsessed
out,
with
break
is
out.
U.S.
Minute.
and China, just
Oh, we got a
because
minute.
they are
10
the
to
two
the
big
next
economies
candle.
and determine and control, I think it's safe to say, so much. Having said that, what is the strategic balance, as China is not the China it was 5 years ago or 10 years ago that maybe needed an assist, or 20 years ago, right, when so many different global companies set up shop there. We've been talking a lot about the EV market and BYD and the advancements that China has made technologically.
What do you guys think?
In this world? And they have done
Am I on
this
the right side?
largely by supporting so many of their industries and helping them develop. So I do wonder, we had the Whirlpool CEO on yesterday who manufactures about 80%
go,
of
big
the
run.
United States,
Come on.
80% of their supply chain is here, and is somewhat, I would say, safe to say, supportive of some of the tariff pushback to help him develop his
We clear that
domestic
forecast cloud. If we clear the top of that forecast cloud, we're going to be looking okay.
good position. So what is, like, as you talk to world leaders, as you travel, some of the argument many would say that Trump has makes some sense in terms of developing some industries here, protecting our national security. What is the balance for any nation, U.S., China, or the Europe region, to have
NQ just cleared that trend line.
kind of get along on a global basis, which is necessary for things like climate change, the environment, and so
Come on.
much more.
Continuation. Let's go. Continuation.
Well, let's go through the exercise, Carol, and let's be
Perfect
fair
candle
to President
continuation.
Trump.
Come on.
I think that he deserves an A+ on his report card for identifying global problems. This is the man that's identified that the Bretton Woods trade imbalance, that is that other countries have a higher tariff rate than the US, he's the man that identified that that's out of date, and he joined the dots between that and an unsustainable
Okay, we're
fiscal
even.
position in the United States. He's also right, to be fair to the president, to point out that great power politics and great power behavior is a feature, not a bug of history, and that the United States should be ready at some point in the 21st
Hold that
century for
continuation.
conflict.
Let's go.
So the president, from some analyst like me, gets an A+ on identifying the problems. Where we run into trouble is the execution and the suggestion that Donald Trump alone, in his sort of chaotic ad hoc behavior, is helpfully moving the United States, its allies, and the world back into a new, more helpful equilibrium. So I don't think that that's what he's doing. Yes, the United States cannot continue to borrow the way it's borrowing and subsidize the world's security, but the way to fix that is to keep our allies closer, is to do trade deals with the people that like us and maybe even reduce tariffs with them. So he has to get, what, a D-? I don't want to fail the guy outright because he's the president of the United States and his success is everybody's success.
Right.
But this this chaotic approach to things is not going to bring the world into, so far as I can see, any new equilibrium, despite what Scott Bessent and Marco Rubio tried to do after Trump has spoken, which is turn up in the press and say, actually, this is what he really meant.
Yeah, it's why folks like David Brooks of the New York Times has said, the president
So
is maybe
liquidation and run.
the wrong answer to the right
Liquidation
question.
and run.
Many would say, whether it's tariffs,
Come on,
or
run, baby.
geopolitics, or
We can
decisions
root.
in the world, that he's brought up a lot of issues that need to be dealt with and discussed. Ed, we apologize. Things have gotten a little hectic today, and obviously we had to listen to President Trump there at the White House.
About 20 seconds to the next candle.
Back real soon. Really appreciate you weighing in. Ed Price, always timely, senior fellow at NYU, non-resident senior fellow, former British trade official, joining us once again here on Bloomberg.
Well, stocks still higher, just close to their session highs. Charlie Pellet has had a close eye on everything happening when it comes to business news in the markets. Let's get a business flash from him. Hey there, Charlie.
Hey, thank you very
Come
much.
on,
Tim.
push
Here's
this
what's
candle
going
up.
on. We've got
Let's
the
go.
Dow Jones Industrial Average retaking
Either run or
40,000.
candle.
Going to be
Come on.
very interesting to see whether we close above or below that big round number today. 40,040 right now on the Dow. And of course, earnings coming up after the close of trading today, both from Alphabet and Intel. Complete coverage on Bloomberg Television and Radio when those numbers drop right after the closing bell. S&P up 101 now, up 1.9%. NASDAQ up 426, up 2.5%. The 10-year yield 4.31%. The 2-year 3.79%. Gold up 1.5%. 33.36 now on the precious metal, and crude up 0.8%, 62.77 a barrel. Recapping, S&P up by 1.9%. I'm Charlie Pellet.
break the zone.
This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovic live here on Bloomberg Business Week Daily. Well, the Commodity Futures Trading Commission is asking for public comment on allowing round-the-clock trading in derivatives markets.
There we
This is
go.
according to a
We're up
statement
$100 for the
out
day
earlier
right
this
now.
week. The CFTC also wants input on offering perpetual futures. It's a type of contract that's popular outside the United States and gaining some traction in digital asset trading. So we want to talk about that. We want to talk about the overall massive derivatives market. Delighted to have with us in our Bloomberg News DC Bureau is acting chair of the CFTC, Caroline Pham. Chair Pham, so nice to have you with Tim and myself.
There we go. Come on,
Let's
run,
talk
baby.
a little bit about the market
All right.
volatility that we have seen over the last month or
I'm
so.
back to break
What
even.
have you seen in the derivatives
Even for the
market,
days at like
amid the
505,
volatility,
750.
flows,
So I want to
oversized
get up to that at least, and hopefully we get the runner to make our money today.
Sure, of course. So one of the things that is really
We're up 350 for the day.
market volatility and all-time
That scrub
highs
account
as volume
popped
is
out
that the markets operated
on the way
in a
down.
functional and liquid manner. So we were really pleased. Of course, all regulators were concerned about the market conditions. You had the very sharp spikes with the volatility. You had the record.
Anyone have a good target? My target's 19 right now.
Were resilient. There were adequate margin levels. A lot of people have thought about what happened in March 2020 with the dash for cash. And we
I'm up 400 right here.
Again. So you saw the global regulatory community come together with some margin reform, and we're pleased to see that all worked as planned.
Yeah, I'm going to
and
move
no
up a little bit just in
significant
case.
issues. So I think relieved to see the markets performed well throughout that volatility.
Short order
Significant
block, that's not
operational
good.
issues. That's certainly great
Come on,
news.
push through the top.
Was anything close? Were there any issues of concern for you?
No, we were in close
Come on.
contact with all market infrastructures and market participants throughout the market stress and market conditions, and we had no significant issues, no issues of concern whatsoever.
Come on, blow through the double
You are
top.
seeing or hearing, this is certainly your
Come on,
world. I
one
guess we're
time.
trying to gauge whether or not foreign investors are pulling back on U.S.
Pay for that deal I lost today.
I'm just curious to know what trend flows are. Again, this is your world, and
All right,
as you talk
I'm liking that candle.
officials here in the United
We're about to
States,
cross on the stochastics are about to cross. So hopefully, if we get a good clean cross, we'll get a run.
Look, I think it's very tempting
Hoping for
to
that.
trust the charts and to be very focused on sort of the, minute to minute, day to day, spikes, but that's just all part of market functioning. And I think what you're going to see, as it has
Come on,
been
good
for
clean
decades,
cross. There we
that
go.
the US is the
That's it.
world's reserve currency, that
Go get
US
it.
Treasuries are a
Come on.
safe haven, and in fact, the
Go
global
get it.
financial system runs on US Treasuries. So I'm confident that that will continue to be the case.
Are you not concerned that the U.S. is losing its status as a safe haven? Look what we saw with Treasuries. Look
All
what
right,
we've
we're
seen
double
with
topped
oil
right
in
now.
recent weeks. Is that something?
Let's blow through that
that's
double
concerning?
top. I'm up 800 where I am.
Again, I think it's important not to
I can
just
only do
focus
4,500.
on the minute-to-minute
That's half of the
day-to-day,
account.
but if you
So
look overall, U.S. markets have never been safer, sounder, or healthier.
come on, blow
So
through
one of the
that.
things we want to talk about, and we certainly set it up in our introduction to you, is about this 24/7 trading and the CFTC putting out requests for comment on
Come on, baby.
potential
Let's go.
uses
Let's
and
go.
risks to allow for 24/7 trading in the derivatives market. I know you just made the outreach, but any comments? What are you hearing?
Damn
and
it.
kind of what is top of mind when you think about uses as well as risks?
All right.
So I'm pleased
I'll give
to
it
talk
this
about
candle
issue
to
because
run.
It's something that we've been seeing in our markets for the past several years, but until recently, we did not have an administration and a policy that was pro-innovation and pro-growth. Both
I want to
in
see those
U.S. products
stochastics
as well as
cross.
in
Come on,
emerging
damn it.
markets. So again, the debate around 24/7 trading and extended trading hours or continuous trading hours has been very active for the past several years, but now
There
we're
you go.
finally moving from
Next
talk
candle in 10
to
seconds.
action. We've had a number of exchanges
7,
in
6,
our markets show their interest and announce
3,
that they are looking at
2, 1.
is
Blast
liquid
off.
enough to support
Boom.
continuous trading or extended trading hours. We also have to make
Blast
sure that we're
off.
prepared, again, from an operational perspective.
To the
because
moon.
As we discussed with the recent market volatility, it's absolutely
Oh, we're trying to ape out.
incumbent upon us as
All right, I'm up
regulators to make sure that
850.
the markets are functioning well. So that's what this request for comment is. It's a thoughtful set of questions that seeks to understand the
All right, I
uses,
gotta-
benefits, and also
I'm
risks
okay with
of
850.
extended trading hours or continuous trading hours. I'm really looking forward to the comments. Again, this
Who
is
thinks this
a
runs more
that's been very well debated for
before
several
pulling
years.
back?
I don't think we're going to see any surprises. And the CFTC has always been at the forefront of market innovation. We saw this with the creation of financial commodities and derivatives based on interest rates, indices, and then again with all of the new and interesting asset classes, including crypto.
Do you think it's a good idea? Do you think 24/7 trading of these products is a good idea?
I think 24/7 trading is appropriate, but only when there is enough liquidity. So
Let's
look at
go.
the FX market.
Little
The FX
fucking
market is
munchie
operating on a
run.
continuous
Come
basis.
on,
There's
damn
no
it.
closing hours for the FX market. What we've seen in some of these announcements is that people are focused on the crypto asset class right now. That's also one that trades continuously today, so it doesn't change anything about the current.
There's serious resistance at that double top.
That it's now happening in a regulated way with our futures
I'm gonna
products.
I'm gonna
So
pull
I think
in, I
that's going to be
think,
very
and
key. But again, we want to make sure we are
preserve
thinking through all
this.
the possible issues. And we
I don't
want
know
to
if we're
make
gonna
sure
break
doing
through
so
it.
in an open and transparent way with lots of public engagement and public comment.
How do you
There,
ensure,
I like that. Let's go.
that,
One more.
What could be a lack of liquidity during the off hours potentially, if it's 24/7 trading, that leads to maybe some severe disconnects in
There, we got a cross on the stochastics. That's good.
How do you make sure
There
that
we go.
doesn't happen?
Look at as soon as that cross hit.
That's exactly the key point because that's why it's so important to make sure there is sufficient liquidity. When you have something that already trades continuously like FX or like crypto,
Fuck.
it's
Come on.
less of a concern.
You can do it.
We are looking at everything from a very product-specific perspective. We're looking at each individual product, what asset class it's based on. But obviously, you would have concerns when you're looking at something that doesn't trade continuously today, something like ag futures, for example. That is something that we would be extremely cautious about before we move to anything like this type of innovation.
So it wouldn't be like across the board. There's very possible that there are carve-outs, right, depending on the market?
So this is, again, on a product-by-product basis. So we've had some exchanges that have self-certified or have shown interest to trade certain products, and these are all at this point in time based on the crypto asset class. on a 24/7 basis or 24/6 or 24/5. Some of this is future plans, so it's not actually live before the commission. But again, it's something where we're looking at very specifically on that product basis. It's not going to be where, all of a sudden it's a free-for-all in the market.
You mentioned crypto, so let's go there. How is the CFTC going to work
Come
with
on.
the SEC? Of course, Paul Atkins was sworn in as chair this week. When it comes to cryptocurrency, what's the plan?
I think what is great about this current administration is the clear vision that was expressed in the president's executive order on digital
All right.
assets.
287,
The president's working
37.
on digital
All right, I'm
asset
up
markets,
$37.
and the continuous communication we have with all of the relevant stakeholders, including all the regulators. I've known Chairman Atkins for a long time. I'm really looking forward to working with
Watch it run now. I got
his
chicken.
leadership. And this really resets the CFTC and the SEC back to how it's always traditionally been between the two.
Ah,
of us,
you
where we work
fucker.
together
Look at that.
on any issues
Now it's gonna
or
run.
jurisdictional lines. And that's something that's gone all the way back to at least the 80s. And it's something that I look forward to continuing as we move forward through creating more regulatory clarity in the United States for crypto.
Hey, one thing we got to ask you, Doge, it's gone to the SEC. Has it gone to the FTC?
I got
There
scared
is
on
no
that
Doge
down
at the
candle. I
CFTC
just wanted to
at
get
this
out.
time, but that doesn't mean that we haven't been doing our
All right,
own
let's
efforts
wait.
to make sure that we're being
I'm not
keen,
gonna mark it
the
back
most
in.
return for the American taxpayer and that they're getting value out of their dollars.
Gave up 800 in profit. I could have just went up and got it. But
Initiatives at the CFTC have already resulted in $18 million in savings. That's about 5% of our appropriated budget, about 12% of our non-payroll budget. And I'm pleased to say that this year it looks like on an annualized basis, we'll be on track to save $50
All right, I gotta make a
million,
call. I'll be
and our
right back.
budget is only $365.
What are you cutting?
We have some contracts that are excessive. We have had contracts where I think, just applying basic cost management principles, people didn't stop to think, do we really need 5 of the exact same contract for the exact same IT service? So it is really just common sense, reviewing our contracts, making sure that we are only paying for what we actually use and what we actually need.
Is sometime like a redundancy in a contract because to make sure that there's a backup program, or that wasn't the case?
No, that's not the case. Let me give you an example. $1.4 million on a focus group for consumer fraud. We all know that consumer fraud is bad. That is money that could be better put towards upgrading our technology, for example.
Hey, before we let you go, I just wanted to ask another crypto question. We learned yesterday that the president is set to have dinner with the top 220 holders of the Trump meme coin. The issuers of the cryptocurrency announced yesterday. We saw this on social. I'm curious, just as a regulator, how you look at the relationship that the president has with this digital asset, and as a person who is in charge of essentially creating policy on this stuff.
Our job is to make sure that we have markets that are safe and that are sound, and that we preserve market integrity, and that we make sure that, most of all, in looking at market integrity, that the markets are well functioning and that there is an actual connection to the fundamentals that are underlying the market. So for us, that is, of course, across the entire market. There's no distinction for anything else.
Does it make your job more difficult?
My job is difficult every day. It doesn't make any difference.
All right, we're going to leave it there. Listen, thank you so much. Really appreciate your time. We've been talking with Caroline Pham. She's the acting chair of the Commodity Futures Trading Commission, joining us from the News Bureau of Washington, D.C. for Bloomberg News. Hey, do want to mention a headline also that just crossed the Bloomberg exclusive. Harvard University's endowment is in advanced talks to sell around $1 billion worth of private equity fund stakes to Lexington Partners. Sale happening amid financial uncertainty and pressure from President Trump's threats, as well as a sluggish market for return on illiquid assets. So keep in mind, the endowment had allocated almost 40% of its $53 billion to private equity, and the sale effort began before the president's latest announcement. So again, more details, just head to Bloomberg.com or check it out on the Bloomberg terminal.
All right, I'm keeping an eye on the markets, and we're continuing to see stocks move higher. Charlie Pellet has been watching close, so let's get an update from Charlie. Hey there, Charlie.
Thank you very much indeed. Higher across the board with the Dow, the S&P, NASDAQ, all advancing. Do want to begin, though, with a developing story. Another headline right off the Bloomberg Professional Service. Keeping an eye on shares of Guess, GES on the ticker, surging now by 15.6%. Authentic Brands said to be weighing a rival bid for Guess. Guess shares popping higher now by 15.6%. The Dow, the S&P, and NASDAQ all surging right now. Best level of the day with the Dow retaking 40,000. Big round number up 463, up 1.2%. S&P up 103 now at 54.79, up 1.9%. Gaining for a third day, we've got NASDAQ up 431. Broad-based tech rally here, up 2.6%. The NASDAQ 100 index up 2.6%. After the bell, we hear from both Alphabet and also Intel. Right now, the 10-year yielding 4.30% with the 2-year 3.79%. Spot gold trading higher by $47 the ounce, $33.35, up 1.4%. And West Texas Intermediate crude up 0.7% at 62.72 a barrel on WTI. On a day when risk assets are advancing, Bitcoin is lower, down 0.4%, 93,320 now on Bitcoin. Bristol-Myers Squibb is raising its sales and profit forecast for the year due to better than expected sales of older drugs and a favorable impact from the weaker dollar. Shares of Bristol-Myers Squibb, they are trading unchanged right now, $48.53. And Merck says it expects to lose $200 million to already announced tariffs in 2025. Merck up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, we've been watching some of the airlines. I feel like we've been watching them for a few weeks at this point, but we did have American come out withdrawing its full-year earnings outlook, joining a growing number of companies that say unease about the U.S. economy is making it difficult to forecast how the year will play out. You also had Alaska Air saying second quarter earnings will come in below Wall Street estimates, and then Southwest Air reining in growth this year as volatility surrounding U.S. trade policy is chilling out consumer demand on air travel. I'm just hoping fares come down, but we are watching this sector. We've got a great voice to talk about it.
Yeah, it's great to have back with us someone who knows the industry so well. Sheila Kayalu is here. She's Managing Director in Equity Research at Jefferies. She joins us here in the studio. How bad is it for airlines right now?
It seems like it's stabilizing. It was pretty bad a month ago, and we've
That
been
was when we heard from Delta withdrawing.
Yes, Delta withdrawing. We downgraded the sector to half sell ratings and underperform ratings, but that news is sort of priced in. That's why you're seeing American and Southwest kind of tread water today, because we've seen this tape before with domestic leisure really being the soft spot. Off-peak hours, Tuesday, Wednesday flying, really not getting passenger demand. Southwest putting up 73% load factors. That means the plane is about 3/4 full. Should be 82 to 85% full. So we've seen that. That's where the demand
American
environment
is up more than 3%. I was kind of shocked when I went to look at what the price was. I thought, okay, it's going to be selling off. But you're saying most of that stuff is
It's
the bad
starting to
stuff
get
is
priced in because we've heard it now for a month, and it seems like the consumer's able to hold stable. But we also have a pause on tariffs, so let's see how that works itself out. We heard from Boeing this week. We heard from General Electric and Raytheon. These are aftermarket suppliers on engines, et cetera. And so what they're doing is they're cutting their departure forecast from mid-single digit to low single digit. That means the numbers of planes that are taking off. But that's based on what's already happened with Delta and United cutting capacity, and even Southwest cutting mildly. And they're not really seeing further weakness internationally. That's what we're hearing, that the market's holding stable over the last 6 to 8 weeks from the fall off we saw starting March 1st. So
how's business travel?
corporate travel seems like it's okay, but it depends on the sector and the airline. You know, Southwest was a little bit more robust. American has a very idiosyncratic story because they removed their corporate booking channels last year, so they have a super easy comp. United and Delta called out weakness, obviously, across government customers and certain manufacturing markets like autos and even aerospace where they saw softness, but financials, tech was still holding up. So we'll see.
Not a great reveal, but we've got like 2, 3, 4 trips going out to the West Coast in like the next month or so.
Yeah, and we've booked 0 tickets at this point. So keep it on the to-do list.
I have one booked. So what are the airlines doing in terms of pricing? I know somebody else who was looking for a flight and saying, well, wait, I heard there's some softness and it was so expensive, I think, to go to Puerto Rico or something. Like, what are we hearing in terms of pricing?
Well, I haven't checked out Puerto Rico flights. I wish I would, but I'm headed to Brazil and Paris and a Dallas trip coming up, and none of them are booked yet. You know, folks post-pandemic are booking closer in, and so you don't have flights booked, neither do I. We haven't seen that price. I haven't seen the pricing softness.
No,
but the airlines are calling it out, especially in that domestic leisure market. So if we were going to Florida in May, we'd probably get a discounted ticket. Or, Southwest called out that route from Tucson to Albany. I'd like to know the guy doing that route, but that's where they're seeing that weakness. So.
We love you in Tucson and Albany, though. We're just going to say that.
Yeah.
But yeah, different.
I do wonder about just really what's happening when you think about demand from the perspective of international travel. You said that it's kind of holding up, but at the same time, we're hearing reports that travelers coming to the U.S. from outside of the U.S. are holding off, and we're seeing that fall a little bit. Is that showing up yet in results or in bookings, especially for the summer?
It seemed like, for now, international still holding up, especially with Europe strength there. We heard some rumblings about Canadian weakness. Folks have sort of put an end to that, saying it's only down 10%, not the significant numbers we've seen. So
10% is something.
it's significant, but we were seeing numbers in the realm of 70%, so the 10% definitely scaled it back. So Canada is an area we've heard weakness. We saw some European airlines call out weakness coming into the U.S. versus U.S. originated flights to Europe are still holding out pretty well, which is interesting.
Yeah, I'm kind of surprised because I do feel like there's some headlines on stories that are like, oh my God, nobody's coming in, traveling to the U.S. and or even traveling elsewhere. Can we talk a little bit about Boeing?
Sure.
Tell me your thinking. You cover the company. They reported first quarter results exceeded Wall Street estimates. They've done a deal, right? Getting rid of their flight navigation unit. How are you thinking about next 6-12 months for Boeing, or even longer term?
I love Boeing when folks get negative. So the days when it hits 140, when we hear about people canceling airplanes or thoughts of that. But, Kelly Ortberg yesterday, the Boeing CEO, said there's no change in the skyline. Folks are waiting 6 years for their aircraft. They've been waiting since 2019.
Right.
Southwest is still waiting. We're all waiting for airplanes to be delivered. No one's moving out of line. The only customer who is China.
But they've been reducing for a while.
China's been reducing. They've been about 20% of deliveries. They're actually only 5 to 7% of the official backlog, but Chinese operators use undisclosed. So yesterday we know that it's about 15% of deliveries this year. In the first quarter, Boeing delivered 18 aircraft to China.
Right.
They expect another 50 for the full year, and our estimates are around 475. So China's a risk, and probably why Boeing didn't sound a little bit more bullish, but they seem like things are working well with the ramp on the 37 and all the rest of the skyline.
The president sending a message on his social media platform this morning about Boeing saying, quote, Boeing should default China for not taking the beautifully finished planes that China committed to purchase. This is just a small example of what China has done to the USA for years. The Washington involvement with Boeing, for better or for worse, I mean, there's been a lot of criticism too coming from the president about the new version of Air Force One, the 747. Can't Boeing just sell those planes to other countries because there is such a backlog if China were to dry up?
I think there was a headline about an hour ago saying Air India might buy those Chinese planes. So here's a note we put out 3 weeks ago. It was called "How Many Planes Does It Take to Get to the Bottom of the Trade Deficit?" When you think about aerospace and defense, it is the only manufacturing sector with a $62 billion surplus. So what can you buy if you have a trade deficit that costs $70 million or $400 million? An airplane. It's easily trackable. So we did a note where we looked at every 1 point of reduction to the Chinese-U.S. deficit, which is $295 billion, is about 50 planes. So obviously, it would take a lot of planes from China to offset it, but it's a good chip President Trump could put on the table for folks.
All right. On your radar for Boeing, last 20 seconds. Just watch what?
Free cash flow and max production. That's all that matters.
All right, great stuff.
Thank
you
you
so much. Sheila, really appreciate it. She's Managing Director in Equity Research over at Jefferies, joining us here in studio.
Let's take a look at some stocks on the move this week. Here in the studio with us is Bloomberg News Equities reporter Alexandra Semenova. Hey, I think we can transition right to another airline at the top of your list, Alex.
Yeah, I'm taking a look at American Airlines today. It withdrew its full-year earnings outlook. A lot of companies have been doing that. It's also joining some of its peers in doing that. We saw that from Delta Airlines, the owner of Frontier. Obviously, as there's so much uncertainty about the outlook for consumers, there seems to be a pullback in travel demand, obviously, as tariffs weigh on the economic outlook.
What's interesting, though, is Americans Up, and we were just talking with Sheila Kahyaoglu over at Jefferies, and she made the point that a lot of we've had bad news on the airlines over the last month or so, and saying a lot of it's maybe priced in already, and that people are traveling.
Yeah, I don't know if you have anything booked for the summer, Alex, but Carol and I, and actually Sheila was just talking about this. She said post-pandemic, people are just waiting longer and longer to book their flights. I don't know what that has to do with. I think also it has to do with...
you pay more. Like, right? Like if you...
Well, you pay
sometimes-
more if you get closer to the date, but I think the flexibility now is helpful. Like you can, there's so many tickets you can buy where it's just like, oh, you can change that for no fee.
Yeah.
That was new during the pandemic.
Yeah, that is true,
And that
right?
stuck
Yeah,
around.
and I think also after the pandemic, there's just this hunch to try and book trips as often as possible that is just not going away. I don't know about you guys, but definitely for me.
Take me somewhere. now.
Exactly.
What else you got for us?
So I'm also looking at Comcast. They reported a pretty big loss in customers. They lost 199,000 domestic broadband customers and 427,000 pay TV customers in the first quarter rather. Those losses were both more than Wall Street analysts expected. Pretty bad earnings readout here. The company's earnings actually rose to 1.09 a share. That beat estimates, and their revenue fell slightly to $29.9 billion. But it was really, again, that customer metric that everyone was watching, and shares are falling today.
Yeah, that's kind of rough. Stock's down about 11% also year to date. IBM, it's a name that we were breaking down the earnings after the close yesterday.
And it was having a good year up until yesterday's report, basically.
Exactly. It just basically the takeaway from this report was that it wasn't good enough for investors. It wasn't necessarily bad. It's just that the bar is so high for this company. So the stock actually fell the most in a year today, suggesting economic uncertainty, expectations that the cut in costs to government spending might affect the business. First quarter sales increased almost 1% to $14.5 billion, and profit was $160 a share. Again, the numbers aren't bad, just clearly disappointing investors. Not enough assurance that the business will be good.
Yeah, I mean, we spoke to Brent Thill over at Jefferies yesterday, who said that Arvind Krishna is doing a great job of transitioning this company away from hardware, actually away from consulting, which it's been known for years, and really focusing on moving to the AI and services in the cloud.
Which is much more, I think, profitable, certainly for the company, right?
But there's a lot of competition.
Yeah.
Competition, and also the CEO today saying in the near term, uncertainty may cause clients to pause. That keyword uncertainty has been just coming across.
Are you
all
just
the earnings
allowed?
call.
Is anybody allowed to use the word uncertainty at this point?
I mean, everybody's using the word.
It seems to be
It's
the only
like-
word in the
It does seem
dictionary
like-
these
Yeah.
days.
It does seem like the only word in the dictionary, certainly. I know we've been tracking like how many times like CEOs are saying it on earnings call, or I think we did last time around.
Yeah, and we're keeping an eye on that for sure.
All right, great stuff. Alexandra,
Thank you, guys.
Thank you so much. She is Bloomberg News equities reporter Alexandra Semenova right here in studio.
For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
Got to tell you, folks, we've got a rally underway, and we're pretty much at our highs of the session. What does that mean? We're up about 1.9% on the S&P 500, and we're looking at the NASDAQ 100 up by about 2.6%. I just wanted to pull up because we've got Alphabet coming your way after the closing bell. That stock, too, higher ahead of its earnings release. It's up about 2.2%.
Oh, we're diving into the markets
Yes.
next. We're looking at macro, we're looking at equities, we're looking at fixed income, everything happening in our first hour of Bloomberg Business Week Daily.
All right, for those watching on TV, the close coming your way in just a moment. Tim and I continuing right here on Bloomberg Business Week Daily. This is Bloomberg.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump says he's putting pressure on both sides to win the war in Ukraine after another deadly Russian attack on the Ukrainian capital overnight.
I'm trying to put out the fire, and I think we'll be successful. And if we do, we're going to save a lot of lives.
The president lashed out at Vladimir Putin on Truth Social today. CBS's Ed O'Keefe at the White House.
Steve Witkoff, his lead envoy for these sensitive matters, expected to be in Russia in the coming days. But sending that signal through his own social media platform, one that's closely monitored by the world, to say, stop stop Putin and let's get this deal done. It signals that he's frustrated with both sides, clearly trying to put pressure on them, realizing that if this kind of violence continues, there's no hope for a deal.
There were a number of court actions today involving the administration's actions from DEI to sanctuary cities. Matt Piper has a wrap-up.
One federal judge has ruled President Trump's executive order that looks to crack down on sanctuary cities getting federal funding is likely unconstitutional. The injunction was sought by San Francisco and 15 other cities and counties. Another federal judge is blocking the administration from implementing a policy to end DEI or race-related school programs or risk losing federal funding. And another federal judge is blocking portions of Trump's order that sought to overhaul elections, including a provision to require proof of U.S. citizenship to register to vote in federal elections. Matt Piper, CBS News.
The administration, meanwhile, has asked the Supreme Court to allow enforcement of a ban on transgender service members while legal challenges proceed. Scott McFarlane reports on a new FBI report that shows scammers and cyber criminals stole a record $16 billion from Americans last year.
The FBI is struck by these numbers so much because they've been taking down these ransomware networks, these big organizations engaging in fraud, yet the numbers are still going up. And there's a few reasons for that. First of all, there are more and more people carrying more and more devices, but also the techniques are getting more sophisticated. You use those artificial intelligence tools as a fraudster, you're able to perpetuate a more effective scheme.
A suburban Chicago man was sentenced today to 7 life terms for the 2022 shooting at a July 4th parade. Attorney Lance Northcutt.
Robert Crimo will rot in a cage where he belongs, that he will never see the light of day, that he will never breathe air with free people.
Police in New Jersey have charged a man with arson after he set wood pallets on fire. It's believed that sparked the Pine Barrens wildfire, the largest in the state in 2 decades. The smoke from that wildfire is affecting parts of New York City. On Wall Street, after a mixed bag of economic news, the Dow is currently up 430 points. This is CBS News.
All right. So how are we doing? All right. So we rolled over. Is there anyone that would have held that trade any longer than I did? Anyone thinking they would have held that longer? We might get another chance at the same trade. So I bailed myself out. Honestly, I was up $600-700. I could have taken that money off the table, but I pulled up to even to try and make run for the big run. Yeah, I mean, I could have took some profit, but I didn't want to miss the big run, and it never came. So I'm okay with that. I mean, 700-800 would have been good, but we may get another chance at it. We're running back into my entry point from the last trade already. Who's feeling? See, the NQ looks like it's going to crash harder. See, there's nothing holding the NQ up. Let me show you. So I'm not thinking. Let me show you the NQ real quick. See, look at the NQ. There's nothing.
The Trump administration is closely watching the nation's universities. A new executive order threatens to cut federal
All right.
funding from schools that
I don't know about the NQ there.
funding. It's also been at the center of the
So the ES is going to have to do all the work off my resistance line. So if we're going to take the long again,
or more. The administration thinks over
we need to confirm, we need the stochastics to roll up, and then we can re-enter and make another run at it. What are you guys thinking?
This is Bloomberg Business Week Daily.
You want to go long too, SM?
That helps global leaders stay ahead.
You take any trades yet, SM? I mean, I'm kind of liking I'm really liking this resistance line. Damn it! But we need confirmation. No trades yet. I need confirmation.
Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
No trades. Okay.
All right, everybody, we are 55 minutes away from the closing bell. On
What could we learn from the last trade? Well,
results after the closing bell. Right
I
now,
thought we were ready for the breakout, and I added too many contracts. I don't know. We have to break this line of resistance before I think we go short. I'm just not playing with it. It's been a major factor on both sides of the trade. You know what I mean?
Why and how the markets are reacting.
yeah, love, things moving around. What they
I mean,
say
the
about
NQ says we were a bottomless pit down. I mean, the NQ looks like
great group of voices
we're never going to stop.
what you need to keep on your radar when they report. First up, though, let's talk about that trade. That
See, there's nothing holding the NQ up except for the first deviation from, or this deviation from the VWAP. So on the ES, just some kind of, you think we continue lower? Yeah. So if we consolidate along here, maybe the 20 makes it down closer and you can short into that and maybe into this trend line, maybe. Right now it's a short. Like right now, the trade box is a short. This is a full-on short, actually. So if you front ran the short, you'd be looking good right now. I have fatigue from that last trade.
10-year 4.30% with a 2-year 3.78%. Gold
I added too many to it.
4%, 33.34 for an ounce of the precious metal, and West Texas Intermediate crude up 0.6%. WTI 62.63 a barrel.
So let's watch the stochastics and kind of watch this area right here.
380 on a Bitcoin. Well, certainly
This is
tariffs a
nothing. Let
major
me get rid of
concern
that.
for companies and their investors. Jenny Johnson is the president and CEO of Franklin Templeton Investments. She was interviewed this morning on Bloomberg Surveillance.
So if this comes up and the 50 confirms it, and then we cross back over on the control EMAs.
Because the Canadians say I'm not going to come visit the U.S. So those are the unintended consequences.
She mentioned Airbnb up by 2.2%.
So it's a wait and see. We're at 3 o'clock now, 3:08. So we're almost done, really. We got like 10 more minutes before things shut down. So if we got 10 minutes to really 12 minutes to make a decision
Management, though, did affirm its
or get an entry.
forecast. Also, Knight Swift shares bouncing around a bit, up slightly now. The company said tariffs were a drag on activity. Comments overshadowed an earnings per
All right,
share
I got to make a
for the
call.
first
I'll be right back.
Everything. Planes, trains, and automobiles, I guess we could say. We got
Things moving
Bloomberg
around,
Intelligence
right?
Senior Transport, Logistics, and Shipping Analyst, Lee Klaskow. He joins us from our Bloomberg Intelligence headquarters in Princeton, New Jersey. Lee is also the host of Talking Transports. It's a weekly podcast from Bloomberg Intelligence. Lee, we're going to get to some of the individual results in a second, but big picture, how is the freight recovery going?
It's not.
It's
being
not.
Derailed. It's being derailed and delayed because of the tariffs. So, if we're looking, I cover all modes of transport. So I cover trucking, rail, shipping, air freight. I do it all. And so when you're looking at the trucking market, which is kind of the base of all transportation, because pretty much every freight is touched by a truck at one point or another for the most part. That contractual rate recovery was supposed to happen this year, and it just seems to be getting pushed out. Knight Swift, which reported earlier in the week, they said that they're expecting low to mid-single-digit increases in contractual rates, and they were expecting something a little more like mid to high single-digit increases. So the rate of recovery is a lot slower than what people are thinking, and we really haven't been hit by the impact of the tariffs because right now you're seeing ships that are supposed to leave in China. Those bookings have been down about 30% from China to the U.S., at least based on some press reports mentioning Hapag-Lloyd, which is one of the largest container liners. So as that freight is moving into the U.S. and comes into Southern California and onto the ports and onto the rails and onto the roads, you might see less demand out there.
Sounds ominous. Or is it just a case that so many companies, bought, I don't know, over the last month or so in anticipation of these tariffs, or as it seemed to heat up, and so tried to kind of restock here? And so is that a result of that? Or, I don't know, when you're turning ships around, I don't know what that means. Sounds ominous.
Yeah, so it's not so much turning ships around, just the demand for containers to be put on those ships is being reduced. But kind of if you think about it, if you're listening to these earnings calls, you know, you can almost play a drinking game. Anytime someone says uncertainty, someone's going to have to.
I mean, if you played that game, Lee, you would
be on the floor.
We would lose somebody from alcohol poisoning. Let's be honest.
Yes, you'd be on the floor.
Yeah.
But you know, in all seriousness, you know,
real,
that's
though,
the
right?
reality. It's real. Like the shippers don't know what to do. You know, we talked to a lot of shippers as part of our research here at Bloomberg Intelligence, and some are either pausing their imports from China. They're looking for other locations or other sources. Some are just saying, like, I'm just going to be, working through whatever, the macro gods throws at us. So, shippers are taking various different approaches to the tariffs because we don't know are they going to be here for a while or are these just negotiating tactics? And, they're all going to be gone tomorrow and, 6 months from now, it's
All right.
Well, that's what I wonder. How quickly can it turn around, right?
All right, who's going short?
The rhetoric or the narrative or the reality changes and things aren't as onerous in terms of tariffs.
Who's going short and where's the entry?
Would you assume that those ships would start coming right away?
It could take time because
There's your exit.
Some shippers have kind of loaded up on inventories, and so therefore they don't really probably need as much stuff in the second half of the year. I think comparables are going to get a lot more difficult in the second half of the year because some shippers were pulling forward some freight ahead of the tariffs just to make sure that they have what they need in their warehouses to meet their customers' demands. So, we don't really know because, again, it could be all over tomorrow when we wake up tomorrow from a tweet or, this could be with us for some time. But, the reality is that, a lot of the companies that I cover that have reported already that provide earnings estimates, Knight-Swift lowered their earnings expectations for the second quarter. And a lot of the other companies, either they maintain their near-term or longer-term guidance, which was a little surprising because going into this earnings season, we thought there'd be a lot of reductions and suspensions, but, we haven't really seen that yet.
Lee, before we let you go, just 30 seconds on this UPS acquisition. They agreed to acquire Canada's Andlauer Healthcare Group.
Sure.
What does that mean? What's UPS doing with healthcare?
Yeah, so UPS they've been very adamant about building their healthcare logistics business. They wanted to double that to about $20 billion in revenue from $10 billion. The addressable markets around.
You're waiting for a sign?
They want to be a major player. They're going to be doing
Here's
that
your
through
sign.
acquisitions because it's a lot easier to buy your way into that versus building it organically. And it's high margin business, at least higher margin business than getting a delivery from them at your doorstep. This is stuff that's mid-teen margin business because
long really
there's
took
a
it
lot of
out.
value added there. So it's a good business for them to be in, and they're doing it because the reality is their business model has changed so much over the last couple of years with an increase in.
This is the actual short I was trying to get earlier when I got faked out.
Relative to business. And
Let's see if we get a pullback.
What those home deliveries are, they're usually lower margin business because of the costs involved in delivering one package to your doorstep.
All right, we're going to leave it there. Our thanks to Lee Klaskow, Bloomberg Intelligence Senior Transport Logistics and Shipping Analyst. I have to say, I did a deep dive on UPS, I don't know, 7-8 years ago, and that was one of the things.
I'd have been looking
in their
really good on
massive,
that last trade
warehouses and
at
shipping
one point
warehouses,
or
and the
another.
whole
If
thing with drug delivery, and especially that.
I had
which
cut
need-
that
need to
earlier
get
one
cold
loose the
and
way I was
carefully
talking.
transported. And so,
It all
anyway,
adds
They only
up.
turn right.
They only turn right.
That's
I
the
did.
other thing.
All right,
That's
got a
the
little
other thing you
pullback
do.
But it's
happening.
interesting. It's something they've been building out for a while. All right. Great overview. We love in terms of how things are moved around. Tells us a lot too about the economy. Another thing that's going to tell us certainly about a sector investors love, and that's those big mega cap tech companies because Alphabet reports after the close today.
Well, let's see what Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh is watching out for. He knows the company inside and out. He joins us here in the Bloomberg Interactive Brokers studio. What is it? What are the most important metrics we need to be watching?
I mean, search. I know every time I'm on your show around Google earnings, I mention search is what investors care about.
You know,
and
I've been
it's
doing
no
a lot.
different.
I can tell you, I've been doing a lot more chat GPTing than I have been searching.
You got us going. You're like Gemini, ChatGPT, like got to play with it.
Yeah, and look, Gemini, they just released some data.
All right,
because
this
there's
is
a
pretty
trial
strong
going on
pullback.
for Google, 350 million monthly active users. Compare that to ChatGPT, which is more around 600 million.
Okay.
So it's catching up. The thing about Google that I guess people don't really envision when they look at the competitive.
53
landscape
seconds
is
to the
they've
next
got
candle.
7 apps with over 2 billion monthly active users. Now, if Gemini Gemini is taking off. Imagine what Gemini integration with all those apps like YouTube, like
Order
Maps,
submitted.
can do in terms of engagement.
Right.
If we hit
It
this, I'm
can
going short.
enhance the experience when you use YouTube. It can enhance the experience when you use Maps and Android. And that is the power of what
I'm looking
Gemini
for
could
short.
do. Because look, if they're catching
This is
up,
a full-on
even if they
short.
are second to ChatGPT right now,
Right.
there is so much surface area where Google can monetize it. And these are all the apps owned by Google.
Order
So
filled.
All right, I'm in
that's the
short.
potential they have. The
See if
only
it blows
caveat
through.
there is it's disruptive to their search business model, which is the Blue Link model. Because what people really like about ChatGPT is the straight out answer.
That's
It's
what
clean.
I like.
I
You
love
ask a question, you get an answer.
love it.
You search for something, you have to find the answer yourself.
So the reason you use ChatGPT is because of UI, not because of the quality of the answer. Gemini can give
Yes.
you the same quality of answer.
Can they seamlessly alphabet, like go from Google, this search, to Gemini? Like, is it going to be that easy a transition for everybody?
So their bridge is AI overviews. Now when you search on Google, they show you an AI overview. That's their bridge. They don't want to completely disrupt it because otherwise that search $250 billion run rate will definitely change completely, and it's not going up if they.
All right, we're at the 20. Let's see if the 20 proves to be resistance.
What I remind myself is it's not as if ChatGPT is far better than Google Gemini. That's not the case anymore.
Yeah.
It's because Google chooses
Well, this is strong.
to roll it out slowly on their search page. It's going to be very
Next
disruptive
candle,
if they do it
125.
and they give you so many other ways to use Gemini, where if you want a ChatGPT-like experience, you can have it. It's just they don't want to change the search page because advertisers still come to that.
It's a lot of money.
It's a lot of money at the end of the day. So I
NQ is rejecting the 20 hard.
everything in terms of the right kind of
NQ is rejecting the 20. That's good.
It's just they have to
I like
manage their
that.
revenue. Remember, this is a company with over 90%
Roll back
share.
over and grab
Mandeep,
that
you
zone
gotta run
down there.
great stuff.
Would be-
Mandeep
Take
Singh
the
of
ES with
BI.
it. Like it. Sell order block, that's nice. You're feeling the long? How are you feeling the long? We're at 320. You went long? Oh, then I'll tell you what, I'm gonna pop right in as soon as I can get profit. See if it rejects this fair value gap.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got 39 minutes to go ahead of the.
We got the short fair value gap. We got the short order block. We got the short forecast. If it's wrong, it's wrong.
Right now, up
Whatever.
446 points. That is an advance of 1.1%. The S&P up 99 now, up 1.8%. Nasdaq up 4.
Come on, reject this
for a
zone.
gain of 2.4%.
There you
the
go.
Nasdaq 100 index, full of big tech names, up by 2.5%. While the Mag 7 index, the Bloomberg Mag 7 index, up now by 2.4%. The 10-year 4.3% with the 2-year 3.78%. Spot gold up $49 the ounce, up 1.5%. 33.37 on the precious metal, while West Texas Intermediate crude is up 0.6%, 62.62 a barrel. Procter & Gamble has cut its annual sales and profit outlook, citing tariffs and volatility in consumer demand. It is raising questions about the corporate pricing environment. Lauren Lieberman
Took profit way too early.
at Barclays Capital.
I think where we may see pricing
Oh,
later
it's all right.
in the year
I'm-
would be in response to tariffs. One thing that P&G
I'm not really sure
just
we're gonna
talked about
clear
on the
that
conference
zone.
call is they expect to see an annualized impact of 1 to 1.5 billion on their cost structure from tariffs, and pricing will have to be part of the mitigation plans to deal with that.
Lauren Lieberman of Barclays. Procter & Gamble down 3.6%. After the bell, Alphabet and Intel. I'm Charlie
Yeah.
Mallett. That is a Bloomberg Business Flash.
See how this next candle
appreciate
runs.
that update, Charlie. As I mentioned,
Because I don't have
we're
anything
talking
saying long.
Macro
Is
and
the
we're talking
problem.
Equities. I want to start with the macro because we got lots of economic data today. U.S. initial jobless claims came in line with the median forecast. Bookings for all good durable goods surged though by 9.2%. Carol, when that crossed this morning, you were like, "What?
Well, actually, and then what I was assuming is that people were buying forward, but it was commercial aircraft. I don't know.
You can thank
were you
the-
buying those early? I don't know.
I
think so.
bought my 737 Maxes early this year."
Did you really?
Yeah.
All right. Good
Did
to
you?
know. No.
Okay, that's not right. I bought 0. Some commentary too from a couple members of the Fed. We've got the setup for a great discussion with Molly Smith. She's Bloomberg News economics editor. She joins
No
us here
pressure, Molly.
in the
Oh,
Bloomberg
boy.
Interactive Brokers studio. What do you think is the most, in terms of your world, what's the most impactful piece of data or commentary that we got today?
Today, I think, probably from Fed Governor Chris Waller.
Okay.
I think he's just continues to be a bit of an outlier, it seems like, among Fed officials on what they perceive the inflationary impact of tariffs is going to be.
So
he hasn't, as far as I know, I don't know if he's using the word transitory, but he is in the team transitory idea.
So he gave this interview to Bloomberg TV and he said that
Yes.
he'd support rate cuts in the event aggressive tariff levels hurt the labor market.
Right, which has not happened yet. We're not seeing that in the data yet, but he really just continues to hone in on this idea that the tariff impact to inflation is going to be temporary, which is really out of sync with the rest of the Fed right now. And so many officials are so wary of if this is going to be persistent. And of course, like we all know how that transitory story went during the pandemic, and they got very badly burned from that idea.
I will point out this was an interview on Bloomberg with our own Michael McKee, who's down there in D.C., and Waller stressed he didn't believe the impact of tariffs would have a significant impact on the economy before July, but at that point,
325
unemployment could rise and quickly if high tariffs remain. I'm not going to say that all Fed officials are not equal.
We entered the trade before the.
You've got voting members. You've got, of course, a Fed chair.
I won't tell him.
Everything's still on a short.
Sorry, Chris.
Fuck,
But
man,
what's
come
Chris
on.
Waller's position, like on the Fed?
So he's a governor, so he's always in
DMQ's
the voting
flagging out.
rotation. So this
Okay.
is definitely
Is he
some-
voting this time around?
Always, yeah.
Always,
Fed
okay.
governors always vote. The
Okay, sorry.
rotation is among the regional Fed
Got it.
Reserve Bank presidents. So he's always there. And I think what's also interesting then about what's been coming through his comments is that when you listen to some of the other Fed officials, it seems like they are really much more wary of the inflation side of the mandate, and that's why they are so intent on holding interest rates steady
That's
right
what
now.
I'm saying,
And
Snooze.
Waller seems
That's
like
my
with the
call.
comments today, what you're just mentioning,
I think
that
we run sideways and then we drop. Yeah, I know. That's. I mean, that's my call, and I accept whatever
maybe indifferent to what's
wherever
going on in the
happens from
inflation side
here.
of the equation, where most people are still kind of thinking like, we still need to keep rates elevated, unless the job market.
I mean, I've been
really
okay
falls
all
off
day.
the
I
cliff
just,
below
my
the story,
ATM
but
management
it's so
has
hard
not
when the
been
mandate is going
what
in
it
two
should
different
be.
directions.
How did you look at Beth Hemmick's
That's what's
comments?
been
She's the
killing
president of
me.
Cleveland Fed. She said to CNBC earlier that she's essentially ruling out this May rate cut. That's not
Yeah,
surprising.
not a surprise.
Yeah, everybody knows that.
Yeah.
The Fed, though, could move as early as June.
What I thought was so interesting about her comments was use of the word move. And that kind of implies to me, it's like, what direction?
Up, down?
And that's
Which one?
exactly what she said,
Good
until
point.
we get a better idea of the direction the economy is going. So to me, she kind of left that a bit open-ended
All right.
of, well, which way are you going to go?
Yeah, she
like,
said-
does that almost open up the door to a hike? Am I reading into this too much?
No, I don't think you are. She said if we have clear and
Yeah.
convincing data by June, then I think you'll see the committee move if we know which way is
Yeah.
the right way to move at that point in time.
Well, this has to play with the dual mandate, right? Like whether or not we're
Exactly.
seeing growth slow down, the maybe job market start to slow down, right, and have problems, or do we see inflation tick higher because of the tariffs?
Right, which again hasn't happened yet. If
Right,
anything,
right,
the
to be fair.
CPI that we got for was that March, that was what ticked down on both the CPI and producer price index. So both consumer and producer prices both believe stepped down in March. But again, that's before the April tariff announcement came through. So the CPI that we're going to get for the April data is going to be really much more significant and beyond.
One last question. President Trump talked about lower energy prices, the gas pump. Did he talk about, was it eggs? He brought up
He
or
brought up
food
eggs. He's
prices?
brought up food prices.
Just earlier we covered, are they down?
Food prices, no.
Okay.
Definitely not.
And gas prices?
I mean, maybe marginally at the pump.
Well,
I see a little green.
Okay, so
I'd have to look at the.
I got the
latest on
chart.
that,
He
actually.
meant
Show
the
me.
president said they were under $2 in some states. The average we should note is
There we go.
$3.17.
Yeah, I was going to say the
a
average
gallon.
nationwide is definitely still north of 3.
And CPI on food as of March 31st.
That's definitely still going up.
That is still moving up. I mean, that's
Yes.
been on a steady move higher. pretty much since
Stochastics are
October.
rolling over,
Right.
kind of like
Yeah, the
that.
food at home
NQ is a
category has
free fall.
definitely not
Is
come
about
down.
to do a free
Just
fall.
to kind of lay it out.
Yeah,
Nothing's
in terms of
stopping the
projections.
NQ.
Yeah.
We just need to get through that resistance line, and we're good. Yep, now we're
Huge
good.
fan of yours.
Oh,
Molly.
thanks so much.
You're welcome. Molly Smith, good
Run,
to check in with
baby,
you,
run.
Bloomberg News economics editor, giving us the rundown of the Fed talk and also the eco data points that we needed to know. So eco, check.
Equity
Just
markets.
wanna get below that
almost
resistance
check. Let's
line,
make
and
them
then
check.
we'll do break
We
even.
are off our best levels of the day. The S&P 500 up 1.8%, though. There are signs that Donald Trump is rethinking the most aggressive elements
Push
of
it
his
down.
combative
Push it
stances on
down.
trade. And the Fed spurred back-to-back gains in stocks. His combative stance on the Fed, I should say.
Yeah.
And the dollar, while soothing volatility across asset classes. For more, let's bring in Eric Weiner. He's Bloomberg.
The
News
highlight
editor.
isn't even like a real
He's got a
line.
couple
You
books out.
ignore
One
it.
of them is What Goes
You
Up,
can
an oral
ignore it,
history of
Price.
Wall Street from the Great Depression
Okay.
through the internet bubble and the 9/11 attacks. He
I'm
joins us
locked in.
here in the Bloomberg Interactive Brokers studio. I was just looking at the S&P 500 chart, Eric. Since the highs, all-time highs for the S&P 500, we're now down only 11% from those.
We
There we
were
go.
down.
Come on,
we
Ron.
got close to a bear market,
We
which
did.
is
We hit
20%.
we hit 20%. We didn't close there.
intraday.
Now
But
we're only down 11%.
We're peeling back.
Oh, just go
It's
down.
been an interesting. So, in terms of the statistics, we love statistics.
Yeah,
Fucker.
Best 3 days, other than the 9.5% bounce.
But I
that
can
we
get
had,
back in.
This is the best 3-day stretch since 2020. This will be the first time if we close up 1.5%. This will be the first time we've done that 3 straight days since 1974. The record
Order
is 4
submitted.
times. So this is a
Order
pretty
filled.
strong.
All right, I'm back in
liftoff.
short.
Yeah.
Whether it holds, we're hearing a lot of different reasons why. Today clearly started. I mean, you can see it in futures. It started with the Fed speak. But there is more
And to
hope
my zone.
on tariffs. I don't know if it's rational hope, but there appears to be more hope on tariffs. There appears to be more hope on trade.
Fucker, come on.
His Ukraine comments raised the market a little bit. So it just feels like this is sort of a more optimistic week, I guess.
Yeah.
Fucking
Yeah,
around.
it's funny. There's been a lot of things I think.
I mean, I
that
know Carol's thinking. You're thinking nothing has changed.
Well, I don't know yet. I mean, because you come in the earnings, right? And the CEOs are like, we're uncertain, right? We were kind of laughing about it, but no, that's what
We're
they
pulling
say.
our guidance.
So they're not saying, oh, they're waiting for the dust to settle, because I think we've all been, fool me once, or what is it,
Yeah.
the saying? But it's like we get something said, like progress in something, and then within 24 hours or less, like it rolls back. So it's hard. We thought we were done with maybe the
Can't take it.
Fed chair commentary, and yet we got some comments today about him being late again. So I think it's tough.
So it's interesting. Well, first of all, with the Fed chair commentary, we're heading into the quiet period. So these last comments are actually really important.
I meant Fed chair commentary by the president.
By the president. So yeah,
Yes.
now what's going to happen is they'll be silent and he can keep attacking, and they're not going to cut. Coming up, they just said we're not going to cut
Just go
coming up.
down
So
now?
there could be more of that, but just the easiest way to do this is to say, do we have tariffs on cars? So last night, the GM and Ford went bonkers.
I mean, how long do I
trading
play with fire
because
here?
He said,
I need to get on the break-even side.
He gave indications that they were going to lighten tariffs on cars and car parts. Then they gave most of that up when he backtracked off of that.
We're at 332.
We may slap car tariffs on Canada. So within
I
like
gotta
an
get out of this
hour
fucking
of
thing.
after-hours
I'm just
trading,
gonna
which
get
is the
out.
thinnest that you're going to get, you had this crazy swing in automakers because nobody really knows where anything stands. And if you ask a trader, where are we with tariffs? Nobody really knows. You can't know.
Well, I think that China is still the big question. And I think the concern there is what happens if we have a decline in shipping goods from China that comes to the United States and consumers start to see empty shelves.
That's a big part of what the consumer companies are saying.
Yeah,
is like their prices are going to go up. The demand is going to change because of that. The access to goods is going to be thinner.
But I also think Americans will not be happy about that.
No. But like this is where China can actually
This is fucking stupid. Come
sort of
on.
control its population more than we can, and that has a huge effect.
I want to ask you, we talked to her with the acting chair of the CFTC, and we asked her about derivatives market through all the volatility. She said, everything seems to be working really well. And we've talked with you about orderly. What's interesting about this trade, if anything, or is it just purely reactionary out of headlines? How do you see it? Because you guys look at the numbers, you look at the data, you look at the internals. Is it, that you can kind of tell a healthier move versus an unhealthy move? So I don't know.
Well, there's a lot of shorts that got shoved out, and so
There we go.
there's
Come on.
some covering going on.
Just
This
bust
isn't
through that
necessarily a
fucking
short covering
resistance.
rally, but there is definitely some of that going on, and there's a lot of uncertainty. If you think about the economy as where it is, it probably is trading roughly about right. But what we don't know, obviously the market's a forward-looking mechanism.
Right.
And to Molly's point, we don't know what the impact of all of these
There we
things are
go.
going to be. So as, like, say,
Run.
American
Come on, run.
Airlines
Just got back
pulls
to
its, pulls
can do it.
its guidance and is like, we don't know.
Stop,
and the
Phil.
more companies say that, like, so you start looking at the internals and it's not great,
Okay,
you know?
that's what I wanted to get to. Thank you. Eric Weiner, he's Senior Editor, Equities Americas, right here in our studio. Folks, we're counting down to the close, talking a little bit of fixed income. That's next.
336. Yeah, I'm like, as soon as I get out of this, I'm good. But I don't know what to do here. I think I should just get out. I think we just, I don't know. The NQ is still, no, that's not good. On, smack it down. Down $50 for the day right now. Think they're faking out the longs right now. This is a fake out long. No, you think this is the long? Let's see if it holds this zone. If not, then fuck it, I'm done. Whatever. I'm only down 150. All right, let's see if the fair value gap and the order block hold it down. $339.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ solidly in the green ahead of earnings out of Alphabet and Intel. Right now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are climbing today.
340.
The Dow is currently up 485 points. S&Ps are higher by 1.9%, while the NASDAQ, that climbs by 2.5%. The U.S. 10-year is at 4.3%. Gold and oil are higher, but Bitcoin, that's little changed. Among the main 11 S&P sectors, leaders were tech and the industrials. Only consumer staples were in the
I want to see if this order block actually holds it down. I really, if it tests this order block, let's see if that's actually a thing.
Also, after earnings, Pfizer fell 18% and Pepsi dropped 5%. and fell to its lowest level since 2021. In deal news, Authentic Brands is said to weigh a bid for
See if these
Guess.
stochastics
And
roll
regarding
over
the tariffs,
and the order
Trump
block
says
holds
the
it
U.S.
down.
is talking with China on trade
See if we
after
get the spike
Beijing's
down.
denial. Wrapping things up, some of the names reporting after the bell tonight include Intel and Google. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg.
Down
terminal.
$200 bucks
Charlie
right
Valentin.
now.
That is
Overall.
a Bloomberg Business Flash.
How about you let me drive?
Let it out.
No. This is not a toy.
Oh, that's not good.
Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
All right, roll over.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we're coming up on about 17 and a half minutes to go until we wrap up the trade on this Thursday, April 24th. We've got a rally underway, and we are pretty much hovering near our highs of the session, maybe just off. So as you just heard from Bill and Charlie, that we're up almost 2% on the S&P 500, Dow Jones Industrial Average up about 1.25%, and you've got the Nasdaq 100 up about 2.6%, which could be affected in the after hours by what we get from.
Yeah, look, I promised that we would kind of go everywhere in our second hour of Bloomberg Business Week Daily. We are. We did eco, we did macro, we did the equity market. I want to really hit on bonds and what's going on with fixed income. We've got Joanne Bianco with us. She's partner and senior investment strategist at the fixed income ETFs firm Bond Blocks. We've got about $2.6 billion in assets under management. I just want to talk big picture before we get to some of your ETFs, Joanne. Just with the way that we've seen the bond market react over the last 3 weeks, there's been this idea of sell America, a weakening dollar. Typical safe haven assets are not acting as safe havens. Is there a fundamental shift in your view happening with treasuries?
Actually, the thing is, well, first of all, we have 4.6 billion in assets, not 2.6.
Oh, I'm sorry.
No problem. But
Is that because a lot of assets are going into fixed income all of a sudden, or no? In terms of flows?
Yes, we've had a steady growth in our business over the past year. So we're definitely seeing growth, and we're continuing to see actually a lot of demand for fixed income in the current environment. Because, to be honest, we don't really get there that the U.S. is losing its safety.
What's up, Sneeze? It's pretty painful, huh?
Long duration treasuries, but
What time is it? 3:44?
there's a lot of areas.
Yeah, I know. I want to see if we reject. Yeah. Yeah, you had the long rate, SM. You really did. I should have been out. I should have got out on that drop.
Joanne, talk to us about the flows then more recently. As you said, over the last year.
I should have got everything out on that drop.
But I mean, what have you seen as of late amid a market environment that, depending on the day, depending on the hour, could change pretty dramatically? And we've talked about, certainly some of the disconnects that we've seen between what we see in certain asset classes versus, the equity market versus what we're seeing in fixed income, in particular, U.S. Treasury. So I am curious, what are the flows that you've seen? Let's go the last 2-3 weeks when there has been so much volatility.
Yeah, we're getting a lot of flows in our treasury products in kind of more the short to intermediate term. We're also getting flows into our investment grade corporate products and our tax aware products.
I'm fucked.
Pretty
All right.
much across the board, private credit.
Oh, we'll see. I don't know. Maybe let's see if the selling comes in.
Where our high yield ETFs are
345.
Flows, but
I got to grab a hold of that and move it
there's
down.
definitely been interest, more conversations.
It's only
We're
one.
having lots of conversations with clients right now about the solutions that we could provide with our lineup.
So I want to go back to my question about a fundamental shift in the role
Yeah.
of bonds.
Yeah, I'm gonna wait for the MLC. I'll accept my fate if it comes up to get me. I'm only down a couple hundred.
Makes it look like that the U.S. is
So-
not necessarily the safe haven.
I want to see if I was right. I just want to see if I was right. If I'm wrong, I'm wrong. It's fine. Today's been a roller coaster anyway.
That would not be a a great outcome.
It's not going to
all of
affect.
this,
It's
but,
just it's the evaluation account. It's not
assuming
really
that
going to
there
hurt
is
anything if I'm
some
wrong.
stability that happens in terms of talks on trade and the Fed independence and things like that. Those are the kinds of things
No,
that could
no, I'm only down $200, $300.
uncertainty. Because really
You got to get down 5,000 to lose it. I'm only down 300 from my high right now.
this dominant sentiment
If it goes down, then I'm adding,
something that is rattling investors.
You know what I'm saying?
Worldwide about U.S. markets and
Oh, no, I meant, no.
So your point that you can't.
No, worst case, I'm down 300 or 400 for the day if it hits my stop. You know what I'm saying?
No, it's not that. I just I'm
If MOC goes against me, I'll be down maybe 400. That's it. So if MOC comes up to get me, I'm down 400. If it goes my way, then it is, that's good. This is probably not good.
It's one thing to say
A good way. Yeah, I'm good. Yeah, no worries.
Which shows very clearly
Yeah, absolutely no worries.
that based on what happens with really tariffs, that's going to
I should have just pulled out of the whole thing earlier, but
for
whatever.
the U.S. economy and growth path for U.S. companies.
I'm ready to
There's, of course,
fall
the
in
other
behind it
thing
if it
that
doesn't
takes us
hit
back
my
to more normal.
take profit.
So, I mean, where does your optimism come from or hope? Is it just
So
that,
3 minutes till MOC.
It comes from that, the fact that this kind of chaotic market environment is not something that can continue long term for our markets, and I feel like there will have to be solutions that have to come to pass because this status quo is not the way we want them.
I know it's not the way that you want things, but we also know that this is the type of thing that the president could essentially undo at any moment because
I wanted to be right.
It's the difference
at any
is
cost.
self-inflicted, right? Putting on these tariffs and talking about the Liberation Day. I think it seems like he's less receptive at this
2 minutes till MOC.
to what many people thought coming into this presidency.
You mean
were
don't?
guardrails
Well, how am I going to stay in the trade?
such as the equity market. He's kind of said he doesn't care much about the equity market. He
Yeah, I
doesn't
know. That's my disease. Actually, I've got
90-day pause rather.
a note highlighted hanging from my monitor that says "Don't move my stop loss."
Doing something he really believes in, Joanne.
Right. Well, I'm not.
All right, I just wanted to see if we reject off this double top or if we go higher.
The sentiment is really negative right now. Sentiment could
This is a
go
bad
down
idea.
with any kind of
This is so
positive
bad.
news and negotiations in terms of trade talks and stuff. So that's where I just again don't think that the status quo can
MOC straight
continue,
down.
and that's where the optimism comes from.
Your best bet, 20 seconds here for investors who are thinking, okay, where do I
Come
go in
on.
the fixed income world right now? Just real quickly.
Well, treasuries, we think, the
Jay Shades was here. He'd be proud of me.
to intermediate end is still more of a safe haven. And we also think that investment grade corporate
Straight down.
bonds
Straight
are
down.
positioned
There you
to
go.
kind
Oh,
of
I got
weather
my
the
stop before I went
volatility
down.
considering their strong fundamental position. And then we also like private credit with its return potential with lower volatility than other asset classes.
All right, so appreciate
I
it.
didn't have it out
Joanne
there far
Bianco.
enough.
She is partner and senior investment strategist at the fixed income ETF
Yeah.
firm Bond Blocks with about $4.6 billion in assets under management. Joining us from Chicago. We're counting you down to the close, just about 10 minutes away. This is Bloomberg.
Went up and got me. Watch it drift all the way down to my target now. Stupid. I should have just got out. All right, that's what I'm. Tomorrow I just got to take profits. I can't hold. I got snapped twice by holding. Yeah. See, we're heading right back down to. Damn it. Yeah. Drives you crazy, man. Drives you crazy. Hey, you think we bounce off the 20 and go higher? I want to go long right now. I feel like revenge trading. This is my demon. Moving my stop and then revenge trading because I moved my stop. Yeah, I know. Yeah, but it might go up before. Oh, fuck. Shit.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are coming up on about 7 minutes to go until we wrap up the trade on this Thursday.
He thinks we finish higher.
Underway.
Actually, that MLC wasn't that bad.
The S&P 500 up about 2.7% on the NASDAQ 100. And then, of course, we've got Alphabet coming your way. That stock's up ahead of earnings. It's up about 2.3%. Intel also coming out after the closing bell. That's a big one, too, going through a lot of stuff. It's up more than 4%. Man, it is on a tear. Holy schmolies. Can I say that?
Watch your mouth.
That's clean. I am looking.
You want to hear what I wrote down on my thing?
Hang on.
What are you seeing? What are you seeing that I'm not seeing?
I've got this highlighted and taped to my screen. I look at it every day.
And it's only Thursday.
Oh, I knew I should have went long.
We'll see what happens.
Yeah. Okay.
I'm joking. Just leave the ATM strategy alone.
Good, aren't they?
Move stop 2 ticks profit ASAP.
What's going on?
Let the multiplier make the money.
Oh, because she wants to talk.
Let this be the last time I move the stop against myself.
Elizabeth, this is what happens. Okay.
Let this be the last time I move my stop against myself. I actually have that written down and highlighted.
Harvard's endowment is in advanced talks to sell roughly $1 billion.
Yeah, I know I did. I know I did. I know, because I was going to be right. You don't understand. I'm never wrong. So.
On returns for illiquid assets.
I gotta say, it's gonna be a little bit tough because everybody's been anticipating the big M&A rush, and for private.
I could have been positive for the day. See, when you think back, when you do things like that, I could have been positive for the day a couple times, but I kept holding, and then I moved the stop at the end.
It's not necessarily happening because the environment is still uncertain.
You know, you just got to think when you get to the funded account, you gotta take the wins, and then do the withdrawal. It could have been okay. I mean, it could have been okay. I never really killed it. I was up 700-800 on that long when I got caught on that long, and then it was up 700-800, and I moved it back trying to get the big run, and the big run never came. So, I mean, the lesson for the day is you just gotta take the profit when it's there, and not worry about if it runs after.
This be the year of M&A and the year of exits.
Were you not listening?
Got 4 minutes till the close.
I don't understand why they're selling secondaries and not selling public equities or not selling from fixed income or other alternatives that they have. But as we learned a few
Well, this is, for me, this is the hard part. This, like what you just seen for me, that's my challenge. I have to overcome.
asset allocation for private assets go higher because they're not mark to market.
And what I do is I tell myself, well, once I get to the XFA, I'll just take all the, I'll just take little profits, but I got to get there quick. So I do shit like this, and it just takes me longer because and then when I get to the XFA, I break every other rule, or I trade different because I'm scared to lose it.
$53 billion to private equity.
Yeah, it's got, so maybe it's got too much.
That's a lot. So maybe you're looking at your portfolio and saying, okay, I mean, we don't know.
Well, especially as the value of other assets.
No, I haven't. I'm proud of that.
Less of an allocation in the
Yeah, that's good. Because I almost did it like 3 times. I almost took the revenge trade. I'm ready to do it now, to be honest with you.
Red Brown.
I'm ready to take a long right now.
Good job, Red.
At 55, 16, 75. Long.
Pushing many Americans to try their hand at raising a chicken flock of their own. Tractor Supply. Do you see this?
Yeah.
Yeah, go.
Tractor Supply.
Yeah, it's okay.
Expects to sell a record amount of chickens.
I knew. I told myself that was doing what I was doing while I was doing it.
Record-setting egg prices.
Yeah, I gotta say, I once did a whole small business show on a company, and I can't remember, but it was all about raising chickens. And I went out to their business out in Connecticut and ran with the chickens.
You get some fresh eggs?
And saw their big coops and saw the little chicks. I gotta say, I wanted to raise chickens too.
Yeah.
There's somebody raising chickens in my neighborhood.
Okay.
Just up the street.
You know what? If that's true, you should ask them for.
Yeah, no, I know. I absolutely 100% know.
My CSA for the summer.
Yeah, no, I know. I've done the math. I know everything. My problem is me. My problem is not rationally walking through the numbers and understanding them and talking through the entries. My problem is I can't keep my hands off the ATM. That's my problem. And I accept it. This is like therapy for me.
The closing bell. Bloomberg's comprehensive cross.
I could have, by taking profit, I could have eliminated the loss this morning. I could have been up on the second trade. I added contracts too quick on the second trade. And then if I would have just let this go when it spiked down, I could have let it go. That would have resulted in a really good day if you think back. It could have been $1,000 day, maybe.
Why are you so pessimistic? I'm not pessimistic. I constantly ask what fundamentally has changed.
Yeah, well, you and I are the opposite. You see, you and I are the opposite. You've mastered what I need to work on, and you're working on what I've already created. You know what I'm saying, SM?
All-time highs on the S&P 500. Remember, it was just a couple of weeks ago that we hit.
All right, 1 minute to close. I accept my $800 loss like a moron.
Down barely 11%.
Yeah, but that's where numbers really mask a lot of the bigger issues. It doesn't feel anywhere close to.
If I could have that mentality like you have.
There's been a couple of people we've talked to. I don't know if you guys have heard some.
Me? Yeah, I keep the losers way too long. I keep them too long and I move my stop. That's exactly what I do. Like when I'm green, I won't take the quick profit, and then I'll move the stop against myself. See, I won yesterday because I took the profit quick. What was I up yesterday? I forget. 1,300 or something, whatever.
And what are they expecting to do over the next couple of quarters?
Yeah, the one thing I want to mention in terms of the S&P 500, Eric Weiner of our Bloomberg News team said up 6% in the past 3 days.
Yeah.
Best 3-day stretch since.
Well, that's how I have it set up. My stop loss is already there. So I shouldn't have to touch it. I should only move it closer. So if I move my stop loss, it should be closer to the price, not further away. You know what I'm saying?
The NASDAQ composite higher by about 460 points or 2.7%. The Dow Jones Industrial Average.
No, I can't. I already tried doing that. There's no way to do it. I've tried. I tried 10 different ways. I've tried trading like 50 different ways to get myself to stop doing it. Honestly, I've tried everything. And this is like how I'm doing it now is the best it's going to be. And I just have to stop moving my stop loss. If I just stopped moving my stop loss against myself, I'd be fine. There'd be nothing to talk about. You know what I'm saying?
Alphabet's up more than 4% ahead of earnings. So,
All right, I got to make a call, guys. That's the close. I'll center the chart here. I'll be right back.
S&P up 6%. Oh no, Intel
Alphabet.
up
Oh, it was Intel. Thank you.
All right, guys. Intel
Well, that's our therapy and lessons for the day.
in the most recent quarter.
You end up for the day, though,
EPS did come in
SM?
13 cents a share. I'm not quite sure if that's a beat or a miss. We'll have to come back to that in a second. On the revenue side, the company did beat there, 12.67 billion. The street was looking for 12.3 billion. The guidance for
Hey, that's better than being down 800. Oh, look at the spike up. See snooze. If I had taken the long, look at where I'd be right now. I'd be encouraged to do this nonsense again, is what would happen.
The company also saying that for the second quarter, it expects no increase on an adjusted basis. Basically,
All right, I'll be right back.
looking for profitability of about 7.2 cents here. There's a lot to go through this release, but we should point out that the new CEO has only been on the job for a few weeks, and we get into that situation as to whether or not this becomes a sort of one of those kitchen sink things as he tries to map out a plan for the future. Intel share is moving lower right now, down by a 2%. And I'm looking right now, and I see Alphabet crossing the wire.
Yeah, let's go to that right now. Alphabet's first quarter EPS beating analyst estimates, $2.81. That is 80 cents higher than what analysts had anticipated if we're comparing like with like. Revenue, $90.23 billion, better than the expected 89.1. When you back out the traffic acquisition costs that they pay to partner websites and partner companies, $76.5 billion. Analysts were looking for $75.4 billion. Google Cloud revenue, this is the big one because it's, of course, a driver here for revenue overall. $12.25 billion, $12.26 billion. Analysts were looking for $12.32 billion. So that is a miss on the Google Cloud revenue. In addition, Alphabet announcing a 5% increase in its dividend. And Alphabet as a big tech company having a dividend is already kind of mind-blowing. But the fact that it's increasing its dividend, that just shows you how the state of the world has changed a lot. The stock right now moving higher in after hours trade by about 5.5%.
Of course, AI being called out by Sundar Pichai, the CEO of Alphabet, calling out Gemini 2.5, specifically calling it the most intelligent AI model, our most intelligent AI model, breakthroughs in performance and an extraordinary foundation for future innovation. Search saw continued strong growth, boosted by the engagement we're seeing with features like AI Overviews, which now is 1.5 billion users per month. Driven by YouTube and Google One, they surpassed 270 million paid subscriptions. Cloud grew rapidly with significant demand for our solutions. So perhaps not a pullback in build as some were concerned about?
I don't know. Let's talk about that and just continue to watch because you got Alphabet up about almost 6% here. Just real quickly, I want to mention T-Mobile also out with their results. The company raising its 2025 financial guidance. Also, a red sticky from us here at Bloomberg. T-Mobile postpaid phone net adds 495,000. That's a miss in terms of what the street was expecting. Street was looking for a higher number at 506,557. In terms of the outlook, fiscal year core adjusted EBITDA of 33.2 billion to 33.7. That compares with the street estimate of 33.47 billion. Again, T-Mobile remained just down just a hair in the aftermarket.
Yeah, kind of interesting to see those results out of T-Mobile, specifically on the back of a pretty solid beat that we had out of AT&T a few hours ago. I do want to go back to Alphabet, of course, the biggest company in the S&P 500 to report earnings so far. And they really did come across much higher than expectations, more so on the guidance, less so in the current quarter. And I just want to break down specific things. When we talk about the ad revenue of this business, which is still, to a certain extent, the big driver here, you're still talking about near double-digit percentage growth. I think it was 8.5% to be specific. And then, of course, on that services revenue side, you're at growth of about 9.8%. So for a company of this size to be posting up those types of numbers is pretty good. YouTube up about 10% as well. One thing, though, that an analyst talked to me about this morning that he said that we should really pay attention to is the company's Waymo and the sort of rollout of the autonomous driving and how that could actually be a net benefit to the bottom line relatively soon, in his words at least. So it'll be interesting to see if that comes up on the conference call.
That would still be in the other bets category.
Yes,
right?
They don't break it out, so we don't know.
Other bets operating loss was $1.23 billion. That was up 20% year over year. The estimated loss was $1.12 billion. Still relatively small when we're talking about Alphabet, but I think that's an area where a lot of people are optimistic. But make no mistake, this is a company company that makes its money still on search and advertising.
Let me just jump in really quickly because we also have Skechers, the shoe company, reporting results. First quarter adjusted EPS, $1.17, beating the consensus estimate by 1 penny. Net sales, $2.41 billion, coming in lighter than had been anticipated. Full bottom line EPS, when you include a gap, it's $1.34. That is higher than anticipated.
Yeah, I want to go back to Google. Yeah. Continue to see this up in the aftermarket. I mean, we talked, the company also saying first quarter Google Cloud revenue, $12.26 billion versus an estimate of $12.32 billion. What our Mandeep Singh said is that it is all about search. That is still the business, and that's what you want to see in terms of strength.
But I just want to go back. I mean, you guys kept interrupting me. I was supposed to rebut Tim. Okay, by the way, Tim, that fly is still in the men's dressing room. If you can deal with that, by the way. It's driving me. There's a gigantic fly in the men's dressing room.
All right, do you have something to say?
I do, actually. So we talk about the valuation. So I just want to get to this point on Waymo, though, because this was Brian Nowak over at Morgan Stanley who was talking about this, and he did publish a note, so this is public. He talked about this idea of how the Waymo unit as a standalone could be valued at something like, $45 billion minimum, and that's based on the last funding round. So in his idea, it would be a lot more than that. But compare that to what we learned out of the trial, where they're saying that the Chrome standalone browser would be valued at $50 billion. So at least if you believe what Brian Nowak has to say, you're talking about a Waymo unit that is still relatively nascent, that in theory, at least on paper, is just as valuable as the Chrome unit.
I just have to say something else. We mentioned the 5% increase in dividend. It's now 21 cents a share. Also, an additional buyback program authorization of $70 billion. Maybe that's why the stock is moving higher. I know that we reported this beat on revenue and everything, but at the end of the day, investors are looking for stocks that can deliver, that can return cash to shareholders, and this is exactly what Alphabet is doing. If nothing else, it's got a ton of cash sitting there, and it can use it in this way.
Can Romain and I talk more about Waymo? Because
how about the fly in the dressing room?
Now,
Romain, have you been in a Waymo?
I have not, because I'm chicken.
It's incredible. I've done it twice in San Francisco. Look, they're growing, they're expanding, they're they're in other parts of the country. I think one concern people have is they don't know how much these Waymo vehicles actually cost to build. The Jaguars, the technology is, we think, really expensive. Max Chafkin has talked to us a lot about that, about we don't know what the numbers are there and if they're adding up to something that is, look, obviously other bets lost money, but if it is something that can be scaled at a relatively, I mean, we're talking margins for a tech company, right? This is really expensive hardware. This is not like the Chrome browser.
That's why it's going to be stuck in other bets for a long time.
Yeah, it really has.
All I'm going to say is, as you said, Romain, this is one of the largest market cap companies out there. When we talk about the Magnificent Seven, like this is one of the companies, if it was disappointing, this would be a bit of a bummer, right, in this market environment. For it to come out with these numbers, for it to do the buyback and all these, like to feel like it can do these things, it's pretty impressive.
And we've been here before, right? I mean, we've been here where a lot of investors have sort of discounted, if you will, some of these mega cap companies, saying that, they've kind of gone too far, too fast. And usually we get a course correction. I mean, course correction back to the upside, where these companies let it be known that they could very much just throw off cash pretty much as they please, at least when it comes to Alphabet, to maybe to a certain extent Microsoft, and maybe to a smaller extent Apple.
But their numbers weren't bad.
No, they weren't. And I really think that the way Sundar Pichai puts it in the commentary that he gives really showcases how the focus has moved away from AI towards the fundamental strength of its core businesses, whether it's search, whether it's YouTube, whether it's the cloud business. AI gets a mention, but beyond that, it's really about, hey, we're executing on all fronts.
All right, stock's up about 5% here in the aftermarket. So investors, at least so far, liking what they got from the company. And just a quick check on Intel as we go out here, guys. We're seeing that stock also moving around in the aftermarket. It is down almost 6%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Scarlett and Romain continuing out there on television, and Tim and I are going to continue right here on Bloomberg Business Week Daily. We'll see you again.
The fly, Tim. Get it.
I'll get it. Don't worry. I got you.
You got to get the last word, don't you? All right, we'll see you tomorrow, guys. I know.
You couldn't resist.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, watching some of the big earnings here in the aftermarket. We mentioned Alphabet. Just want to go back there, up about 4.25% here. So investors kicking this one higher. This after the company beat estimates on Google search advertising, reported first quarter revenue and profit that exceeded analyst expectations, buoyed by continued strength in its search advertising business. We talked to Mandeep Singh earlier, and he said this is an important number. Watch the search business. So again, it seems like it continues to give a big boost when it comes to Alphabet's results. Intel's another one we got here in the after hours.
As good. It's down. Excuse me, I didn't have the microphone on. Not looking as good. It's down 6% in the after hours. The company gave a weak forecast for the current period and announced it's cutting workers to bring costs in line with the business's smaller size. For more, let's bring in Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani. He joins us from our San Francisco bureau. Kunjan, it's only been a couple minutes since the numbers came out. Revenue is going to be between $11.2 billion and $12.4 billion. That compares with an average analyst estimate of $12.9 billion. Analysts do not like to see that. Shareholders do not like to see that. Is that why we're seeing the stock down 6% in the after hours?
For the reaction so far, yes, but we suspect that as we get into the earnings call and start listening to the commentary, the sentiment will be driven more by the strategic changes that the new CEO likely will announce, more sort of a color on the second half uncertainty rather than the 1Q, 2Q numbers.
I mean, it's going to be messy for a while, right? CEO just got back, or got into the spot. It's been a busy week. Like, I was kind of floored the last 3 days. Intel's up about 14%, right? Getting rid of some things and kind of trying to figure out its way forward. It's going to be, do we give the CEO some allowance to kind of reset Intel's future here?
I mean, you have to, given the short time he's been in his seat. To his credit, though, he has been, what I think folks really like is his decisiveness and the speed which he's taking actions, whether it's exiting the non-core assets like the Altera deal, whether it's cutting costs both on the OPEX and the CAPEX side as we are seeing on the wire, and taking the key product, the AI product segments within his direct command. So I think we see a lot of right steps in the right direction so far. Of course, it's not going to be easy, especially as they're faced with the uncertainty from tariffs, from U.S.-China trade relationship. Remember, China is still a huge portion of the market for this company. So he will have to navigate the near-term macro, but so far what we have seen from him is positive.
How much do they get in terms of business from China? Just so that we remember those numbers.
I don't have the exact stat. It has to be somewhere between 30 to 40%, top of my mind, which is, again, significant because if you still think of Intel, it's still the dominant share in PCs, right? Their key business segment, which drove the beat for the 1Q numbers that we just saw.
I'm wondering about this headcount reduction because earlier this week, we saw news that they were set to make cuts by about 20%. Now we're learning that the company doesn't have an estimate for the one-time expense associated with the cuts, but it expects operating costs to be reduced to about $17 billion this year and $16 billion in 2026. When we spoke to Ian King about this earlier this week, Kunjani basically said Intel has a lot of employees for its sales. Like if you look at competitors, if you look at like NVIDIA, for example, they have on a proportional basis. Intel has many more employees. Is 20% the right way to think about this? Or in your view, does it have to be higher?
I think the magnitude of the percentage is not that a direct correlation rather than the areas that he's focusing on, which is he's going after, again, non-core teams, eliminating bureaucracy by eliminating layers of management, which was a big struggle with the old Intel because decisions just took a lot longer. I mean, we have seen him making those decisions, which you could argue could have been made last year, right? The Altera exit has been dragging along for a while. These cost cutting in these other non-con programs, you could have done that sooner. So I think going after the right cuts is more important just than the magnitude of the cut.
All right, so it's the first conference call for the relatively new CEO, Lip-Bu Tan. What is it that do you think he needs to answer? What are the questions that must be answered when it comes to Intel?
I'm sure he'll get a lot of question again on the miss on the guide and the second half outlook, as we have seen analysts ask in all the earnings calls so far. But more important, I think, will be beyond that the questions around status of Panther Lake, right, and how 18A is doing. Commentary around now that we have heard from TSMC that there is sort of no deal as of right now between TSMC and Intel. Are there any potential JV with its customers that is possible, or how does he think in that direction? And its sort of roadmap for foundry business going forward. Remember, next week they are going to have a big foundry event, so he might hold off sharing some of that foundry related, answering some of that foundry related questions to next week, which we would like to hear this week.
Can you think Intel can turn it around? I mean, we've been talking about the Intel turnaround story.
They're still planning to spend
for a very, very long time.
Yeah, still planning to spend about 8 to 11 billion in capex this year. So,
you think they can do it, Kunjan?
Yeah. I hope they can do it. I really want them to see them succeed. I mean, it's a national American champion, right? Since my early days when I was thinking about semiconductors, it has always been the North Star for the industry. So I really hope they can.
Is it important for U.S. national security?
It definitely is. And it just even all overall ecosystem, right? Like if Intel suddenly dies from this technological landscape in foundries, you just have one player really left. It also impacts with the speed at which the entire ecosystem progresses.
All right, good stuff. Listen, thank you so much. We know you're got to write some research and get on that call as well. Kunjan Sobhani, who covers the chip area. He's senior semiconductor analyst here at our Bloomberg Intelligence team. Shares of Intel, folks, down about 5.7% here in the aftermarket. This as the company, which is working on a comeback, gave a weak forecast for the current period and said it is cutting workers to bring costs in line with the business's smaller size. So it's a redirect, right? And kind of trying to get the pieces in place.
Well, it's a different story when you look at
it's been on a run.
It has.
In the lead up to earnings here this week.
Yeah, this week.
Just
14%?
Yeah.
Is that right?
I'm kind of obsessed in the
Okay,
last 3
we'll
days.
see what happens tomorrow.
Yeah, I'm sorry. Go ahead.
That's fine. 3.8% to the upside is where we see shares of Alphabet, the parent company of Google. The company reported first quarter revenue and profit that exceeded analysts' expectations. It was buoyed by continued strength in its search advertising business. And that's exactly where we want to go now. We've got back with us Mark Douglas. He's president and CEO of Mountain. The company is software that helps companies target advertising on smart TVs. He understands the ad spend market. He joins us from Miami. Mark, good to talk with you again. Does this surprise you given the trends that you're seeing when it comes to advertising?
Not given the trends. I think the trends I want to talk more specifically about Google.
Yeah.
I think we started the year, and I think literally everyone was very optimistic about the economy. Q1 and Google's reporting on those results, I think they did very well. I think there were concerns and continue to be concerns about whether AI on their platform, meaning in your search results, is going to in some way negatively impact their search business. But I think as an investor, even there, just provide some comment on that. Look, I'd rather have Google competing with themselves than allowing other people to compete with them. So I think even that's a positive if in the future it does have some negative impact.
Well, it's funny that you say that, and I'm looking at our write through by our Davey Alba, but this whole idea that, Alphabet, Google has to show, right, that it still has momentum in search advertising and cloud, but at the same time show that as it makes incredible investments in the AI build out, as the world kind of shifts in that direction, that it's also there as well. It's really tricky. And this is what our Mandeep Singh said. This is a company that's got 7 apps with over, I think, 2 billion monthly active users. Its bread and butter is still Google, right? And its search business. But as people move to ChatGPT or Gemini, that's a tough transition. It's got to juggle a lot.
Yeah. And like I said, I think if I'm an investor in Google, I always say to my company, better we compete with ourselves than we allow someone else to do it.
Right.
So if I'm an investor, what I'm looking for is that the management team is awake, they're alert, and they're ready to compete. And I think Google's showing that in what they're doing with Gemini, and they're showing that they can still navigate search. Also, with a company with that scale, you mentioned the tremendous scale they have. honestly, you can always squeeze out more revenue and as a result, more earnings. So I think it also shows that they can manage the business in order to find those extra dollars if they need to, while they might be challenged in other areas.
Is this the classic innovator's dilemma, though? Google's core search business is so profitable and it's so entrenched and it's so ingrained in pretty much almost every country in the world, we have to say almost, that there's a concern that it doesn't want to cannibalize that with investment in Gemini?
Yeah, that's what you don't want to see.
Right.
Is you want them to be like you almost want it to be two separate companies, and they just go at it, and may the best part of Google win. The other thing,
as long as Google wins, that's the point,
Yes,
right? Like you said, you like to be competing with yourself. Forgive me. Go ahead.
Yeah, no, exactly. The other thing to remember, mobile was a big threat to Google. Yeah, Google was all desktop, and you have your browser out. That's still, obviously a huge part of their business. And people were very worried about whether, people were going to search on mobile, and if they did, whether they were going to respond to the ads. So, I mean, it's not the first time Google has been challenged by new technologies, and they, honestly, kudos to them, because they're not. I expected Gemini to possibly cause some problems in Q1, and in terms of their revenue, and obviously it hasn't.
Hey, one last question. On the upcoming call with analysts, what would you be asking? What do you want to hear?
I would be all about Gemini and how AI results at the top of the search page, which essentially have replaced the paid, the click ads, the paid ads at the top of the search page for a lot of the searches. I would want to ask every possible question I can on data related to how that's impacting their search revenue, their search results, responses to the searches, everything, and try, if I'm an analyst, try to model that out.
All right. We're talking, of course, with Mark Douglas, President and CEO of Mountain. We want to bring into the conversation Mandeep Singh. He is Senior Tech Industry Analyst at Bloomberg Intelligence. Just coming in the studio, it's a little crazy, so he hasn't heard everything that Mark had to say. But Mark said, he's curious about Gemini, something he's going to be looking at on the call. Mandeep, I've been quoting you.
You told us what to do, Mandeep, and you were right.
I've been quoting you nonstop because you said it's all about search. So walk us through what they got in and how it looks for you, because investors like it.
Yeah, I mean, the Google Services revenue was a slight beat, but what was really impressive was the margin beat on the Google Services. And a lot of it is because everyone thought because they're adding AI overviews, that's going to hurt the margins of search. Well, it didn't happen.
Why didn't that happen? Because you have to explain this from the perspective of a Google user, like the experience. If we get the answer with the AI overview, we're not looking at ads. We're not clicking on things.
Yeah.
Why doesn't it hurt?
Because they have so many different types of queries on Google search that some of those queries, they are able to monetize it just through ads on AI overviews. Remember, Google never went away from ads. Even though they integrated LLMs, ads has always been a core part of the Google.com offering, even with the AI overviews. And they somehow weave the ads in a way where they're able to charge for those ads. That's what makes them so special.
I never look at an ad on, like, what is wrong?
I don't know.
When I look at an AI overview, all I'm looking at is the answer.
It depends on whether it's an informational query versus an e-commerce query or a travel query or an auto query. The page change is so dynamic that they are able to weave in the right ads with the right kind of targeting.
What about with the Gemini app and like the app experience? Are they able to make money doing that yet?
No.
Does that matter?
I mean, you have to remember, Google does 5 trillion searches a year. 5 trillion.
It's like off the charts.
Even if they monetize 20 to 25%, which is the case, 75% of the queries are not monetized. Imagine how much power they have in terms of the targeting they have with the ads, as well as the number of queries. Even if ChatGPT is taking some volume, 5 trillion is a lot.
Mark, I want to bring you back in as we've got Mandeep Singh, brilliant part of our Bloomberg Intelligence team. Mark Douglas, President and Chief Executive Officer of Mountain, really great perspective in terms of advertising within this world. But you mentioned something about Gemini that you want to hear on the call. Just lay it out again for Mandeep so that we can kind of dig into that with him.
Yeah, I mean, I think it's similar comments, which is the Google as a company. I think what's most important to see is that they let the different parts of the company compete. So Gemini competes with search results, because if they don't compete with themselves, then OpenAI and others are going to do the competition for them. And so I think it's important that they let them compete. It appears they are. And I also agree with the other comment that he just had in terms of scale of their business, is like, you know, you can increase search results, you know, paid search results 0.5% and beat. They have a lot of levers to pull, and I think they're doing a good job pulling them to be able to navigate this climate right now.
Yeah, and the point about Gemini, not only does it like there's a competitive aspect, but also you learn so much more about the user. Yeah. Imagine they are on Gmail, Maps, Search. Now you have got one more app where you have your user, you are learning about their type of queries. How good their ad targeting becomes suddenly because they are interfacing through Gemini now. So there's one more surface that you are adding, and it complements their ad targeting.
Mark brings up this concept of, you know, great to compete with yourself. And so essentially that's kind of what Alphabet's doing, right? With Google search and then Gemini. But is it a guarantee that everybody who's been using Google is just going to easily just kind of segue into Gemini? Can we assume that will happen?
I mean, Google is still the verb. And I don't think it's changing anytime soon. Yes, you can say ChatGPT for certain informational queries, and for certain queries, ChatGPT does a great job. But if you're thinking about the Google ecosystem, you know, all the apps that you are used to using on the consumer side on a day-to-day basis, it's hard to take yourself out completely from the Google ecosystem. You'll still be using Gmail, apps, YouTube, even if you use ChatGPT. I mean, a lot of times ChatGPT shows you a search result, and then you go to Maps to search for, you know, the exact address that ChatGPT is showing.
Right.
Right.
Hey, Mandeep, Alphabet shares up 4% in the after hours. Meta Platforms up 2.3%. Amazon shares are higher by 1%. All happening because of what we heard from Alphabet. Is this just a huge sigh of relief when it comes to mega cap tech?
I mean,
is everything okay? Are we out of the woods?
I'll wait for the call because remember, Liberation Day was April 2nd.
Yeah.
This is through March 31st. We don't even know what the impact of tariffs was. I mean, all that happened at the beginning of 2Q. So we may be, I think, too far-fetched in thinking, you know, we're out of the woods, but it's a good print.
It's a good point. It's a good point. Mark, come on back in. I'm curious if you have a question for Mandeep Singh. Like, you know, you follow this market, you follow this company. I'm just curious.
Yeah, I actually want to take the conversation slightly to another part of Google's business. One of the things, you know, I'm still very much an active engineer, and one of the things I'm seeing is Google be very aggressive on capturing market share in the Google Cloud business. And that's not something that I think many people are talking about today, but that's potentially, you know, setting up from some really good results in that part of the business in the future. So I'm curious, Mandeep, if you have any thoughts on that part of Google.
Yeah, I mean, it goes to the point about, you know, them having this huge infrastructure that powers their family of apps, also powers the cloud business. And 30% growth on a $50 billion run rate is very impressive.
Right.
The problem for Google is it doesn't generate the same kind of profitability that search does. And that's why investors don't care that much. But look, I think they could even grow faster on the cloud side. They're probably somewhat supply constrained that everyone is in terms of AI infrastructure. So that cloud business could continue to compound at 25-30% clip for a while.
We've been talking about how the stock has really popped in the after hours. It's off some of its highest levels in the aftermarket, Mandeep, but still up about 4%. But that point that you said, this is through March 31st, not before kind of the stuff hit the fan, right?
Yeah.
And has really kind of changed the environment. Is that a very, very important caveat? Because these are the kind of companies, right?
All right, I'm back.
Tech companies that were like, what do they have to say in this environment?
Who's
So
left?
I'm just curious if we have to be kind of.
We're winding
surprised
down.
through their
And not to
results.
take
All right,
on
so
the top line, I think search
we're gonna focus on not moving our. We're gonna focus tomorrow. So like, I'm
So clearly they have executed.
I'm in no danger of losing this practice account. I'm at 53, 3. So I have to get to 159. So I'm at 153. So I can go back, like I can lose $4,000 before I lose it. So I'm like, no, there's no risk in losing it. So I just need, I need like 6 more grand, and I get into the XFA. So we're good. But tomorrow, everyone who comes in, we're all going to try and talk about not moving our stop loss. We're going to focus on not moving our stop loss and taking profit quicker. Like if you move the stop loss, you move it up behind the price, so you take profit right behind it if it comes back a little bit. So that's what we're going to focus on. We're not going to move it against ourselves. We're only going to move it closer to the price to take profit. That is going to be our mantra.
Then you're not able to fund all these buybacks and dividend with your free cash flow anymore.
I wonder if both of you, I'm looking at our Markets Live blog and our macro strategist, one of them writing that the headline.
That is going to be what we're going to focus on, because that's what I got to focus on. I could have not taken an $800 loss and easily have taken a $300 to $800 win, probably.
Names and numbers and results.
I know I could have. And it's all ATM management. It's not where I choose to enter. It's not like the logic is sound on how we're calling out the chart. You know, it's not going to be perfect every time, but you're going to get an opportunity to take profit if you're mentally stable enough to do it. You know, you can't be thinking you're going to run 25, 30 points on the ES every move. You got to be looking for 3, 4, or 5 points. And just be happy with that. And then if you can double dip, that's fine. If not, move on. So that's what we're doing.
President and CEO of Mountain joining us from Miami. Your thoughts on that, Mandeep, in terms of what's to come? I mean, there's Alphabet and how they make money, and then there's the rest. Is there any assumptions we can make or not really? They're all kind of different.
Yeah, I think after the call, we'll have a better sense of how they are viewing the environment. I mean, the whole thing about Chinese advertisers pulling back.
Yeah.
And Alphabet in general has a broader swath of advertisers on their platform. When you think about Meta, even though, it's duopoly, and Meta probably is more skewed towards, I would say, retail, and it doesn't have as much autos exposure as Alphabet has. So there is some nuance with regards to their advertiser base. I would say Alphabet is more diversified. So if Chinese advertisers are pulling, that will hurt Meta more, for sure.
Alphabet doesn't give guidance. So what do investors look for on the call to understand the current climate?
Well, so
CFO commentary. I mean, is there anything there that could move the needle?
I think whatever they say around ChatGPT and LLMs and just overall color around competition, because this is the first time everyone cares about comments related to search. I mean, up until
really
2
funny.
quarters back, it was like, oh, okay, Google is a monopoly. Everyone knows that. Ad pricing may go up and down depending on the cyclicality of the economy. But now the competitive threat is real.
But the competitive threat.
All right.
Competitive
So
threat
I'm
with
just
AI.
grinding on some work here. So,
The
all right,
idea
guys, I'm going to.
It's an economy where there's uncertainty.
I got some things to catch up on email and stuff, so I'll leave everything on until 5 o'clock.
The print is ad pricing actually
Um,
went up
for the first quarter.
for the first quarter.
This is
If anyone has anything, just throw it in the chat. I watch the chat, and I'm watching the Bloomberg also. But that's our focus for tomorrow. I might even make a little emote about moving your stop loss so that we can just try and keep it on our minds.
Essentially.
Because I think that's something everybody's got to work on, too. Well, not everybody. SM don't, but
Remember, they collect data from
it's tempting to move it so you can stay in the trade,
That's why the ad is so.
and that's the problem.
Meta also has
I just got to be okay with it getting tapped out,
probably has more data about.
and then just re-enter without revenge trading.
Right, really
But
specific data, right? Of exactly.
that's why you got to be on the right instrument during the right volume and price action. Like on the NQ, it moves so fast that you can just hit your stop 3 times in a row,
It's really fascinating.
you know,
Thank you. As always,
just because it's
always, good
moving
to
so
see.
fast. So that's why we go to the
Continues
ES
to
when
grow
it's
from
like that.
intelligence
But anyway, all right, guys.
Alphabet folks up about
I'll talk to you later.
3.9% in the aftermarket, definitely off its best levels of the day. Sales
Be
meetings
back tomorrow, same thing.
advertising analyst call coming our way in just a moment.
Yeah, in just a few minutes, we're going to be speaking to Ed Ludlow on Intel because shares of Intel in the aftermarket down 6.3%.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings to cover after the close of trading, and we are on it. Google parent Alphabet reporting first quarter revenue and profit that exceeded analyst expectations, boosted by continued strength in its search advertising business. After hours, Google now pushing higher, Alphabet up by 6.9%. Also reporting after the close of trading, we heard from Intel. Now, it gave a weak forecast for the current period and said it is cutting workers to bring costs in line with the business's smaller size. After hours, Intel shares right now trading lower by just about 6%. It was an update on Wall Street today with the Dow, the S&P, and NASDAQ all advancing. The S&P 500 index rose 2% to the highest since the day that President Trump announced his tariff offensive. S&P 500 index up today by just about 108 points. That was a gain of 2%. The Dow up 486, closing above 40,000 again at 40,093, up 1.2%. The NASDAQ Composite Index up 457. That was a gain of 2.7%. The 10-year 4.31% with the 2-year 3.78%. Spot gold today, we had gold moving higher by 1.7%. 33.44 for the precious metal. West Texas Intermediate crude up 0.8%, 62.75 a barrel on WTI. Bitcoin on an update for the rest of the market. Bitcoin down 0.3%, 93,393 on Bitcoin. So again, recapping after the close of trading, we heard from Alphabet. Alphabet right now up by 6.7%. Intel after earnings lower now by 5.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. Well, shares of Intel are selling off in the after hours, down right now by about 5.3%. It's attempting this comeback under a new CEO, Lip-Bu Tan, and it gave a weak forecast for current period. Also said it's cutting workers to bring costs in line with the business's smaller side. With more on Intel, we head out west to talk to the co-host of Bloomberg Technology, Ed Ludlow, who caught up earlier with Intel's CFO to talk about the earnings and the outlook. He joins us from the Bloomberg San Francisco News Bureau. What did you learn, Ed, from Intel's CFO?
Yeah, I think quite a lot. Intel is still very far from where it wants to be, from where its customers want it to be, and the only way to get there is to readjust the makeup size of the workforce and also, look very closely at the balance sheet. And so the major step that they're taking is pulling back on OPEX and CAPEX. They confirmed our reporting that there is going to be layoffs, frankly, and that those layoffs are going to be in middle management. But it's really a story about a company that has a new CEO who's like, you know what, we are going to just get focused on technology. Although, as I say that to you, I've got a bit of sense of deja vu because that was kind of the story the last time we had a new CEO at Intel.
Well, I was just going to say, how many years have we been talking about a turnaround at Intel?
Yeah. So I was just talking to Bloomberg's Ian King about this. It's like, what is the single headline on Intel? What is the new focus? And where are they going to pull back? Pat Gelsinger really wanted Intel to be a contract manufacturer to the world, right? Do what TSMC does alongside having its own products. Lip-Bu Tan has just sent an email to employees this afternoon that we've seen and read, and basically reading between the lines, I think that is not a priority for him, the contract manufacturing bit. I think he's acknowledging, and Dave Zinsner went through this on the phone with me, that customers want one thing right now, right? Which is AI accelerators, high performance GPUs or AI chips that are involved in the training and inference stages of large language models and AI models. And Intel's just not been at the races there. So materially what they're doing is they're cutting out middle management. They're going to rehire better people in the engineering space. And you may have seen a headline on the terminal just a couple of minutes ago. They're going to make people come back to the office 4 days a week, which is interesting because they're kind of late to do that. In all the names we cover here.
Wait, so
they haven't been coming to the office 4 days a week?
Is this the recipe for making Intel again a dominant chip player going forward?
I don't want to confuse our audience, but basically, in the history of Silicon Valley and the world of technology, Intel is at its origin, right? When we think about the early days of semiconductors and the cutting edge of semiconductors and an annual cadence where technology got better, Intel was like the leader there. And for a long time, it has not been. It has fallen away. And, you know, Zinsner, when we was on the phone with me, and, you know, there's a reason that Zinsner, the CFO, was on the phone with me, right? Lip-Bu Tan is very early. He's just been at the company a couple of weeks. But they are trying to address culture. They think that basically that the culture that needs to be there to be like ruthless and win and get ahead in the world of technology is not in place. And so, yes, there will be a reduction in force that will target middle managers. But I was surprised as anyone to see that part of that strategy is getting people to come back to offices, not just here in the Valley, but around the world.
Is the reporting that the Bloomberg News team did earlier this week around the layoffs, that was confirmed today? Are those numbers,
we discussed it.
Are those numbers consistent with what we learned today publicly from Intel?
So what Dave Zinsner, the CFO, said to us on the phone was, I'm paraphrasing, but it was an interesting number because I don't quite have one yet myself. But the reason he doesn't is that he knows what the OPEX and capital expenditures targets are now. Those are firm, right? And you guys may have gone over those on air, but they reduced OPEX and CAPEX for the full year. CAPEX by about $2 billion, and then OPEX came down a similar amount as well. And from that, and knowing where in the org they're going to cut middle management, Dave knows what the end goal is, but he says, I don't have a percentage of overall workforce, you know, net what the layoffs will be. But they were confirmed. There will be a reduction in middle management. You know, the quote was very simple, that they are going to cut out the bureaucracy that currently is in that company as well.
So the CEO saying in a statement, I'm taking swift actions to drive better execution and operational efficiency while empowering our engineers to create great products. We're going back to basics by listening to our customers and making the changes needed to build the new Intel. So it's top customers, Dell, Lenovo, HP, Microsoft, Amazon. What do those customers want? What do they want from Intel?
They want better products where the technology can do better things. And on the phone, Dave was pretty forthright in saying that trust with their customers is not really in a great place at the moment. You know, Lip-Bu Tan in that statement you just referenced said that a lot of their problems right now, and the reason that he's going to have to take severe action, is due to prior actions the company has taken. And I think he was, of course, talking about the last leadership team. You know, the story of Intel is the stock's down 5%, right? Well, almost 6%. We should be clear that things have not improved, and nor would you expect them to. It's only been a few weeks that a new CEO has been in place. But, you know, they beat in the first quarter, where very simply there was a pull forward, right? Those customers you just listed ordered chips in advance of tariffs coming.
Right.
And hence the outlook for the current period is not great, because they took from what they would normally order now into that first quarter, and the second quarter is not great. You know, so there's a lot that needs to be done here. Designing and building cutting-edge chips is what they plan to do.
Can I talk about Waymo with Ed?
You could do whatever you want. This is America. You can do it.
Ed's been riding in these forever. You know, it took me till my last, like a couple trips ago to San Francisco to do this.
I gotta say, he's a changed man.
I am a
Ed,
changed
ever
man
since
after
he
this.
rode in a Waymo.
But Romain brought this idea up on the close that, you know, it's in the other bets category of Alphabet. And there are, you know, questions about how much these vehicles cost. What is the current valuation? You've written about this a few months ago. How is Waymo valued as a business?
I listened to your conversation with the close anchors and with Mandeep as well. Astonishing what you guys got through. That Waymo, what we reported in its most recent private funding round, is $45 billion. But there are a few things that I think Romain in particular I'd love to discuss this with. Waymo has outside investors, and it is a material hardware company that's very different to Chrome.
Yeah.
And you know what Romain was talking about is the valuation that Chrome was assigned in the course of this antitrust trial. That $50 billion Chrome valuation was given by the DuckDuckGo CEO. But at the core of Chrome is that its underlying technology is open source. So Microsoft's Edge browser is made on the same code base that Chrome is. They're not apples to apples. But he is right in that long term, like Waymo has a viable
Yeah.
future, many would think. It's just that, like, that is far away.
It
It is
is.
super far away.
Well, Ed,
Good perspective.
appreciate you joining us. Great perspective. Ed Ludlow, co-host of Bloomberg Technology in San Francisco.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, getting ready to wrap up on the Thursday edition of Bloomberg Business Week Daily. As we've been talking about, we've got continuing to see Alphabet move in the after hours. So we're looking forward to that analyst call. That stock up about 3.8% as we speak. And Intel, also one of the big ones after the closing bell. And just taking a quick look where we are, we're down almost 6% here in the aftermarket. So we'll look for some more commentary on the analyst calls.
Let's take a look at some stocks on the move today. Denitsa Sikova is Bloomberg News cross-asset reporter. She joins us here in the Bloomberg Interactive Brokers studio. We got to start with Intel.
Let's start with Intel. We had a good start of the week for Intel. Today, obviously, things are not looking so good. Down more than 6% in late trading. It comes off a weak forecast for the current period and saying that it's cutting workers to bring down costs. We had a headline from Bloomberg News that they're reducing their ranks by more than 20%, which was well received at the time. But now we're seeing, first, the second quarter revenue will be between 11 billion and 12.4 billion. So that's where we're seeing some disappointment. It was short of the about 13 billion estimate we saw from the street, and that was one of the biggest disappointments. Of course, we have a new CEO taking over the company. There has been a lot of optimism based on that. The company is actually up year to date, one of the few tech shares that are up. It's up 7%. We saw some good parts in the reports. Quarter sales came in at 12.7 billion, topping predictions. It's more when it looks to guidance and the future in those weak forecasts, suggesting that the uptick in demand maybe is a blip. We know that there has been a lot of rush of orders right ahead of the tariffs, so analysts are worried about that. But yet, it's a good start of the year, despite today's move.
And I was obsessed because Intel was up about 14% this week heading into earnings. So there was a lot of buying going into these earnings reports, so definitely lower. Where do you want to take us? Alaska Air?
Yeah, let's talk about airlines. They've all been taking a lot of pressure lately. Alaska Air tumbled about 10% today. After the carrier's second quarter forecast for adjusted earnings trailed the average estimate. We've seen all those airlines bring back their guidance. We've seen a lot of that high-frequency economic data showing that traffic is down, especially when it comes to international tourists. And that's definitely putting a lot of pressure. The company said it would not update its full year 2025 guidance, and it will provide an update later in the year. Of course, it's the uncertainty coming with the fast-changing trade policies, with immigration, and all those rules. We, of course, had American Airlines today withdraw its full-year earnings outlook. We've seen so much uncertainty with airlines, and Alaska Air is a particularly bad hit. 36% loss year to date, which is second worst year on record. Really tough year.
We had a great chat earlier with Sheila Kayalu at Jefferies. She's an analyst who covers pretty much every airline except for Alaska.
Yeah.
which we noted.
Yeah.
That said, she did say, it was pretty bad a month ago. It's gotten better for airlines now, and she's not necessarily seeing in the results a huge concern when it comes to international. Yes, maybe 10% from Canada for certain airlines. Still, we'll wait and see. Consumer in the US has pulled back. Commercial business, still pretty good.
Well, and she was saying that it's like a month or so ago, right? That
that's
really the airlines got such a beating when we had a couple of the majors come out and talk down their outlooks, and that so much bad news has been factored in. Because I was surprised to see American moving up in today's session. So it was kind of an interesting day. Let's go to toys. Can we go there?
Yeah, we've been talking about consumer sentiments and where it's going bad. When we talk about toys, things are looking good. Hasbro shares surged today the most in 5 years. The toy maker beat analyst estimates on both profit, revenue, said it's in a good shape despite the tariffs. Some interesting stats, roughly 50% of its US toy and game come from China. China will continue to be a major manufacturing hub for them, but they are trying to bring down meaningfully the exports they get from there. Their most popular product, Dungeons and Dragons, has low tariff exposures, they said, so perhaps that's bringing some relief. The stocks jumped as much as 16% in earlier trading, and is up 8% year to date, which is one of the biggest winners from all the stocks we're looking at.
Tim, you play Dungeons and Dragons on the weekend,
I don't
right?
even know how.
No judgment.
I don't even know how.
Oh,
you know
come
what I'm
on.
shocked? Can I tell you something
You're
that I'm
among
shocked
friends.
about?
You can tell us you
I'm
play.
on Hasbro's website.
Yeah.
When you think of Barbie, what do you think?
I think of Mattel.
Exactly.
Yeah.
Hasbro is advertising Play-Doh Barbie.
What?
Wow.
Yeah. My mind is blown.
Are those frenemies, like working together?
I
Maybe
don't
it's
know.
a partnership.
Yeah.
Wait, I
Go
gotta
to Hasbro.com.
Hasbro.com, and I'm gonna look up.
Oh wow!
You see it?
Play-Doh.
What is
Coming
that?
soon.
Exactly. So I'm just looking at the different brands that Hasbro has. They have a lot of games too. So
For
Monopoly, Furby, Nerf, Transformers. You mentioned Dungeons and Dragons.
Yeah.
Carol's favorite though is Barbie, and that's Mattel.
Come on, what's not to love
What's
about
up with
Barbie?
the partnership?
I mean, I'm just.
I think
am
there's
I not
licensing.
wearing Barbie
There's
pin today?
There's
Yeah, it's a
licensing
perfect
deals.
day.
There's licensing deals.
I was just gonna say there's licensing deals, but man,
We'll have to ask Enon Kreis over at Mattel about this.
Enon, call us. Maybe when Mattel comes out. All right, we're going to have to leave it there. Good stuff. Thank you. Denitsa Sakova. She's Bloomberg News cross-asset reporter. For more conversations, be sure to check out our Stock Movers podcast. 5-minute episodes, winners, losers, gainers, decliners in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. I actually had someone reach out to me and said, hey, what was that one of the stocks that you were talking about in our Stock Movers
segments? Did you remember which one it was? Because we do so many each day.
I actually responded. I said, here's the ticker, here's the name, and I put in
Look at you, Carol Massar.
I put in the podcast and sent it on
That's
our
nice.
way.
People just
I am
say mean things
Tim
about me
Stenivek.
online. They're actually getting in touch with you for reasons.
We love you all. Have a good night. Balance of Power is next.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
Tonight, putting pressure on Russia for a deal.
I didn't like last night. I wasn't happy with it. And we're in the midst of talking peace, and missiles were fired, putting a lot of pressure. You don't know what pressure I'm putting on Russia. They're dealing. You have no idea what pressure I'm putting on Russia. We're putting a lot of pressure.
The president now telling Vladimir Putin to, quote, stop after the deadliest attack on Kyiv since last summer, saying he was, quote, not happy with the Russian leader after Moscow lobbed 70 missiles and over 100 drones toward Ukraine. Our new reporting tonight on the administration's demand Putin accept Ukraine's right to military force and the concessions it wants from Moscow. We'll speak with former U.S. Ambassador to NATO Kurt Volker on what's next in the push for a peace deal.
Plus, Trump's war of words with China.
Well, they had a meeting this morning, so I can't tell you. It doesn't matter who they is. We may reveal it later.
The president teasing tariff negotiations with China while slamming the country for rejecting Boeing planes over its tit-for-tat trade war, accusing the country of killing hundreds of thousands of Americans due to fentanyl. We'll have more on that and on the president's sit-down with Norway's prime minister with Bloomberg's Natalia Drozdiak.
And a draft Trump budget proposal recommends getting rid of the Economic Development Administration, which supports economically struggling communities in rural and manufacturing areas of the country. We'll speak with Mississippi Governor Tate Reeves on how local communities are faring amid funding cuts and tariff hikes coming up.
All of that plus details from Intel and Alphabet's quarterly earnings just out a short time ago, and much more ahead this hour on Balance of Power. We begin tonight, though, with a torrent of news coming from the White House today, from tariffs and trade to the war in Ukraine, and a lot more as the president met with Norway's prime minister. We're joined now for more by Bloomberg's Natalia Drozdiak to talk about it all. Natalia, it's great to have you. Bloomberg reporting today on concessions for Russia, which we really haven't heard much about until now. It's been something that really has favored Russia with the idea of a framework for peace. Now the White House calling for Russia to allow Ukraine to have a standing